there have been instances of people trying to affect prediction outcomes. Obviously, the stakes of something like this are rather higher. I think I've been pretty open about not being a huge fan of prediction markets in general. Like this one, I don't know.
Yeah, is it worth it to get on the no-fly list to hit your calendar? I guess is the equation. I'll admit, so a couple things went through my mind first off. First, like the initial eye roll, like, oh man, you can really just bet on anything. And then I kind of, for a second, I thought, okay, well, wait, maybe the whole thing with calcium pocket market is like hedge everything, right? So maybe there's a case to be made for instead of buying travel insurance.
All right, good morning.
But this is also for entire airports. So it's not necessarily a specific flight. So that's where it gets tricky, where it's like, okay, I'm going to fly out of JFK. I'm going to bet that JFK is going to have cancellations, but your flight can still make it out and others get delayed.
Yes, it ain't going to make me feel any better if I make a few bucks if I'm stuck somewhere. I'm sorry. Like, that doesn't, I mean, yes, I guess at the margin, fine, but I want to get where I'm going.
That's true. Yes.
All right, so markets are recovering from the overnight lows. Let's see. We had retail sales month over month was on 0.2%. That was the forecast, 0.2%. Retail sales was 0.9% previously, so that's a big drop. New York FANGs are a bit mixed. We have about 30 stocks advancing on the New York stock, the NASDAQ 100. Let's see some of the leaders. PepsiCo bouncing. Adobe. ISRG. Paychecks, Walmart bouncing a bit more. It did pull back yesterday, trying to follow through, trying to recover. Walmart, Centos, leading economic indicator. It is bullish, looking good for the economy. NVIDIA is starting to turn up right now. NVIDIA. Shorts are starting to cover. We're right at the 50-day again. Let's see if we can't break out. NVIDIA recovering. Okay, NVIDIA.
Opening bid is next with Brian Sazi. Keep it right here. All right.
Where? Oh, there's my time. Let's see.
It's not a heist. Just say it up. Okay. Young homeowners can't do anything without a plan.
What's our plan of attack?
It's a flea market. We're not attacking anything. Relax first. Make concessions after. How about we just eat what we're hungry? What if one of us is hungry, but the others aren't as hungry?
I'm not hungry right now. I feel like it now. We're the
Progressive can protect you from becoming your parents, but we can't protect your home when you bundle with us.
Okay, we got 5 minutes to go. 5 minutes to go. Positive gamma still. Positive gamma. Quite a bit of positive gamma on the non-zero day. Okay, to start. Non-zero day. 0 days so far. We'll compare this later.
Customized care for some of the world's sickest children. Every gift counts, and whatever you can give will make a difference. Those that donate, it's more than a gift for me. It's more than a blessing. They have done so much for me, and I'm happy. Join with your credit or debit card for only $19 a month, and we'll send you this St. Jude t-shirt.
All these children deserve to live, and I would love for it to be the day where no other family has to fear losing their child to cancer.
Oh, jeez. Give me a break here.
Make your donation.
Trying to get started. Trying to get the show started here. All right, so we got 0-day, non-zero day levels. Okay. So we got a decent level here at 75.25 for the 0-day. Let's see how that builds today. A lot of support down below. $75.30 and below. Positive gamma. Resistance at 75.75. Okay, just a quick note about the S&P. All right, so if we drift, let's say we drift lower, okay? We drift lower, we get close to that 75.30, and we get this kind of reaction. Okay, watch your short-term moving average. This is a 2-minute chart, 1-minute chart's just as good. 1-minute chart. Okay, if we get down to 75.30, or we get up to the highs, and we get price action to reverse like this, very simple, just a 9 EMA in this case. Watch for a reversal. If we had done that yesterday, Frano, we would have got a better entry if we had waited. So looking for that. That would have went from about 60 cents to about $6 on the S&P. So very simple way to look at the S&P for entries and exits. Okay. Just use the levels I just posted, and we'll update them during the day if we see new levels coming in. 0-day. What do we got? 2 minutes to go. 2 minutes.
Yeah, down to the bell. One of the things I'm going to talk about today in my club meeting, CNBC Investing Club at noon, you can't necessarily take your cue. Business that was $150 million.
Okay, we got about 50 seconds. 50 seconds to go.
Correct, and I believe next quarter there were 4 firms commenting on J&J today. All 4 raised price targets dramatically. They are not deterred. They're not looking at the stock and saying, "Uh-oh, it must be bad." That's something they do in the semiconductors. They didn't do with J&J. J&J out with a lot of really good news, including some very big drugs that are anti-inflammatory. If we don't see the results yet, but we will. I know that Lilly did a terrific depression drug, but this Spravato is the drug to watch, and Caplyta, a drug that they use for depression, that they can use for many different reasons, many different things. They're neurological out of nowhere.
Okay, NVIDIA bounced a little more. Netflix pulling back.
We think of Lilly as being so thematically pure in obesity and now weight loss. It's incredible. These guys,
ASML climbing. Okay, we're starting to move a bit higher at the moment. Futures popping up. Maybe a little bit more short covering. Give it a few minutes for the markets to give us a direction. Micron coming off the low. Micron off the low. There's Micron. Okay, Amazon moving. Amazon popping. Google turning back up. Okay, NVIDIA looking for a bounce. NVIDIA. What's AMD doing? AMD, where are you, AMD? Broadcom's down. Okay, futures, little bounce. Okay, SPCH, SPCH, SpaceX, 2 times on the move. Okay, let's look at SPCX. SPCX coming off the low. Okay, we'll be looking for an opening range breakout. Futures, some decent volume at the open. I'll probably be buying a little bit more VIX calls for August. I have the 22s right now. This OPEX could impart some correction. Let's see. Okay, I got the 19 August 22 calls. I got 10 of those. I might double up. That's the only hedge I have right now. No, I do still have the SPYs, right? I still have the SPYs that expire tomorrow. OPEX. SPY put flies. Okay, there goes ASML. ASML's on the move. ASML's on the move. Chips were down yesterday. ASML. NVIDIA just sitting here. Okay, S&P is pulling back in, so a little bit of back and forth right now. ARM Holdings giving back some of the gains from the end of yesterday's trading. Micron still climbing. Micron. Coinbase, nothing. Intel, inside of yesterday's low. Trading in yesterday's low. Microsoft pulling back a little bit into the top of yesterday's range. Microsoft had a pretty decent day. A lot of the New York FANG components rose yesterday. All right, looking for a follow through. If it gets above the 50-day, this could run. Watch Microsoft. Let's see. Okay, so we've got a few things moving here. Nike on the move. Nike popping back up. Nike pressing higher. Nike. Okay, I got the 45 calls. Nike. What else is going on? Axon, DoorDash, Home Depot, DoorDash, Uber, Builders First Source, all higher. Future still fading a bit. Nike trying to get back above the 50-day. Home Depot turning back up, trying to get back above the 200-day. Home Depot. Microsoft need to bounce. Nike. Okay, SpaceX. 136, trying to climb SpaceX. Congratulations to Argentina advancing to as well. NVIDIA turning back down a little bit right now. NVIDIA. Okay. The heat map looks a little red this morning to start. Heat map a little red. Let's see if we get any buyers here. Health services look okay. We got a few that we've already pointed out. Home Depot, DoorDash, Uber, Builders First Source, Nike. The New York Fangs are all down right now. New York Fangs. We had a pretty decent day on the New York Fangs. All things considered, yesterday we had chips down and the New York Fangs, most of them were higher except for NVIDIA and Tesla. So we'll see if we follow through here. Right now, slow start. RSI is turned down a little bit, still above 50. MACD and stochastics still have bullish momentum. And we have positive gamma. So we have positive gamma, supportive. If we get down here to 75, somewhere around 75, 25, 75, 30, we'll be looking for a crossover like yesterday. If you were paying attention yesterday, here's the S&P. Today, here's yesterday. Okay, down here at the low, we had a nice fade down to a gamma support level, close to it. Prices moved back above a short-term moving average and started to trend. We got in a little early over here, dipped a little bit more, and then reversed back up. So watch that. Very simple way of tracking the S&P. We got positive gamma. Right now, we're just drifting. We could come down to this level down here. Okay. A lot of purple, you can see. A lot of positive gamma. So dips should get bought. For now, we're dipping first. We did come off the lows of the pre-market session. We're right back down to those lows now. Let me just zoom out a little bit. See what the swing low was. Swing low. A little bit lower. Swing low. Oh, swing low was about 75.81, something like that. On the future, 75.80. Okay, let's see if we bounce. Let's see if we bounce. Okay. Yeah, same here, Grover. Bedtronic, the heart-related products. The good thing about Medtronic is that, and the reason why it was moving last week and the week before is because insurance is going to start covering their services and products. I guess they look at them as preemptive or less costly, but they're going to start, insurance companies are going to start covering MDT. That's why we saw that move off the low recently. Microsoft still moving lower. No move on Microsoft. Let's see where Core 1M is this morning. Core 1M is at 424, still hovering near the lows. S&P still pulling back. S&P. All right, so we're looking for a dip to buy. Okay, we're below VWAP. Okay, so Uber is seeing some profit taking at the highs. Home Depot is still pushing a bit. Got a few minutes to go for the opening range. Futures still fading futures. Home Depot still pushing a bit higher. God, his voice is just, gosh. I don't know. The older I get, the more cranky I get. Voices. Oy. All right, so with Core 1M where it is, Nasdaq was down pretty heavy yesterday as the S&P moved higher. If you listen to anything Brent had to say yesterday in his YouTube OPEX prep video, he was talking about the dispersion between single stocks, the Nasdaq, which was moving lower most of the day yesterday, and the S&P. S&P dipped first and then started to rally. A lot of stocks did well. Speaking of that, let's take a look at what. Okay, so you can see New York Fangs back down to the 90 EMA. So we're reversing all of yesterday's gains into Tuesday's bounce. Okay, so it looks like a little rotation maybe out of some New York Fang components into stocks like Home Depot. Home Depot looks really good, folks. Home Depot, if you don't already have a position, Home Depot, maybe an area to add. Okay, Home Depot turning up, as you can see. Builders First Source. The real estate was pretty decent yesterday. Still early, not doing anything until the opening range. Builders First Source, BLDR, looks good too. Stop under today's low. Okay, waiting for the opening range on all of these. So these two look good. Home Depot looks like it's going to keep going. Home Depot, 60-minute, back above the 20 EMA. That's a benchmark that needs to hold. Pretty big move. That's a $9 move right there. $8 move. Okay, that's $8 right there, Home Depot. Let's see what Dexcom looks like. Dexcom, I see that out of the corner of my eye. Thank you, David. Dexcom, DXCM too. Okay, Dexcom breaking higher. Look at the Bollinger Bands. All right, so if either of these can give us opening range breakout signals, that'll tell us that the stock is still in play. That's what we're looking for. Doesn't do us any good to run up to the opening range high at 10 o'clock and then reverse. We need to see a follow through. Yep. Pre-market low. Okay, looking at the hedge flows. Okay, there's your levels right there. SP cash approaching support. Gamma. Okay, let's see. S&P. Watch your short-term moving average. I have a 9 EMA on a 1 minute enabled. I could add another one. Let's see. Got a 9 EMA. Why don't I put a 3 EMA on here just for shits and giggles?
I think it's really interesting and actually something I've not heard entirely yet. So really appreciate that perspective and bringing this all to the table this morning. So appreciate your time today. Jeff Weninger, Wisdom Tree, thanks so much. Now coming up next, we will look at the key levels and charts to watch with Rick Ducat as he has his eye on these regional banks. That's next on.
Okay, we're coming into the opening range.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com.
3. I'll make that a 3 EMA.
Have you ever watched an interview and thought, I wish they had 5 more minutes? Or I want to know how they discovered that hidden gem? That's exactly where Market Matters comes in. I'm Marley Caden, and our podcast is slowing things down. We're going beyond the earnings to get to the heart of the people and companies driving the global economy. If you want the full story, not just the headlines, Market Matters is for you. Subscribe wherever you get your podcasts.
All right. All right, so it looks like we might be turning here. Watch hedge flows. Okay, let's look at 0 day. See if there's a, okay, so 0 day, we got some here. Was that there at 9:30? 9:30, that was there, right? It was there. Growing a little bit. This is growing a little bit. That's 98 percentile. Okay, Home Depot still looking good. What time is it? 9:47. Okay. SpaceX still moving higher. Okay, so we're rolling over a bit. SPCX, SpaceX, Home Depot. Okay, so we're making it up to the opening range high. Okay, the 10 o'clock, up to 10 o'clock, between 9:30 and 10 o'clock, we'll make a high. That'll be the opening range. We want to stay above it, start to see volume pick up. No reason to chase anything right now. Got a lot of experts on YouTube tell you how to trade the first 15, 20 minutes of the trading day. That's all good, well and good. Everybody has their way of doing things. I like to wait for the opening range. Most prop desks train to wait until after the opening range, especially S&B Capital, one of the more respected prop firms in Manhattan with 2 comma traders. Shark, I think he made like $2 million last year for the firm. Something like that. Okay, just waiting. Let's see. Builders First Source, BLDR. S&P 500. No turn yet. Okay, we're still drifting lower. VWAP is overhead. We're approaching 2 standard deviations from VWAP. Okay, 1 standard deviation is that level right there, the green shaded area. That's 1 standard deviation. VWAP. Okay, Nike starting to move. Okay, Nike looking good here. Nike. Watch Nike. Nike at the highs. Nike. Okay, at the 50-day as well. Okay, making new lows here. Okay, Microsoft starting to turn back up. Okay, Microsoft. Okay, so opening range is way up here. Right there. Okay, Apple turning back up. Okay, Apple. This might be a play. Apple setting up. Opening range. You guys know what I'm typing, right? When I say OR, that means opening range. Okay, here goes Apple. Okay, we got 9 minutes to go. Okay, so Apple, don't forget Apple. Big news yesterday.
Yeah, and I think a really great name to check in on today. Of course, ETF to check in on as the regional banks have been not as discussed as the big banks, but still a critical part of the overall banking system. So great place to leave it. Appreciate it, Rick Ducat, for all of that technical setup today in the regional banking ETF. But now we are joined by our
Okay, big news with China. China using their AI. Should be more than a one-day thing, I would think. Doesn't mean jump into it, just means let's wait.
We know that we've continued to see, frankly, resiliency from the labor market. But is this right now reflecting, pure economic strength, or do you think these reports can tend to be volatile?
Well, week over week reports can be volatile when we get in trouble, when we see a problem develop. We have been remarkably consistent. I kind of use the 225 number as the line in the sand, and we've been consistently below that, and that signals good economic health and continued hiring. The downside of it is, as long as these numbers stay right where they're at, we're probably taking away any chances of a rate cut. That will go away. I don't think we're looking at a rate cut. But this does give us a situation where the economy still looks to be operating very, very well.
As far as some of the developments we've gotten from, like international markets, obviously there's been a lot of focus, especially with some of these Chinese tech giants, as well as like the South Korean tech giants now. But Kevin, I want to get your thoughts here on what we are seeing with this partnership with Apple, with of course Alibaba, Baidu. It's interesting because Apple has, not been shy about the fact that they might have to continue to raise prices, and this is an interesting development to try to get, just more of that exposure. To China, interesting move. I'm curious your thoughts.
Jenny, as we know, China is an important part of Apple's growth going forward. So to see Alibaba and Baidu talking about using, the Apple products within their companies and the Apple systems, here's the good news: all three stocks are higher on this news. So it shows that putting Apple products and implementing them into these companies.
Okay, here goes Apple. Looks like it's going to go. I already have a position in Apple, so do I want to add to it, or what do I want to do here? Apple's on the move. I have August 21st, 330s. I have 330s, Apple. I'll probably add to this. Apple, I'll probably add.
I think that the market agrees with you here because Apple is quietly, the best performer now in the Max 7 this year, as it's now up about 21.4% and higher today. Up another 0.8%, despite no contribution from the overall markets. But Sterling, I did want to get your
Okay, we got about 6 minutes to go.
we're seeing from crude oil. We did go over 80 a barrel today, rallying sharply on some of these renewed geopolitical tensions. But technically, we could start to see that move losing momentum. And so, what do you need to see for this to believe that this rally, say, has peaked, and how significant could the downside from here be?
Well, we've seen a pretty good retracement to a level where we'd expect to find resistance. We've retraced about 40% of the major move. With that being the case, we're going to see some technical selling, chart-based selling possibly come in, but we're going to lose that chart-based buying. People are going to back away. You combine this with a little bit of bullish news. We take the situation off the boil a little bit. That could work to create some selling pressure. Along with this, oil companies are trying to figure out ways to make the Strait of Hormuz less relevant. And I think we should view that as good news for everybody who consumes, carbon energy coming out of the Strait of Hormuz. If we can ease those tensions, that should lead to less volatility going forward.
Yeah, and we'll continue to monitor that. And Kevin, I want to get your thoughts really quickly on the dollar, which has been...
Okay, Apple's still pushing here. I'm probably going to double up on this if it keeps going. We got an opening range breakout. We got 5 minutes to go for the opening range.
Well, if you're looking for why there's weakness currently in gold and the metals, look no further than the strength of the U.S. dollar. The macro environment that has the dollar higher, yields higher, crude oil higher, that's setting up negative for the overall markets. We do like a strong U.S. dollar in the U.S., but not from a stock
perspective, we'd actually prefer.
Okay, so the top 10 in the NASDAQ 100, Dexcom, number 1, Centos, number 2, climbing the list, Centos. Okay, pulling back from the opening range high. Dexcom, DXCM, at the opening range high right now with 4 minutes to go. ISRG was busy yesterday, ISRG. I'm going to start tracking these, by the way. Let me get my journal. I'm going to start tracking these. Yesterday, we had quite a few opening range breakouts, and some of them I just didn't track. That probably did very well during the day if you bought any of those. All right, so I'm going to start doing that. I think that's a good idea. That way I can go back and look at them for comparisons and benchmarks and such. Okay, so that's ISRG, Old Dominion Freight, Old Dominion Freight. For now, my memory is still serving me well. I'm not senile. I'm your host, Cousin Benny, coming to you from theclosingprint.com. We're coming into the 10 o'clock a.m. period. It is Thursday, July the 16th. IDEX Veterinary Sciences, that's at the highs. I know that one was mentioned yesterday as well. Okay.
Schwab coaching is concepts brought to life in the real world.
Schwab coaching is learning constantly.
It's relatable, it's practical, clear, understandable, and hopefully entertaining. Take it for what it's worth.
Okay. Opening range. Apple still pushing. All right. So opening range high so far. Okay. Looks good. Home Depot. Okay, watch the S&P here. Let's see if we get a crossover. Okay, we're getting a crossover right now. This might be a nice long trade for S&P. S&P giving a crossover. Okay, we've got hedge flows still at the lows here for now. Hedge flows, let's see. S&P cash. Okay. 0 day, non-0 day. Okay, we're starting to turn. Can we get back to 75, 50, 75, 60? Let's see. Okay, we're trying to turn here. All right, the hedge flows are starting to turn. Okay, we've got opening range. Opening range high is up here. We're above VWAP now. Okay, Home Depot was looking at that one for potential. Opening range highs overhead. Apple. Okay, rejected at opening range high. Okay, let's see. What else is, all right, everything else is off. Apple's still, yeah, Apple pulling back, right? S&P. S&P starting to rock and roll. Looks like a little head, looks like a little bear flag for now. Bear flag, but we're crossing back above VWAP, starting to get a little traction. S&P. You might consider some S&P long calls, 0 day or 1 day. At this point, starting to move.
If you've been watching and listening to us, you know that what's been going on in South Korea has been getting a lot of attention, that there have been
S&P turning back up.
leverage, particularly leveraged ETFs and margin debt. So regulators there stepping in to try to put a little bit of a curve on that. There's very high retail participation in that market, and there's some concerns about some of the macro effects. So as a result of all of that, we're seeing a ripple effect here. We did see some of the chips fall yesterday. If you look at Micron, for example, and you look at 2-day chart here, you see the declines that we've seen in the past 2 days are now close to 12%. So you had selling yesterday in the U.S., spreading to South Korea, then this news coming out of South Korea, and now the selling coming back around to the U.S. So that's a lot of the pressure we're seeing today. If you look at the broader NASDAQ 100 here, you see that it is a little bit more of a mixed picture. A lot of selling in the chips. NVIDIA, of course, Broadcom is on that list, but still also sees some weakness in places like Meta and Tesla. SpaceX, by the way, which fell yesterday to
Okay, hedge flows.
IPO price today,
Looking for this to continue.
68 at the moment. And then if you look at sectors within the S&P 500 here, tech is the worst performer. Healthcare, we had some healthcare earnings today that we're going to talk about later, up the most, followed by consumer staples. But I actually want to go back for just a moment here to the S&P 500 and take a look at the year-to-date chart, because we do have this 10% gain year-to-date, but the record high that happened back in June, we haven't been able to reattain that.
Okay, DoorDash. Let's see. Apple still rejected at the opening range high. All the New York Fangs are off of the opening range high. ASML, opening range high overhead. So standouts, we're looking for some standouts.
As I mentioned, we had that record high. Stocks then have sort of been seeing some more volatility since then, but have largely gone sideways, even as there's been some rotation underneath. So my question for you is, what is the next thing or things?
S&P 500.
Upward, if indeed you think the next leg is going to be upward.
We got a bullish crossover back above VWAP, S&P.
Hi, Julie. Well, I think the key thing, I guess the key next catalyst has to be earnings season. It's a really, really important earnings season. I think what we've seen in the last couple of weeks with the volatility, the rotation even, it's mainly around repositioning, kind of evaluation reset around the tech trade, around the AI trade. So from here, we really need earnings to reinforce this very strong fundamental story that we do believe is firmly in place, and then try and rebuild some of that cyclical momentum that was in the market prior. In terms of what next, which segments, so we do still believe very firmly in the AI trade, but I think that provided the macro backdrop is still constructive, then we should see other sectors across the US and other parts of the world perform stronger. And so there is a lot of opportunity in other sectors. And remember that the AI trade, although it's been really focused specifically on stuff like semis, on the hyperscalers, it is opening out. You are seeing the beneficiary, a lot of the AI beneficiaries now.
All right, so we'll continue to move here. S&P. All right, yesterday we had a nice recovery. We hit the lows over there on the right. We hit the lows. And recovered, almost got back to a weekly high. Well, it was a weekly high, I guess, at the time. Last week's highs. Our opening range, about to take out the opening range high.
Companies are going to the market too much. Are they asking for too much depth and And that, of course, is focusing people's minds on the potential for return on investment and the question marks around that. Now, from our perspective, as we do see earnings continue to deliver, some of those question marks hopefully should be answered. But this is, in truth, this is going to be a question which keeps coming back to the market and keeps disrupting it. So, from our perspective, we do think it's an upward trend, but there will be a lot of volatility around those segments. What we definitely need to see continue, though, is a hyperscaler CapEx. Their earnings need to be strong because they are really the foundation for the entire AI ecosystem. So that's the key thing that we'll be watching out for.
Do you think they will be?
Okay, starting to move back. All right, let's take a look at a few other things. Let's see, Dexcom, just below opening range high. Centos, okay, opening range high, trying to get back above it. Old Dominion Freight. These are the top 10 stocks on the NASDAQ 100. IDEX, Veterinary Sciences, up tight up against its opening range high. Starbucks, developing its own in-house AI, dispensing with IBM and Microsoft, saving, I think the number was $30 million. Maybe it was 300 million. It was a big number. Cost savings. I mean, they have so many thousands of stores. So, see, Apple pulling back from the high. New York banks are still shifting lower at the moment. So Starbucks looks good here. I do have Starbucks. Let me see what Starbucks looks like. Okay, Starbucks. Starbucks is up there. Okay, why do I not hear any? There's no. Okay, so tick cumulative is not very high. Tick is low, though positive. Tick is maybe 250.
So whereas July, it certainly seems like there's not going to be any kind of move from the FOMC meeting. Each meeting from here is really dependent on how that CPI.
S&P, nice reversal, Frano. Yeah, there we go.
Wage pressures. Are you starting to see wage pressures build up? If you are, that would really be a concern. I mean, from our perspective at this point, we're not anticipating the Fed to change rates at all in 2026.
ASML still pushing higher. Let's see, ASML. Okay, opening range breakout, ASML, ORB, breakout. Okay, in play status on, ASML in play. Okay, so let me write these down. All right, so opening range breakouts. Today is July the 16th. ORB. Opening range breakouts. ASML is the first. Cool. I like ASML. Good company. Makes the machines that makes the chips. Okay, ASML, one of the first opening range breakout trades. Look at the volume. Holy smokes. Okay, so the opening range is over here on the left. All this green here, this is after 10 o'clock. ASML, let me buy some ASML. Let's see. ASML. They reported the earnings, right? Already? Earnings was here. Okay, that was April. So they should have. When were their earnings? Weren't the earnings recent? It's right here, right? Yeah, they just had earnings. Yeah, right, 2 days ago. Okay, so Wednesday. Okay, so ASML looks good. Maybe a little dip for a buy, but it looks good so far. ASML. S&P 500 still going. Yeah, Frano. Opening range breakout here on S&P.
This is it. Stay sharp. Think 3 moves ahead. Protect the color bomb. Set up the cascade.
Okay, S&P looks good.
Map smart, win smart. Candy Crush Saga. Download now.
Let's see if the trend can continue. We're at the opening range high right now, S&P. Okay, looking to go green on the day. Let's see what else is going on here. Builder's first source is sitting at opening range high.
United Health is raising its full-year profit outlook after reporting strong earnings. The company is pointing to better handling of higher medical costs and improving AI efficiencies across the business. Jared Holtz joins me. He's Mizuho America's healthcare equity strategist. Jared, it's good to see you. This was such an interesting quarter, right? Because we know that the medical costs.
Okay, Home Depot fading pretty quickly. S&P looks like it wants to keep going here. Okay, let's look at hedge flows. Okay, so we can see where we got a 99 percentile at 7,600. Okay, so can we get the 7,600?
A lot of progress being made for sure on the pricing side. You know, this is a business that can sort of reprice its goods and services annually. I think they did a really good job.
Okay, let's see what they do here. All right, so 7,600 is a 99 percentile. Okay.
Yeah, and that medical loss ratio is basically the amount of premiums that they're paying out for costs on 86.7%.
S&P 7,600, 99 percentile.
They called out AI also.
And that is 0 day, right? 0 day.
Do we have, any good insight into like more granularly what levers they pulled here?
Okay, that was added. The S&P, that was added. Okay, that wasn't there this morning, was it? Let's go to 9:30. No, it wasn't there. It wasn't 99% then. It was 97. It grew quite a bit there. All right, so they're short that level. Can we go up and test it? Can we go up and test it? Maybe.
Versus how they were predicting the year would go, that's where I think some of that benefit of the upside is coming from. So I think it's multifaceted. Some of it is, macro.
Look for an opening range breakout here on the S&P. Looks like we might go up and test this level. Let's see. Bollinger Band's opening up. Nice recovery so far. Nice recovery. The New York Fangs are starting to see some short covering. Okay, that's a good sign. Nvidia recovering. Nvidia's recovering as well. Apple starting to bounce.
It's just been very difficult for the industry to predict trends with respect to health
Short covering.
big picture. The stock started working when the Medicare Advantage rates were came in a little bit better in the early spring. I think a lot of the data points with respect to utilization.
Okay, here goes the S&P. What do the Qs look like compared to the S&P? Qs still moving higher. IWM. With IWM, we're looking for the 10-year to move lower. Okay, so S&P is still looking good here. S&P cash. Be nice to break out above this level, right? Be nice to take out this level.
So then the next question becomes, what does this tell us about other companies?
Okay.
Elevance yesterday and the stock got pushed down. Do you think there's a read across here, or do you think United Health, because of its size and scale, is going to be?
Okay, S&P looks like it's going to fade here. Let's see. Come on, let's go. Let's get the S&P. Get LA stock to turn back up. Apple turning back up.
And then Medicaid, Elevance called out yesterday as being still a little bit of a drag. So when you look at the United numbers and you kind of like compare and contrast.
Come on, S&P. You can do this. You can do this. S&P.
Such a nice move out of Humana, and then CVS has a decent business there too. That might be the read. It's very difficult to call because we've gotten a lot of different disparate data points out of the sector so far.
Yeah, and then I want to switch gears. I know there's some other earnings out today, but the other healthcare story I'm most interested in is this acquisition that Eli Lilly is making. Atai Beckley is the leader buying for $2.8 billion, and I'm interested in it because Atai Beckley makes depression treatments that are based on sort of psychedelics, and I just think that this trend of the medicalization of psychedelics has been really fascinating here. So
Apple bouncing.
View of this buy and how it fits into that bigger trend.
Yeah, I mean,
okay, S&P is starting to looks like it might fade here. Watching S&P. Okay, come on, S&P. You can do this. Weighted signal is very bullish at the moment. Grover's weighted signal is very bullish. Tick cumulative is bullish. Okay, we're looking for more upside. Okay, here goes the S&P. Bloom Energy, call sweeps. Thank you. Thank you, Dollar. Appreciate it. There goes the S&P. S&P, SPS cash. S&P cash opening range breakout. Gamma. Positive to 7,600. Okay, we just popped up there. We're just gonna get a bunch of people, take out some stops, and reverse it. Let's see. Let's go LETSGO.
Is almost not even a question at this point. I think we're at a run rate where there will be over 30 transactions in biotechnology north of $1 billion. I don't think we've seen a year where we've hit 20. So I think that just
Jared, thank you so much. It's good to see you.
Great to see you. Thank you.
All right, let's watch out for a liquidity grab here. Got an opening range breakout looking good. 7,600 is a major level. Okay.
This isn't any move. It's your third. No, make that fourth. That's why USAA makes it effortless to keep your coverage in one place. Save up to 10% when you bundle auto and renters. Supported by service that has your back over 100 years and counting. Even if it's your last move for a while. USAA, taking care of our own.
Okay, so we're starting to fade here. Take some profits off. Opening range. We've got hedge flows are just flat at the moment. Okay, can we break out here? Futures? No. We had a nice reversal off the low. So if you just take the moving averages alone, okay, just the moving averages crossing over, that was a good long setup right there at the open. I know Frano went long. Okay, now we got a crossover to the downside, so some volatility in here. Could turn out to be a doji day. All right, so we're down below the moving averages now. Let's see. Let me do this.
Sun's out. Time to celebrate. With luxurious outdoor furniture.
Okay, now we're turning back up again. Quick.
We have everything to meet the moment and match the mood. New ways to set the table.
Okay, we're going to keep going here. Watch the volume. Let's see. We had our first breakout, ASML. That's faded already. Okay, so far, fade. Fade 10:30, 10:20, 10:15. Okay, let me keep track of these. Okay, Apple turning back up. Let's see if Apple can get above its opening range high. Okay, opening range high is up here. That would show that the stock is in play if we do get a follow through. I got a feeling the China news is not going to be a one-day thing. Now, do we follow through today? Yesterday was a huge day, so you'll have some people that are looking to relive yesterday's glory or yesterday's bullish activity. Maybe give some money back. We'll see if we follow through. It'll be very obvious. Okay, S&P still sitting here. Okay, we're going to push off of this level. If we do, maybe 7,600. 7,600. Okay, we need to start trending again. Let's see what hedge flows are saying. Okay, those are still sitting at the low. So 7,600 is the new 99% percentile level for today. That wasn't there at 9:30. It was about 97 percentile. If you go back to 9:30, you can see that it was nothing there. And then it started to build, and now we're at 99%. So we're probably going to target that area, I would think. So maybe some 7,600 lottos. Start moving in that direction. The only problem with going that far out is that you won't get the bang for your buck. If we do start to move, I would go a little bit, maybe at the worst, 35-40 deltas. That's about a 75-70. Maybe a spread, huh? Maybe a spread. Let's see. Not yet. This looks like it could pull back in. So they're negotiating these highs right now. Apple, on the other hand, is turned back up. Apple's looking good. Nice follow through on Apple. Okay, Dexcom. Let's look at the top 10 on the NASDAQ 100 again. Dexcom did make an opening range try, but it didn't make it through. Centos, economic indicator, opening range is above. Okay. Old Dominion Freight, well off of the opening range. Ross Stores, opening range breakout. Okay, this one had a nice run a few weeks back. April, May. Let's see. TJ Maxx. Okay, back above the 200-day on the right. 200-day, 50-day is overhead. Walmart, Costco. Just looking at the retailers since those are doing okay. Let's see what's that. Dexcom. Let's see Dexcom. Let's see what's working here. Abbott Labs hitting 100. Let's see what Abbott Labs looks like. ABT. Big opening range play there, but faded. Okay, so you don't want to chase this unless it takes that opening range high out, which is going to be hard to do. That's a huge gap up. S&P looks like it wants to keep going. S&P. All right, looks like it wants to go. Okay.
And then finally, another acquisition to talk about. Uber is buying Delivery Hero, the German food delivery company here. $14.8 billion is the price on this. Now, we've been talking about these two for a while because Uber had previously offered to buy the company and had to raise its price it was offered.
Okay, looks like we're going to go here. S&P.
Agreed upon, but because it's been talked about a lot, that's why you're not seeing and why you didn't see more of a move in those German shares of Delivery Hero. Well, President Trump has announced a new 25% tariff on Brazil. It's set to take effect on July 22nd. Now, the Finance Washington correspondent Ben Worschel is with me now. Ben, the tariff headlines have died down as of late.
Okay, S&P is still going here. Opening range breakout.
What was the result of? Because I know they've been doing some new reviews.
7580s overhead. 7600. We got to put 7600 because that is the 99 percentile. 7600. 7600. Can we get there? Baby.
That the Trump administration says is due to a range of issues. But there are significant exceptions in here that have been announced. So things like oil and gas have been in there. Also, Brazilian food staples, beef, coffee, and oranges are also exempted here. The notice even notes that these goods aren't produced a lot in the U.S.
Nice bullish day so far. Can we get past this high that we put in a few weeks ago? Okay, can we get above that high? That'd be nice. 50-day climbing, the 21-day turning up. Futures blasting higher. Frano, you must be pretty happy with that trade, right?
The U.S. actually runs a trade surplus with Brazil, so this focus on deficits doesn't necessarily apply here. It's clearly a lot more politics going on between the U.S. and Brazil that have been a feature of this. This isn't given us a rationale this time, but Trump in the past has said he wants to have tariffs on Brazil, not for any trade issues, but because of the treatment of former President Jair Bolsonaro, who's a Trump ally who was convicted of trying to cling to power after he lost his re-election. Politics are clearly part of this today. Marco Rubio had a statement today that the current president, the one who defeated Bolsonaro, put his ego, in Rubio's words, ahead of a deal as negotiations broke down.
Okay, so this is this particular situation. Are we expecting any more tariffs imposed?
Yes, yeah, this is definitely the first in what's going to be a series of new tariffs, likely in the weeks ahead, as the Trump administration kind of rolls over their tariffs into these sections.
Okay, Microsoft climbing off the low. That's a good sign, Microsoft. Okay.
On forced labor that covers almost 80 different countries. We're talking about 10% tariffs on the European Union.
Fastenal. Let's see, what are these other trades doing? Fastenal. Okay, Fastenal's okay. Orly, Starbucks. Starbucks is trying to break out.
That might not be the end of the story. Well, new global tariffs, there's other Section 301 investigations ongoing, one around access capacity that could come to fruition here, but this is all a step-by-step process that's laid out in how these tariffs get implemented. An investigation, an announcement, a public comment period, and then the implementation of the tariffs. So they're all in different stages, and they're expected to roll out a lot of them for the rest of the summer.
Well, and because of this, the methodology here, does that mean that these are more resistant to legal challenges?
Yeah. Section 301 is a pretty well-established
tariff authority. This is Biden used this tariff authority, not in this wide-ranging of a way as Trump is considering here, especially if he goes forward with these 10% tariffs on the world. But it is a much more established, partly because of this lengthy process. It takes months for a formal investigation. They have to do it. There's a public comment period. It is all internal to the administration, so the Trump has control over every step of the process. It's more that it just takes time. That doesn't mean I will note that the end of legal wrangling will be is in the offing here for tariffs. There's still a lot of back and forth over the refunds from the IEEPA tariffs that were struck down in February. The U.S. paid over almost $50 billion in refunds just in June alone, so there's a lot of back and forth there. I would also add these Section 122 tariffs, just to get another tariff authority that are currently in place, have been struck down by a lower trade court, although the practical effects there remains to be seen. They're still in effect, even as refunds have been offered. So there's going to be a lot more back and forth, although these Section 301, the goal here from Trump's view is to put them in place and have them be permanent.
Ben, thanks a lot.
Okay, Apple back up to the highs. Apple climbing back up to the high opening range highs. Okay, Apple almost there.
Oh, so much for the group project.
This is the group. Project went super fast. Guns up.
Oh, impressive processing power, all in one charge. Looks like Terry's no longer in the group.
Okay, Apple still pushing here. That's helping. Need to see the S&P continue. Okay, stocks that are on the list. Okay, all of the I want to see stocks without wicks on the top of the candles. Insulet, United Health, Old Dominion Freight. That one looks pretty good. Old Dominion Freight, nice looking chart.
So you can save up to 40%. And just like that, goodbye overpaying.
Wow. Let me guess. Trivago?
You know it. Hotel Trivago.
I'm here at the scene of the crime, and we can confirm the suspect in the house behind me has lied about their Candy Crush level.
If you're gonna brag, you better back it up.
Okay, S&P 500. Trying to climb. It just stuck right here for now. Okay. 7,600 is a 99 percentile level. We're looking for prices to climb to that area. Notice the bullish cross early on this morning. Looking for a follow through. SpaceX, still no follow through. Okay. Tesla, nice bounce on Tesla. Apple, a lot of short covering. Apple, Amazon, Google, Meta, Tesla, Nvidia, Microsoft, all showing nice bounces. All right, let's go take a look at the New York FANG components. Don't forget Old Dominion Freight. This one looks pretty good. RSI rising, MACD turning, stochastics rising. Okay, New York FANGs. Okay, we had a pretty bearish looking day. All right, so we got a hanging man candle on the New York FANGs. This looks like we could follow through. Okay, S&P is at the high. Cash. There was some dispersion yesterday. The Qs were moving lower while the S&P was moving higher. Today we've got buyers at the low of the day. A bullish crossover on the Qs as well. IWM, right about the same time, everything crossed back over. Got an opening range breakout on IWM just sitting here. Okay, S&P S&P looking for another push to the upside.
NBA champion Jalen Brunson is making a new bet off the court, becoming an equity owner in popular fast casual chain Just Salad. Yahoo Finance's Josh Lipton spoke to Just Salad founder and CEO Nick Canner.
Okay, Apple still pushing.
How did this all come about with Jalen Brunson? Walk us through it. And what does his involvement and equity ownership, what does it mean potentially for the company?
Watching the S&P cash. What is...
Most of the people in the office were based out of New York City. You could see with the Brunson jersey back there. Yeah, we went to 2 years ago. It turns out him and his team have been a fan of Just Salad for a long time. He's truly passionate about healthy food in a genuine way, accessibility, sustainability, and he loves great food. And these are all the things that the Just Salad brand stands for. So we were driven.
60-minute looks good. Tick cumulative is green. We don't have a whole lot of high. We don't have any high ticks actually.
And he didn't want to just do an Instagram post. It was actually his team's idea. They wanted to partner with the
Come on, S&P.
brand that was going to be a true partnership.
S&P trying to turn back up.
What he stands for, work with his charity second round foundation, the Dream Culinary program that he has, and do some great things together.
And I'm just curious, what do you think Jalen Brunson can kind of do here?
Just sitting here.
You know, to drive traffic and brand awareness and sales in your company beyond, the security ads.
Yeah, great question. I mean, he's going to actually be in the restaurant, so he's meeting with a ton of our general managers. So from an employee,
Heat map still looks pretty red. Apple turning back up though. That looks pretty good. Apple. Can we break out here? Apple. All right. S&P pulling back in a little bit more. Apple. Apple pulling, reversing right back up to the highs. Let's see if we break out here. Opening range breakout potential and Apple.
I got to ask you, Nick. I mean, Jalen Brunson, does he have a favorite salad? Is there a go-to for him?
Okay, let's go back to ASML. That was an early one. Looked like it wanted to keep going. Just sitting here now. Ross Stores, Fastenal, Starbucks, looking for that to break out. Okay, turning back up. It's at BWAP. Having a pretty decent day, Starbucks.
I read that you generated, correct me if this is wrong, I read you generated $195 million revenue last year. You expect roughly 20% sales growth this year. What is driving that? Is that new restaurants? Is that new partnerships? Walk us through it.
Yeah, it's we've been growing revenue at a very healthy pace. We've been around for 20 years, so I always say we've actually grown pretty slowly. Our 20th anniversary was in May. We have 125 locations across 7 states, mostly the Northeast, Florida, the Chicago area. We just recently started opening drive-thrus in Connecticut and New Jersey. And yeah, we're starting to scale up and open a lot more locations. We opened 20 locations last year.
Apple trying to break out. Starbucks looks good. Apple.
We're just trying to gain more customers at our existing restaurants every year.
Apple's still trying to break out. We're looking for volume on the breakout.
I think our name is a little misleading at this point. We started it
Apple
at this point.
has approval from Chinese regulatory bodies to use their AI on all their products that are produced and sold in China. Plus, China, I believe, is using in their space program Apple AI. So that's got approval. That was yesterday. Had a very big day. So looking for a follow through. Not happening yet. Apple.
I'm just curious, based on what you're seeing in your business, how healthy does the consumer look?
I would say, yeah, I've been doing this for a long time, and I would say it's very even. Like, I don't consider the consumer strong or weak at this point. I think very much a market share right now.
Nick, I want to get you out of this. Health officials are they're talking about produce, and they're mentioning possibly lettuce.
Okay, Snowflake turning back up. Let's see what that looks like. Snowflake. It's been it crossed over about the same time the S&P crossed over bullish, turning back up.
Yeah, I mean, so first of all, just for all the just out customers out there, yeah, we have no connection to this, and our restaurants or farms have not been connected to it all. We are like crazy about quality control, so we have a very large supply chain and QA team dedicated to this. We do not use pre-cut lettuce. Our romaine and our kale come in whole, prepped on site every single day. How the weeds are disposed of, we double wash in a sink dedicated to produce, and we, most importantly, we source from established commercial growers who have mandatory safety, traceability.
Okay, Snowflake still rising. Snowflake has been trending over on the right along the upper Bollinger Band, just kind of grinding along. That lower band starting to turn up, so that's telling you look for a grind. S&P turning back up now. S&P. Apple just at the opening range high, no follow through. Amazon trying to go. Google is about to press the opening range high. Google did pretty good yesterday, right? Google had a good day. This is a third white soldier. They're overlapping. Meets the technical requirement. Overlapping. Very bullish candles. Okay. Bollinger Bands are just starting to open up on Google. So, by the way, I wouldn't put on a whole lot of new risk. If you're buying options, you're going out to say August at a minimum. Maybe you're going out to September like I'm doing. But whereas I would normally take like 10 or 15 or 20 calls or call spreads, 50 to maybe 40 deltas, I'm doing less because we have OPEX tomorrow. We got Core 1M where it is, just itching for some correction or pullback. A lot of people are looking for 5 to 10%. It is a midterm election year. I don't know. The risk feels very heightened. I don't want to have too much risk on short-term options. I'm not talking about long-term trades like TRBCX. That's a long-term trade. Let's see, Axon. Sorry. What do you want, Kat? What? What do you want? She's standing up on her hind legs. I've never seen you do that. Standing on your hind legs. What do you want? Hmm? I don't know if you can hear her. She's like yelling at me. Okay. Let me take a 2-minute break. I'll be right back. Watch for a little break higher here. Amazon, opening range high, still a little bit overhead. Apple looks like it wants to do something. It just keeps inching back up to the opening range. All right. So give me a second. I'll be right back.
Strength isn't optional for me. Being able to carry my kids and give my best on stage, all while feeling confident in my body, is everything. Strength training gives me that, and Ladder gives me the plan. With Ladder, I get a daily plan from an expert coach who guides me through every workout, no matter what my insane schedule looks like. I know a lot of women are intimidated by strength training, but it's truly the secret to my results. I'm Hillary Duff, and I train on the ladder.
Vistaprint helps bring your ideas to life with easy-to-use design tools, real human support, and all the products you need at prices you can feel good about. Just think it, click it, and print it with Vistaprint. Print your possible with 20% off your first order at Vistaprint.com.
This year, Candy Crush Saga is on a roll. With over 20,000 levels and more being added with every season, the fun just keeps on growing. No Wi-Fi? No problem. Plus, it's free to play, so you can let the good times roll anytime, any place. Now that's what we call a sweet treat. Candy Crush Saga. Play now.
The five biggest U.S. banks are on track to hit $180 billion in trading revenue this year if they continue at their current pace. That's according to a Wall Street Journal analysis, and it comes after blowout second quarter results from the big banks, particularly in equities trading. Joining me now is Christopher McGrady, Managing Director and Head of U.S. Bank Research for KBW. Chris, it's great to see you, and these earnings have been really interesting, maybe unusually interesting. At least, I'm sure they're always interesting for you. You're super steeped in it, but I think like the equity trading numbers, the underwriting, some of the other elements have been really interesting here. Coming out of what we heard, is there even one bank that stands out as like, this one is definitely a buy after the numbers we got, or are the trends sort of across the banks?
Well, good morning. Thanks for having me back. I would say that the trends, to your point, have been excellent, right? Capital markets expectations have ramped throughout the year, and the bar each time that the banks have jumped over the bar. In particular, if you call out this quarter, equity trading was tremendous. Investment banking revenues were great. Pipeline commentary was strong. And if you think about the largest banks, they've all now reported second quarter results. Morgan Stanley had a tremendous quarter. They had $148 billion of net new asset growth in the quarter, well exceeding expectations. And I think what's interesting, not only are the banks making a ton of money on these prominent IPOs, but the waterfall or the spillover effect to the broader businesses in terms of wealth management is just powerful.
And so is that what happened at Morgan Stanley? Was that spillover? It was, the wealth clients saying like, I got to get a piece of SpaceX?
It is. It's not only the transaction, the revenue gain from the IPO, but it's the wealth creation that the IPOs have had, and Morgan Stanley's right there at the end of the month. So the SpaceX one was the prominent IPO in the quarter. But what they told us yesterday was they have 70% market share on the top 100.
Apple, no follow through.
We're big on the
Okay.
So it's not just this quarter; it's the pipeline for future growth.
Okay, so Morgan Stanley as a standout in particular, but you mentioned you ran through some of the different lines.
Let's see, Home Depot still off of the opening range high. Palantir turning up.
The different trends that we're seeing. So I guess let's take trading first, which feels like an A+ to me. I don't know. What do you think?
It's definitely an A+. I think the expectation was high What's happened, I think the word here is broadening, where a lot of the banks have talked about the build out of Asia and other markets as really keeping the ball in the air for trading. So trading absolutely is an A or A plus. Investment banking, I would also say, is an A or A plus. And then the question becomes how sustainable the growth rates. I think pipelines and investment banking, we're hearing that they're sustainable. We're hearing that the sponsor activity is still upside potential over time. So broad capital markets discussion, it feels like we've got some gas in the tank.
So in other words, like as you were just saying, yes, it's somewhat around
Robinhood.
It's not just that, because I think some of
Trying to do something. Watch Robinhood. It's trying to do something as well. Robinhood. Okay, it's off the opening range high.
reliant on those big sort of tent poles.
I mean, you can't ignore the impact that these mega IPOs are having, but in some capacity, open capital markets, deals beget deals. So there's going to be a broadening out to middle market, and the banks are there. They're there to lend money. They're there to manage their money. And so we don't think this is a 1 or 2 quarter development and you move on. We've been so suppressed for so long that it feels to us that we're going to be continuing to have this conversation quarter or 2 quarters, 3 quarters from now, where we're beating expectations.
S&P just sitting here. Okay. Stalling. Let me just check what the up-down volume looks like. 360 stocks advancing, so that's pretty good. 360 stocks advancing out of 500. With the NASDAQ only 53, so we're about 50% on the NASDAQ 100. Core 1M is below 4 now. It's at 396. SpaceX fading. No follow through there. Home Depot climbing back up towards the sky. Home Depot headed back above VWAP. Crossover looking good.
And what we saw for companies like First Horizon, they had a 5 basis point increase Q1 to Q2, but the spot rate, so the June 30 rate, was up another 10. And that stock underperformed yesterday because I think expectations are competition's increasing. You saw Wells Fargo have some margin pressure on funding costs. So what's interesting is, yes,
Home Depot looks good.
Yes, they're going to grow NII, but the market is hyper-fixated on margin.
SPY, we've got NIMO at plus 22. McClellan volume oscillator, McClellan oscillator is at 22. Momentum is bullish. We've got Bollinger Bands opening up after consolidation. New York FANG, we got buyers at the low of the day. We're looking for more of this. Okay, so Meta is pushing above its opening range high, trying to break out, but having some difficulty. Meta pushed above recent highs yesterday. Okay. Meta, it's right near yesterday's high. Okay.
So you called out Morgan Stanley in particular, but really all of the big banks are benefiting from some of these positive trends you're talking about. Are there any that you would avoid or be more cautious on within the largest cohort of banks?
I think Wells is a stock. Wells Fargo is a stock where we're market performing. They've done a lot of hard work over the past few years where the asset cap had restricted growth. Now that they're through those regulatory pressures, they're growing the company. Investors like to see the growth. They are having a little bit of the growth versus margin debate, and that's kept the stock from experiencing the same types of gains that you've seen from Morgan Stanley and Goldman. So Wells is a value opportunity. I think once the market gets more confidence that the NII
Meta, watching Meta. All right, so we might have to wait for some volume because everything is kind of stalled at the moment. Okay, Snowflake just hit the high and then got rejected. Home Depot climbing back to opening range levels. Futures pulling back. S&P, we got a little crossover. Okay, back to the opening range. S&P, cash. Let's go see what hedge flows look like. Hedge flows continue to notice it's trending lower. S&P cash hedge flows are trending more bearish. Okay. Continuing on, let's check out what's working. Okay, this is the S&P. Let's look at the Dow. S&P has 366 stocks advancing. That's pretty interesting. Let's see what sector is actually doing the best here. Okay, so healthcare is number one. So we should be looking in the healthcare group, right? Healthcare, XLV. Let's look at XLV. XLV. Okay, XLV is at the opening range high right now. Okay, what's Dell doing? Dell's down. SNDK is down. UMC is down. Micron is down again. DaVita Health is turned up. DaVita, let's see what DaVita looks like. DVA. Okay, it's above the opening range, but not really that lack of volume is noteworthy. Okay, what else is working here? Okay, we got Nike. Nike has been pretty active this morning. That's above the opening range high. Trying to push a little bit more. I have the 45 call. When is my expiration here? You know what I wanted to check? I wanted to check up-down volume. Probably 1-to-1, I would think. Probably 1-to-1 because the markets aren't moving much. I hate all this. AI stuff. The people don't even look real. I mean, they look hyper real. 1-to-1 up-down volume on the NYSE. 1-to-1 on the SPY. 1-to-1 on the diamonds. 1.5 down on the NASDAQ composite. 33 to 3,500 stocks, depending on when you're looking at it. Used to be 2,700, so they added quite a few stocks to the NASDAQ composite. COMPQ on stock charts. 2-to-1 down on the Qs. That's pretty curious. The Qs. Let's take a look at the Qs. Qs are they gap down, trying to bounce. They bounced off the lows, crossing over again. Qs. Okay, let me check. Let me check the watch list. Who do we have reporting earnings? Apple is the end of the month, the 30th of July. What's Best Buy? What's Best Buy doing? That's been active lately. Best Buy on the watch list again. Best Buy continuation. Wow, Paticus must be very happy. Best Buy, you happy, Paticus? Number 3.
The Coinbase platform is completely being reinvented. What he told me about AI and trading absolutely blew my mind. Good to see you, man. It's been a while. Likewise, good to see you. Yeah, I would just say Coinbase knows how to do it. This is really nice. Where have you transported it here in USA?
Yeah, well, we do these system update events twice a year, and we use it as a way to just tell the world about everything we built in the past 6 months. Got a ton of announcements coming out today, and some big ones like tokenized stocks, right, which has been a big effort for us for over a period of a couple of years. You know, historically, people have been trying to get stocks on chain, but most of these are like derivatives or synthetics. We're announcing today the first true one-to-one backed tokenized equity, and it gives you kind of the best of both worlds. You can get upside from the dividends, you can get your shareholder rights, but it's also on chain, which means 24/7 trading.
Yeah, Mondo, I see the same thing with Centos. Centos says the same thing. The economy is getting better.
Yeah, so this is a real-time feed of transactions happening on chain. Many of them actually by AI agents. That's another big.
Yeah, I've done that a number of times, Frano. I've done that several times.
Where does this all fall into your vision from that perspective? We're not talking about this.
Yeah, AM, PM expirations. You got to be very careful. You're not paying attention. That's happened to me several times. I'm not paying attention. I buy the AM expiration for Friday. Yeah.
So we really want to be the financial account for everyone's entire life. To be able to do it in one app, I think financial services need to get updated, and we think crypto is the technology to do it.
It's amazing to sit here and listen to this because I think back to the first time I talked to you, like years ago, a crypto trading platform, and everything we talked about then is finally, I mean, it's here. It's come to life. Like how big a transformation is this?
Mara.
Yeah.
Mara.
So yeah, it's a pretty incredible transformation. I think that it's allowed us to diversify our revenue streams too. So sometimes people see, oh, if Bitcoin's down, I guess crypto's down. You have to hate that because
you're still thinking you as a crypto company first.
Yeah, it's going to take a little while for people to update them. Prediction markets, which went live earlier this year, are already doing over $100 million revenue.
Okay, all the New York FANGs. Nike pulling back to the open range high. Okay. Apple.
Some things are up, some things are down. We want to put the information in front of you, often now assisted by AI, to help people make good decisions on what to invest in.
What did you see on your platform with the SpaceX and those petrol futures?
Yeah, we call them pre-IPO perks. Okay. So it's a way for people to get access to these things before they actually go public. It's good that retail is starting to be able to participate in these IPOs, but a lot of the value creation happens.
ASML looks like it wants to go some more.
Those are good pre-IPO perks available on the outside of the U.S. right now, but I think we're going to keep working with the agency to try to get it approved in the U.S. as well. And, someday I'd love to actually let people invest in private companies and reform the accredited investor laws because, in my view, they're a little bit outdated. It's like you have to be rich to get richer. Basically, it's a regressive tax. I think it should be a financial literacy test. So if you're smart and you get educated on these topics, I think anybody should be able to participate in these private companies.
How did that change?
Well, I think it would make it easier for private companies to raise money because it just increases the pools of capital. But of course, they would have to put out appropriate disclosures, and if there was any fraud or anything like that, that of course would still be prosecuted, right? So you got to make sure you don't get exposed people to any bad actors or scams. But if you pass a financial literacy test, you're a smart, upcoming young person. I don't see why you shouldn't be allowed to put $100 into the Series C of Anduril or something that's still a private company. Like, retail investors sometimes have just as much of an opinion on this as the pros or the wealthy people who somehow, if you have $1 million net worth, you can somehow do this, but a young, hungry, smart kid can't do it. It doesn't make sense to me.
Well, you're speaking my language because I've been making the case that the retail investor today is way different than the retail investor 10 to 15 years ago. I mean, they have tremendous tools.
All right, Best Buy drifting a bit lower at the moment. Best Buy, nice breakout. No need to chase. Adobe bouncing. Let's see. Nike looks really good though. Nike doing well. Need to see a break higher. It's consolidating up here at the opening range high. Push through the 50-day moving average. Pretty decent move. Had the 45 strike call. Let me see what that looks like.
Do you see Coinbase at this point as a crypto firm? Like, how should investors view your company, given everything else you've been working on?
Yeah, we're absolutely a crypto firm. But they should think of us as we're just building better financial services with crypto. Like we see that crypto is updating all these different aspects. If you look at the graph, like trading volume on chain, it's up like 50x over the last 7 years. You know, stablecoin payments are going to be trillions of dollars, you know, by 2030. Tokenization of assets, it's going to be 30 trillion is the estimate by 2030, right? And now there's this new layer happening with this agentic economy where they're increasing.
Merck, thank you, Freno. Merck, opening range breakout, nice volume, good news. Okay.
Store more crypto than anyone else with the most trusted brand, and we have this deep crypto expertise to lead the world into this new frontier.
Okay, Nike looks good. Nike. Okay.
Nobody knows for sure on these things, right? But I think if you look at the past trends and just, you know, fear and greed indices and like if you just look at the past trends in Bitcoin, I think we bottomed at 60K or so. You know, like a lot of things could drive growth in Bitcoin here. I think market structure legislation passing. I think some of these AI companies going public because they've been soaking up a lot of risk capital. So once these companies get public and the unlocks happen, like I think you'll start to see capital move back around. And then we need to go work on the quantum cryptography issue too. I think that's probably depressing the price of Bitcoin a little bit. And Coinbase has been doing some good work here. We put together a quantum crypto advisory council with some really smart people from across the industry that are helping work with some of the core developers. And
what is that problem for those not familiar?
Yeah, well, so quantum cryptography is this next generation of computers that are coming to market that could potentially break the classic cryptography. By the way, this is not just specific to crypto; it's used all over the internet for any kind of secure transactions, and banks use it, and everyone. So it's broadly something the world's going to have to update to. And so Bitcoin and Ethereum and Solana and these other are all working on roadmaps to upgrade the underlying cryptographic signatures to make them quantum resistant. And by the way, you know, Coinbase is making updates.
Okay, watching Merck.
To get prepared for this future as well. So if you have a Coinbase account, you don't really need to worry about it. We're going to just upgrade it all for you. But the blockchains themselves need to get updated as well.
Why does crypto still fall into these crypto winters? Do you think we're going to hit it?
Yeah, I'd say it's a winter. It's a mild for Bitcoin specifically, but everything else in crypto is like.
Yeah, I'm listening to you. Tell me about making high mortgages to crypto. I mean, that's not winterish to me.
Yeah, I mean, actually, I think Coinbase, whenever like Bitcoin is down, and sometimes like the people who are casually interested in crypto sort of get distracted, and we tend to do better like when Bitcoin is down because that's our core focus, and we've been shipping a ton of product, and I'd say we're turning ideas into reality like faster than ever before, and it's largely to us being one of the most AI-enabled companies out there. Like we're shipping twice as much code year over year as we were before, and some of our engineers are really turning into these like super builders that are shipping like 10x as much code as some of their coworkers. And so we're trying to teach best practices on that and create an environment where we can just outpace any company with AI.
To have gold coins in my possession, that hard asset is an insurance, you might say, against the economic. It's not.
Okay, what's going on? Apple, ASML. Stocks are just sitting here poised to do something. Either they dump or they just sit here. Yeah, nothing really jumping out at me. Merck had some good news, jumped above the opening range. Just sitting here at the moment, up quite a bit on the day.
Physical gold should be an important part of your portfolio. Call to receive the complete guide to buying gold. This is important and valuable.
Okay, Microsoft looks like it wants to do something here. Microsoft trying to turn back up. Microsoft. Okay, headed back up to the high of the day. Okay, so pre-market, we're right in here. Pre-market, where was? There we go. Pre-market, we're way up here, Microsoft. Okay. Watch Microsoft. Microsoft trying.
Including the 3 simple steps for transferring your existing 401k, 403b, and traditional IRA. With more than 2 decades in business, over $3 billion in transactions, and more than 1 million clients worldwide, U.S. Money Reserve is one of the most.
All right, they're watching Lily. Yeah, healthcare, XLV, strongest sector today. Okay, I got to take a 2-minute break. I'll be right back.
Chairman Lair, first year chairman over at Circle. Frankly, he's scared the cloud of me. He takes what he thinks about where jobs are going, more broadly into year end and into next year. He's like, there's more waves of job loss coming because of AI.
I'm more in the camp that AI is going to eliminate tasks and toil, but not jobs. I think that it's just going to free people up to get more work done, higher level tasks done. So I'm actually quite bullish on it. I don't think it's going to increase unemployment. But inside Coinbase, we use AI in lots of different ways. We use it to write software. We use it to run risk analysis and automate some of our compliance back office. We use it to do customer support. We use it to do design of our products. And I think, in the future, what's exciting is that we're actually getting a lot of the context from each of the teams into a brain.
Nike pushing a bit higher. Nike. Nike. Sorry about that. I didn't realize I had you on. Okay, Nike. Still sitting there. Home Depot trying to get back. Higher lows on Home Depot. Home Depot.
And then a human being is going to be able to just review 100 things that it came up with that day based on customer feedback. Like, yep. No.
So the human's just managing these agents. They're a manager of agents.
Yeah, and every time that you teach it something, that knowledge goes back into the brain so that it's smarter the next time it goes around. So that's the recursive self-improvement moment that'll be a real takeoff.
How does this AI movement change how you hire for Coinbase? I think one of your competitors mentioned they're only hiring just super elite talent. How do you define super elite talent?
Yeah, well, we definitely have AI literacy in our interviews now. And we oftentimes ask people to like build something with AI in the interviews. If somebody can't do that at this point, I'd say it's just like a no hire, right? I think it's a baseline for everyone to get hired at Coinbase at this point.
Yeah, I would say so. I mean, I'm not even a computer programmer, but being able to take AI basic stuff and just build ideas to find information and then double check it, of course. This is was a Coinbase CEO talking. All right, he's kind of boring me right now. So let's.
I hear from everyone from our board members to our interns that like Coinbase is one of the most AI-enabled companies in the world, and one of the best parts about working here is that you get to learn how to level up even more.
What's the next?
Is a little bit more favorable here, and the risk to reward in this particular case is incredibly favorable to be selling a put spread. Usually, when you sell a put spread like this, you're risking at least 2 to 1. So for every $1 you can potentially make, you're risking upwards of $2, maybe even a little bit more than that. But in this particular case, going out to the August 28th weekly expiration, if you sold a 117.107 put spread, which is about $10 wide, you can collect $4.40. That means that you're risking under $1.50 for every $1 you can potentially make. So because options premiums are so elevated, I want to take advantage of that by being a seller and not having the same risk reward or the poor risk reward that you typically would have to take on when you're an option seller.
Really appreciate you taking the time, Tony. That's Tony Zhang, Chief Strategist of Options Play. Thanks for being here, and thanks for the look at a couple example trades. Plenty more to come here on Trading 360.
Okay, stocks are not moving. They're just kind of sitting here. They're just sitting here, so not much to do.
A few different names. Looking forward to it. Alphabet, Target, IonQ.
SpaceX faded the high. A lot of stocks fading the high. Micron did the same. It faded the high. It's at the low of the day right now. Micron.
If you say it, you don't have to do it. It's a general rule, right?
It is exactly. That's exactly it. But this was a gift.
Okay, looking for the volume to come in. It's not right now. Not coming in right now. Home Depot still trying to push. Oops.
This is not going to keep them, suddenly make them think, oh, yes, you're right. We don't have to hike this year. So the hike.
DoorDash, that faded. DoorDash looked pretty good this morning and it faded right out of the gate. Home Depot's still hanging in there. Home Depot. Nike above the opening range. S&P cash. All right. Got a lot of red on the screen. A lot of red. Heat map. A lot of red. Okay, S&P. So let's see. Let's pick out the ones that are healthcare related. Okay, Abbott Labs. Abbott Labs, healthcare related. Opening range high is much higher overhead. Dexcom, Centos, what is that? Insulet, PODD, Insulet. Nothing there. Merck got some news. It's hanging out, so Merck maybe it goes. Frano posting some news on Merck. Lilly, opening range breakout on Lilly. Healthcare is the strongest sector today, so money's flowing in there from chips, it looks like. Lilly looks like it wants to keep going.
Conversations around the balance sheet can be family fight. It keeps talking about the family fight. Yeah, it's like Thanksgiving. Everybody's around the Thanksgiving table and having a family CBD.
The long bond's up 20 bips in like 3 weeks. And I just wondered, do you think in any way he's getting tested at the long end or challenged?
I think, when speaking to our very large macro hedge fund clients, that if you look at long end rates around the globe, it is a consistent message. And it's about debt and deficits and geopolitical risks and everything else, right? So I don't know that it's specifically a test of wash. They feel like this is a global phenomenon, that there's just not a lot of play to be had in the long end.
Are you worried? I mean, we're at this point, you'd be 7 points or pips from topping out where we were
Lily, okay.
We could. I mean, if I'm a policymaker on that FOMC,
Okay, when is Lily earnings? Lily's earnings are next week, right? First week of August, Wednesday the 5th.
on the FOMC that have been losing patience with inflation believe that rates are not at the level that should slow inflation, slow the economy, and that at the very least, maybe you take back the insurance cuts of last year. We thought we needed them because the labor market looked like it was falling out of bed in the fall last year. Too many puns in there, and maybe we just didn't need those, and we take those back. That would be the argument of the Hawks. I don't think we get there because our expectation is that disinflation has begun, but it's going to take some time for markets to be convinced because it's going to take some time for the
S&P just been sitting in the same spot for the last few minutes. Nike still on top of the opening range high. Okay, there goes Microsoft is starting to push a bit more. Watch Microsoft. Microsoft still in play. Microsoft. Microsoft about to go. Microsoft looks like it's about to go here. Microsoft back up to the opening range high. That was quite a reversal. We pointed that out on the crossover to keep an eye on Microsoft.
That knowledge gap and trying to help clients make sense of it. Okay, Ellen, thank you. Well, we appreciate you doing that here for us on CNBC.
50-day overhead.
Still ahead this morning, UNH jumping after earnings, blew past estimates, raising the guide.
50 days overhead target, MSFU.
Plus, Uber to buy Delivery Hero in a more than $14 billion deal. We'll discuss how that acquisition fits into the overall playbook for the company.
Yeah, Microsoft has to reinvent itself again. Satya Nadella, I mean, he's been there quite a few years. This whole AI thing is really disruptive. You've got companies like Starbucks, many others, that are no longer using these big companies' AI tools. Starbucks announcing on Monday, I believe it was, maybe it was over the weekend, that they'll no longer use IBM and Microsoft for their AI needs. They're developing their own in-house. Okay, here goes Microsoft. Let's see. What else do I want to do with Microsoft? I have some options here already. What do I want to do? Microsoft. All right. Microsoft. All right, that's starting to go. Microsoft. Okay, so I have August and I have July. I got tomorrow's calls. Those are headed towards. Okay, that looks good. Microsoft 400s. Microsoft 400 for tomorrow. Quick trade maybe. Microsoft 400 call for tomorrow. It's just out of the money. Let's see. No, I don't want that. Should have caught this earlier. Nice reversal. Going Microsoft. Microsoft going here. Microsoft's on the move. Opening range. It is 11:27 on the East Coast. I'm your host, Cousin Betting, coming to you from closingprint.com. Microsoft is on the move now. Watch Microsoft. Okay, opening range breakout. It's need more volume. Microsoft moving. Okay, Apple turning back up.
Welcome back. CNBC's fourth annual Game Plan Summit is kicking off later today at Fanatics Fest, presented by CNBC Sport and Boardroom. Number of interviews will be there.
Okay, S&P turning up.
And speaking of this morning, Fanatics actually hosted an investor day at Fanatics Fest ahead of the big event. And I moderated a conversation with the CEO, Michael Rubin. Just a few takeaways from our conversation. First of all, it's interesting that they even do an investor day because it's a private company. But what it's growing is the company is on track for $14 billion in revenue this year. Of that, about $7 billion is the commerce business. That was the original business, selling the jerseys and the merch. But Rubin has grown by a number of verticals into sports betting, into trading cards, and some other news I can share with you that I learned from the investor day is that Fanatics is planning to launch an all-in-one sports app for sports betting and for actually trading as well, which you can do on this app. So they're continuing to build the business, and he has really high ambitions, Carl, for the company as the preeminent sports platform. You know, now that they have dominated the merch business, there's international growth plans. He says it can be a much bigger business, as big of a $30 billion total addressable market on that business alone. And then, of course, the trading cards and the sports betting and the predictions markets, which they've gotten into as well. They're getting into an Amex credit card that gives sports fans, Fanatics, cash basically to spend on this kind of for sports fans to get the points from it. So they're in the content business as well with Fanatics Studios, which he looks at less as monetization play and more as a branding tool. And they're in this events business too with Fanatics Fest. So it's growing.
It is a huge vertical all across Wall Street. We're working on it here at CNBC. Huge companies like Goldman Sachs have entire teams.
S&P just chopping around, not going anywhere at the moment. Not a bad idea to reduce risk. Going into OPEX tomorrow, we could get some consolidation or correction in the markets. Many are looking for a correction. 5%. Okay, Microsoft's not working right now. Microsoft's not working.
Apparently, because of Fanatics Fest, they have the Dodgers play the Yankees this weekend. Like, it's actually changed a lot in the sports calendar around it.
Watching Tom Brady throw a ball to you.
That was last year. We did that with the kids, but you should see the lineup they had this year, and a lot of it is, Rubin, he books it himself, and he has this incredible network of athletes, and they're partners of his in the businesses, and it's like part of his whole flywheel. And he has, LeBron coming and FIFA players coming, and I think the entire Knicks team is coming.
S&P, chop, chop, chop. Apple trying to break out.
Forecasters say the smoke from Canadian wildfires will continue to expose much of the Midwest and Mid-Atlantic states to unhealthy air quality at least through tomorrow night. More than 115 million people are in the path of the smoke as out-of-control fires in Canada and Minnesota go south, and a heat dome continues to trap that smoke closer to the ground. Ukrainians took to the streets today to protest President Zelensky's removal of his defense minister, who was seen as an innovator in drone technology, but who also clashed with the military establishment. Zelensky to that friction between the minister and the commander of Ukraine's armed forces as a reason for that move. And President Trump's longtime teleprompter operator allegedly made tens of thousands of dollars placing bets through the Kalshi prediction market about the content of speeches the president was about to deliver. That includes his most recent State of the Union address. ABC News, citing sources, reports Gabriel Perez is in talks with the Commodity Futures Trading Commission to settle allegations he won more than $100,000 on those bets. CNBC has a commercial relationship with Kalshi. Sarah, back over to you.
Okay, and thank you. Frank, we're going to talk more about that Kalshi story tomorrow when the company CEO joins us right here at this time, 11 a.m. Eastern, ahead of the World Cup final.
S&P moving back to the top of the range that we've been banging out for the last few minutes. Apple still trying to get back up to the open range high. It had a good day yesterday. I don't know how much more we're going to get out of today.
So they basically can do more complex mathematical complications or calculations, I should say. So drug and material discovery companies, cryptography, cybersecurity, financial modeling. When you put that into regular terms, that just means big corporations. And so to me, the real question is there enough demand from these big corporations for them to keep growing and
Yeah, stocks are trying to do something, but they're just sitting here below their opening range highs, just banging out dojis, looking for Microsoft to keep going here. Can it go or not? Microsoft, it'd be nice to see Microsoft push a bit. It's stuck here going into almost at noon here on the East Coast.
Even a higher beta version of some of those names. But speaking of beta in the charts, you got a chart here behind us, Rick, and hit kind of a double top, but plunging off that level.
Yeah, retreating back to some gap levels that we identified here. Pretty consistent downward channel as well. We had a notable high point here connecting these subsequent highs.
Oh boy.
The line, put it along with those to give you a general idea of the boundaries here, but we've retreated all the way back down here to this green line that comes in near 36. The gap was roughly
Snowflake trying to push higher.
So that's where we find ourselves now.
S&P continues to push back up against the top of this range. 7,600 is a 99 percentile level. Do we go up and test it? Hedge flows are just now starting to turn. Hedge flows are just now starting to turn. Okay, let me just go like this. Let's see where we go. S&P 500. Okay, Apple's trying to move here. Apple's trying to go.
RSI also not cooperating with the bulls. We are below that oversold threshold of 30, typically regarded as a sign of further weakness to come in a trending market, kind of counterintuitive to the name. Volume profile shows that we could see perhaps a supportive area here between about 32 to 35. We have broken below the biggest volume area on our chart there between 40 to 50. Point of control came in at 48.61, the heaviest trading area of all.
Thank you, Rick. And Jason, last one. Now, you already told us it's going to be on the bearish side, but how does the approach differ when you're looking at IonQ in terms of maybe time to expiration, strategy, etc.?
Well, we all know that they say the bulls take the
Microsoft.
and then they kind of the bears jump out the window.
Okay, let's see what Microsoft does. Microsoft.
I don't think we need as much time on this.
Trying.
Looking at the October 2022
Okay, Microsoft, Apple, they're all doing the same thing. They're teasing people to put money to work. Tesla, just above the opening range high. S&P, of course. Nike, what's Nike doing? Nike looks like it's starting to stretch its legs. Nike. Okay, that's going a bit more. Let me see. What do I have in Nike? How much do I have? Nike. Come on, Nike. Nike looking good. Yeah, I got October 45s. October 45s. Those will be in the money shortly. Should I double up? I got 10 of these. October 45s. October 45s. I've been moving things out to September, October. All right, builders first source turning back up. Home Depot higher. Okay, it looks like Nike wants to do something here. Apple's trying to break a bit higher. Tesla back above its opening range high for the last half an hour, 45 minutes. Microsoft, what are you going to do, Microsoft? Microsoft, what are you doing, Microsoft? Okay, just sitting here.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Apple's going to go here. Apple's going to go. What did I have? I have August 21st, 3:30, 3:35. Okay, Apple looking good. Looks like it wants to go. Apple. Do I want to add to this or just leave it alone? August 3:30s.
It's absolutely world class. We have coaches who have been in the industry and around the industry.
Maybe September 3:30s.
Because people learn differently at different times. We have webcasts running through YouTube all day, every trading day. We've got events that are making their way around.
Apple's trying to go.
So you get that opportunity to share experiences and knowledge with other traders.
How incredible was that? And it's free.
I added a few 3:30s. That's all. I just added some 3:30s. Apple.
And stream anytime wherever you are.
Welcome back to Trading 360. I'm Alex Coffey, live from our Chicago headquarters in from Marley Cage. It's now time to spotlight. Today, we're going to spotlight aerospace and defense. Joining us now is Phil Schneider, the principal at Global Location Strategies. All right, let's talk big picture here. When you look at this particular space,
Apple just range bound, not going anywhere.
and it's one that
Trying to go.
very much going to be a
Volume's not picking up.
when you look at your report, what stands out in terms of how the competitive edge has shifted from maybe innovation to execution?
Yeah, very good question. Yeah, for decades.
Snowflake trying to break higher. Snowflake is trying to break higher.
Very quickly. So we are moving from the era of what matters in A&D is innovation for a region.
Snowflake, Apple. Keep it on Apple for a minute. Looking for Apple to break higher. Microsoft just sitting here teasing people to put money at risk, it feels like. That's what it feels like. Feels like they're teasing people to put money at risk. We made new highs on Apple. We got OPEX tomorrow. I got a feeling we're going to pull back a little bit. So I'll be adding, where is VIX? I'll be adding to my VIX 22 calls. All right. Looks like Microsoft wants to go. VIX at the lows here. VIX is not pricing in the risk. The markets are not pricing in the risk of OPEX being a catalyst for a 2, 3, 5% pullback. I'm not saying that's going to happen, but it's sure set up that way. So a lot of people have been chasing calls. The chips, the first shot across the bow, the chips started to see money coming out this week. I'd be careful of putting on too much risk. Feels like we could pull back. So I'll be doubling up probably on my VIX calls. I have 10 of these 22s for August. 10 for now. I might add another 10 because if we do get a 5% pullback, 3 to 5% pullback, this is definitely going to spike up towards 24, 25, I would think. It's just been sitting down here for too long. And Core 1M is at highs. Apple looking for more follow through.
Not only just demand, but sort of almost, kind of, I'm trying to think of the deglobalization that you're seeing in the world and maybe sort of this renewed technological race. I'm sure this is going to be another really important.
Okay, New York Fangs recovered somewhat.
Which of these constraints I believe is the hardest to solve?
New York Fangs recovered. Buyers at the low of the day. That's a good sign. This looked pretty ugly this morning. Okay, Apple, no follow through. S&P 500. Nothing here yet. The Qs below VWAP. IWM looked good this morning. Fading back to VWAP. The setup just looks too ripe for a pullback. After OPEX, we've got a lot of calls expiring. So if you're going to stay in some of these calls, make sure they're out in September. August, the soonest. I would have more out in September, October. So you have time. If it does pull back, we get a spasm. Got time for it to pull back or reduce your risk altogether and move out to September.
Is investment flowing to the stuff that can execute now then? And when you look at those companies that are they going to then open up even larger gaps between their peers that are struggling?
I think that's correct. You have to be able to actually execute. But what's happening is the more traditional hubs for this, when you think of Southern California, Dallas, Fort Worth.
All right, S&P pulling back in a little bit. Apple, what are you doing, Apple? Apple looks good, but it does feel like it's a bit extended. Given tomorrow OPEX, you can imagine a lot of people chasing calls up here, selling premium. Let's see what that looks like, actually. Selling premium on Apple. Okay, here's Apple over here. Okay, Apple's a 81% risk reversal. Supermicro's over here. AMD's way over here. Reddit. Cheap calls on Reddit. Snowflake, Tesla. These are fairly cheap. Okay, Netflix is climbing. Tesla pulling back. Microsoft and Apple just kind of sitting here. Just feels like people getting sucked in. I don't know if you got profits, maybe you want to reduce a little bit more. So let's say you've got a dozen positions and you got 10 calls each and they're all in August. I would probably reduce to 5, maybe close a few positions. If we do get a pullback, you get a good entry. And if we do pull back, you don't get hurt as much. Setting up for maybe an end of the month run. August doesn't tend to be a good month for the market. So that combination with OPEX on Friday, here goes IWM pulling back now. All right, so some of these are already starting to show signs of weakness. Okay, S&P pulling back now. Yeah, I don't like it. I don't like what we're going up against. Apple.
Like Salt Lake, Ogden, Provo.
Okay, Microsoft is showing signs. Maybe these two can save us, right? Maybe we got two stocks that'll save us. Microsoft looks like it wants to go again, enticing people to chase this. I would be selling into strength, especially if you bought down here. I would be selling into strength. Microsoft, I wouldn't be buying new positions. Apple's starting to turn up now. Apple, okay, we got a little uptick in Apple and Microsoft. Feels like a trap. Feels like a trap to me.
Innovation now, and it's like you said, a little bit more about execution. But Phil, we'll leave it there. Really appreciate you taking the time. That's Phil Schneider, principal at Global Location Strategies. Thanks for the insights on aerospace and defense. Coming up next, it'll be time for our 360 round. Our panel is going to dive into United Health earnings, and the stock is moving higher this morning. What's next here on Trading 360?
Core 1M is at 422. Okay, Apple going a bit. Buy anything. Buy these lows.
Stay connected to the markets, Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com.
Opening range.
Schwab Network, available anytime, anywhere, on any device for free.
How's it going? First day, so sometimes Next. Try it again. You could have done better. Please. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Nicole Pedalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies.
There goes Apple. Okay, Apple, can we run it?
Big movers, real-time interviews, and insight from analysts, founders.
I just have a feeling you're going to have a better entry on Apple next week. So I'd be selling into strength. Microsoft looks enticing, but it's already made a nice move. Microsoft.
We'll dive into the earnings and more with Daniel Rich, senior equity research analyst for CFRA, and Andy Wong, of course, managing partner at Runnymede Capital Management. Go ahead, we'll start with you, Daniel. What's the reaction from sort of the analyst perspective here when you see the earnings, stocks moving higher? Is that all?
Okay, Amazon's starting to pick up. So I'm going to use the opportunity on these pops if they continue to move higher to reduce my exposure. I still want to double up on my VIX August 22 calls. If nothing happens, that's great. But I just got this feeling, this is gnawing feeling that we haven't had anything, any big correction yet. And we've got Core 1M down here near the 4s. Need a washout. And it's coming at that time of year that's not friendly to swing traders, short-term swing traders. Okay, Apple's still pushing now.
Story. So we think that quarter is emblematic of the longer term turnaround, but there's still a lot of challenges and headwinds that are facing the industry in our opinion.
Andy, you and your partners have been in this business for a long time, and you've seen the
Amazon. Okay, what do I got on Amazon? I do know I want to take some Amazon off, right? Amazon. Okay, got tomorrow calls and August.
Yeah, well, I think last year investors questioned whether
Amazon.
lost control of its business. In this quarter, management answered
Okay, I got 250, 260s on Amazon. I'll be taking some Amazon off. I have some August 250, 260s. What I'll do is I'll reduce my exposure in Amazon as I'm in the money by $6. I could take it off here actually and not have that to be paying attention to. You know what? I'm just going to go ahead and take it off. I might get more out of this, but I'm just going to exit at $5. Okay, I'm out of Amazon August calls. I had the 250, 260 call spread. I'm 60% into that premium, so I'm going to go ahead and take it off. Collect some cash and reduce my exposure. That's my mission today, because tomorrow's a flip of a coin. We gap down. That's going to kill all these calls that have the potential to make a little money today. Yeah, you might make more if you're that kind of a risk taker. Personally, I think there's just too much risk potentially that could deflate your account. You know, you've done very well for the last couple of weeks, right? Look at Apple the last couple of weeks. You've done really well. So the news is good. It's going to continue to probably trade higher. I just don't think we're going to, it'd be a good idea to just keep chasing this. So Amazon, I took that off. Let's see what Amazon looks like. Amazon. Okay. Opening range high. Okay, we're above the 50-day. Apple still pushing. Okay, Apple looks like it wants to go. Apple. Okay, Apple, I got 335, 340s left. And I have both 335, 340s. I took the 330, 335s off earlier today. On a pop this morning. Okay, Apple going here. Apple. Okay, here we go. 335. Okay, can we get to 335? 335. ABCD pattern early on Apple. The biggest risk we have, I think, over the last several weeks is that we chased a lot of things. Look at Micron, what Micron did. A lot of people were looking for Micron to continue higher. That didn't turn out well. Micron's at new lows. So keep going to the well. You're gonna get an empty well, or worse. Or worse. So Micron continues to fade. What's Nvidia doing? Nvidia is trying to bounce. Snowflake. Snowflake's about to move above the opening range high. Snowflake. Okay, Apple.
So I think that healthcare is one of the most complex industries in America. Even small productivity gains can have a meaningful impact on profits. And United Health is implementing AI to make the business more efficient. So keep in mind that AI winners won't just build the technology. They're also going to be used to run better businesses. I think that United Health is starting to do just that. So that's one thing to look out for. The other thing is that
Snowflake. Okay, let's go. Snowflake looks good. Back up to the highs. Nike still stretching a bit. Keep stretching the envelope a bit. Notice the Bollinger Bands on the daily on the right. Nike is contracting. So we need to get above that high earlier in the week on Monday. Basically need to break above 45. There goes Palantir turning up. Palantir. This is another one. Palantir is giving you a nice gain off of the last couple of weeks. This is one that I'd be reducing my exposure in. If it gets above the 50-day and starts to run, people are going to chase it. I think that's going to be a mistake. I would be selling into strength. Wait until OPEX, after OPEX tomorrow. Look at it on Monday. You're not giving up much, okay? You're not giving up much if this pushes a bit higher towards that upper Bollinger Band. I'd be taking some profits off into strength on Palantir if you bought in the last couple of weeks. We mentioned this last week. Palantir was turning. It looks pretty good here. Climbing back to the opening range high. Anything that's rallied over the last couple of weeks that you may have bought 2 weeks ago, like Palantir, these are the candidates I'm looking at. If I don't have August expiration, I'm looking at September. And if I have August or even July, July is worse. If I had tomorrow's calls and I'm up right now, I'd be out. I'd be taking that off. Maybe keep a few just in case we do something crazy tomorrow. I think it's a trap. Apple, push some more Apple. Come on, Apple, you can do this. Palantir, tech is doing okay, but we can clearly see healthcare is doing the best. Okay, technology is down here. It's down 2%. Okay, so if you got technology stocks and you got a profit and you got OPEX tomorrow, okay, there goes Snowflake. These are candidates I'm looking to take off. Snowflake's a good example. Snowflake taking off right here above the opening range. I got a profit. Do I want to take this off now or wait? Snowflake, I think I have longer dated actually. Snowflake, I got September, so I'm okay with Snowflake. If I can get out with a bigger profit, I might take them off. Snowflake, let me see here. Snowflake, working orders, Snowflake. I have 450 for those. Snowflake, I got 280s. Snowflake, just out of the money, 280s will take out the high of the day. Yesterday's high of the day, 280s. 285 is a recent all-time high, 285.50. Man, if we were to test that today or yesterday's high, I'd probably take some of this off. I'm sorry if I sound, super bearish. It's just I'm being very cautious, knowing what OPEX. It's not a big OPEX, but we do have a lot of call premium being sold, and we don't have people. We don't have volatility is not pricing in a risk premium, which could be, this could be a tell. It could be a tell. We could be very bullish. The low VIX could be a tell, right? Premium's not being bought. Not like you'd expect. I sound like a broken record. Take profits, reduce your risk. It is OPEX for July. August tends to be a pretty crappy month for traders. So I want to be out beyond August, like September at a minimum now. Actually, August is the minimum. I'd rather be out in September. Misspoke. Microsoft did manage a little follow through. I've got some calls on Microsoft I might do something with. Let me see here. Eke out a few thousand here and there and just, take them off. All right. Microsoft. I got a ways to go, right? The break higher isn't really, I don't know, this volume looks pretty good right here, but we're coming up to the 50-day moving average. Microsoft, if you're trading this, you got the 50-day right overhead, 401.85. Okay, there goes Microsoft. Okay, Home Depot. That's just oscillating here, Home Depot. October. We're still looking for that October rally. We dipped a little bit more than I anticipated. Tesla teasing and then just dropped Tesla. Snowflake. Okay, higher Snowflake.
Technology down 1.6%, and that's dragging. Communication services and industrials are both relatively flat, just fractionally in the red, and the rest of the market is higher at this point. But when you've got these big major companies and components within the information technology space, it's going to weigh down on the overall market, and that's what we're seeing here today. Crude's kind of stabilized just below $80 a barrel. That's a positive, even though there's rhetoric that we might start to go after infrastructure next week. And Iran came back and said, hey, they're going to ramp up their attacks on military bases and infrastructure in the Middle East. So that geopolitical tension's still there, but I think this is more about a story of people taking some.
I don't know. Iran, just to me personally, just being ex-military, we used to do this back in the day. You'd shoot at the enemy. In this case, I caught the tail end of the Vietnam conflict, so you can do the calculation. I was young. I was 17. We'd shoot at the enemy. The enemy would shoot back. We would pinpoint. The Newport News would be sitting off the coast of Vietnam, Hanoi Harbor. They'd see the flashes at night shooting at us. We were the decoys. They would shoot back and they'd take out the counter battery. So that's, I don't know. Iran, every time they shoot a missile, that's what they're running into. They're watching for it. Eventually, there's going to be nobody left to shoot.
Everybody kind of wants to get out of these chip names that were the big winners at the first half of the year, and they're reallocated into different sectors, and that's probably a positive where we're not just seeing a big flush out of the market at this point.
So it's not a head for the hills, it's where else is there opportunity? Kevin, what's your take?
Yeah, this still appears to me like a rotation out of semiconductors, technology, all those into the other parts of the S&P 500. Now, industrials are a little heavy today. GE Aerospace, despite pretty good numbers today.
Let's see what SPY, the SPY growth ETF looks like, SPY G. I keep telling you, I'm probably going to wait until, definitely wait until Monday at a minimum, but probably do something with this in September. Okay, I want to have this longer term for my long-term account, it's not going to be a day trade. All right, S&P just rolled over. Okay, so I want to take some more things off here.
These companies, Taiwan Semi, that had earnings this morning, the only real blemish on the entire report was potential.
Feels like a trap, folks. Feels like a trap. All right, Snowflake.
These stocks are all under pressure. And so it doesn't get me terribly worrisome about this market because I think they're rotating. You've got an S&P 500 down about 0.2%, but the equal weight up about 0.7. So this is
That's a good point. Let's go check equal weight. RSP. Okay, so look at RSP. Does that look bearish to you? RSP. The equal weight does not look bearish. So it's coming out of the some of the New York FANG, some of the tech names like Micron.
The CEO came out in the conference call and basically said, hey, we're going to probably have to raise prices again, but the consumer seems to be absorbing those, especially in that K-shaped economy, the high-end consumer, that business traveler, that person flying business class, the international travel, they can raise those fares because demand is so steep right now. I think one of the headwinds for
let's see, with 353 stocks advancing.
Fuel this year. That's probably about $2 billion more than they had given previous guidance for, and that's because of this ramp up that we've seen in the month of July as far as crude oil rallying from about $67, $68 a barrel to where it is now about $80, just below $80 a barrel. So they gave wide guidance for the current quarter. As far as EPS, 250 to 350, that was a lot lower than what the market.
Okay, what does UNH look like? UNH. All right, this is the equal weight.
They don't know where fuel prices are going to go.
UNH.
If you listen to the commentary from the company on this,
UNH. What about PepsiCo? We got defensive. Coca-Cola. KO. XLP. Staples. Coca-Cola. What's Caterpillar doing? Caterpillar down again today. Micron doesn't look good either. Micron. Casey's making a bounce here. Coca-Cola. Let's see. Clorox. CLX. What about ConAgra? Food. People got to have food. CAG.
Just watch the price of oil, because that'll give you a good indication on how those companies are doing, because the demand is still there, even though they've raised prices 15 to 20% over the last year, and they're probably going to raise them in the near-term future also.
And people are apparently willing to pay the prices. I mean, you know, you guys, we all have caught flights recently, have flights coming up, and when you're looking to pick a seat,
Microsoft hanging in there.
Here, but fuel price is still something you have to keep in mind. Kevin, what's your take on United?
If you remember yesterday's show, our thesis was Delta, that put up great earnings, it was down slightly after their earnings report. Same exact thing is happening here with United Airlines. That was the thesis for how we traded United yesterday. So this is not surprising. The airlines can always be volatile, like Tom said. Capacity is a big topic with the airlines. It drives so much of their pricing. But the overall travel sector, the U.S. consumer, is still strong. Premium seats doing well. International travel doing well. Tom said even economy is doing well. So I think these airlines are still in a really good spot. Not, like I said, after the run they've had, Delta and United in their earnings.
Yeah, Captain, if you're going to do spreads, probably do the 2025 or a 25-30.
Is not worrisome, Diane. So I think these airlines are still in a really good spot. And that capacity discussion is favoring them. Remember, we let a discount carrier just close its doors earlier this year. And so that favors the big airlines. And these airlines, Delta and United Airlines, very similar business models. You know.
Okay, Snowflake.
Yeah, no, it's a great point, because you got to go somewhere, and so you have to.
Microsoft still holding on to the highs here. It's Microsoft. The 50 days overhead. The other thing you want to consider, check this out. The other thing I want to consider, let's see, S&P 500. Okay, so the other thing you want to consider is we're coming into, you probably already know what I'm going to say. We're coming into OPEX. We've got July tends to be a bearish. Excuse me, August tends to be a bearish month of the year. If we do push higher tomorrow, right? If we do push higher and we hit that upper band, okay, we have the potential for a double top and a pullback back down here, maybe even to this level, which wouldn't be a bad thing, because we could buy this dip, look for it to take off back to the upside into the end of the year. Okay, that would be ideal for me if I'm looking to buy SPY growth, SPY G, the 2-time ETF. Now, that's great, Benny, but what happens if we break out? Well, you know, your hedges don't work, and you make money on all the calls that you didn't get out of, or all the shares, or you make money on your longer term stuff. Short term, I'm just kind of trying to use the probabilities to make the most out of the situation, because if you look at the price action, we really haven't gone anywhere for a week, 2 weeks. So calls that I have that I was looking for to make more profit, I'm up a little bit, but I'm not up what I thought I was going to be. So originally thought that I was going to make a bigger profit. Therefore, let me take it off because it's not doing what I thought it was going to do, going into an OPEX where we could see a correction. I don't have a crystal ball, so I can't tell you what's going to happen. I'm just looking at the probabilities with Core 1M down there at near 4. So I'm trying to prepare not only myself, but trying to prepare you for it as well. Next year, December, this year, December will mark 39 years of investing for me and trading. 39 years. I can't believe it. I look at these young kids. I look at my son. I was just like, man, I remember when I was just looking at a picture of myself yesterday with my mom. My mom was really skinny. I was really skinny. I was like, I must have been 14 or 15. I think I was like 14, actually. I gotta send this to my son because I took a picture of this yesterday. Let's see.
Per share on an adjusted basis. That was a big beat there, Tom. They beat on the top line as well, raising expectations from.
Let me see. I think I took a snapshot of this.
Yeah, I think controlling costs is going to be the key for them. They're spending about $1.5 billion on AI to streamline their business at this point. It's working. They raised guidance.
Oh, it's in my other laptop. Okay.
On the raise that they gave on EPS and revenue moving forward, they're controlling those costs.
All right. So if we do that tomorrow, that's great. If we do that, if we break out tomorrow, that'd be awesome. You know, I don't think it's going to happen. I'm planning for it. Okay, Apple pulling back in now. Amazon. I was reading something the other day, maybe it was last night, about the tendencies. Big money, smart money tends to play the tendencies of amateur traders, you know, that buy the rip higher like Apple, right? And get trapped. They see the breakout above the opening range, but there's no volume associated with the breakout. So they tend to chase, and then they get this kind of pullback, and they go, oh, shit, I just lost money again. You know, so big money, smart money tends to play this that way. So I'd be taking profits off into the strength because there's no volume associated with the breakout. Take the opportunity to reduce your exposure. Microsoft, kind of the same thing. It feels trappy today. I'm sorry I keep sounding like a broken record, but some people will just be joining us today out west, just joining us. It's 9 o'clock, 9:15 on the West Coast. If you're just joining us, I'm your host, Cousin Benny, coming to you from theclosingprint.com. It is Thursday, going into OPEX tomorrow. I'd be reducing my risk. It's 12:16. Let me just change channels here. Hello.
Ecosystem. Someone's got to come alongside these companies and help them understand how to actually implement AI inside of their organizations, because they probably don't already have the person or the people internally who have that skill set. However,
IBM's basically saying because the cost of everything else has gone up in this ecosystem, there's not a lot of wiggle room left for the budgets of the CTO, and we're the ones on the chopping block for the foreseeable future. And I think that that's probably another one of those canaries in the coal mine across the board, across other companies. We have to look at now ServiceNow is going to report. We've got to look at Microsoft as an example, because that is probably pretty telling when companies have to worry about investing in their hardware and then also the networking to bring their models local, because we're also seeing this transition away from the large language models that were necessary for training, and now when inference is the focus, the information is actually coming closer to the people using it, or the data is coming a lot closer to the people using it, which sort of cuts out the need for a lot of this excess build out that we've been talking about. So for IBM to be saying that for the near future, it doesn't look good from here for us to grow this AI book of business that I've been really excited about for the last couple of years. It's been very encouraging to see what they built from nothing. I might come back to it eventually, but it's going to be a while.
Yeah, Cyber is getting a boost though. You own CrowdStrike as well, potentially off of the IBM story.
No question. Those stocks were the first ones to rip when that 8K came out from IBM. Market made a decision immediately. We're going to hear more of this. The thing that IBM said, and I phrased this as they said the quiet part out loud. It's just not a priority. What they say, it's not that what they're doing is not the right strategy for IBM. What's going on now is enterprise customers are securing compute. It's the main thing. We understand that. We just talked about chips for an hour and a half. We won't do it again. And then the cybersecurity piece. And so we're a firm that's built out a data lake. And we have all this stuff that we need to do internally on permissions. I have client-facing advisors. I have client service associates. I have traders. I have different people who need different levels of access. So if we're going to use enterprise, we're going to use an enterprise interface like a Claude, for example, on our data lake. Not everybody is supposed to have access to the same. Okay, this is an entire thing that has to do with cybersecurity
Apple
and identity and things that are just far away from what IBM does, but play right into the strengths of your CrowdStrikes, your Fortinets, your Palo Alto networks. Like, so we understand this, and we're a business. We're not a Fortune 500 company, but just in a microcosm. This is the priority. Okay, we're utilizing data. We're putting an AI layer on top of it. We have to secure everything, lock everything down. This is what every company has.
I think there's a much simpler explanation. Not to say your data lake wasn't. I mean, it might have had a little work.
You can come by the lake anytime you want.
But I think the release of Mythos scared the crap out of CISOs at Fortune 500 companies everywhere. And they finally had the ability to go to the CFO and say, you have to allow me to invest more deeply in security. This is a moment where you cannot look at a breach and say, okay, well, we've got a month or 2 months or 3 months to figure it out, because these zero-day attacks are getting worse and more infinite thanks to AI. And what that means then is that money has to come from somewhere. So not only are we pulling back on compute tokens from Anthropic because they cost too much, we also have to reduce the budget for those consultants and the other tangential things that we were spending money on as a tech build out. And that is impacting IBM just as much as any other consulting shop that, like I said, has really been coming alongside the company to teach them what to do with that data lake versus the people internal who are actually doing the thing that generates the revenue.
Great analysis, Malcolm, and I want to compliment you really for just ripping the Band-Aid off and saying I'm moving on elsewhere. It's hard to do. Stock was above 300, now it's 220, whatever it is. But here's the important thing that you're telling the viewers. I think this is best dead money for at least the next quarter. At least the next quarter.
It's going to be a V bounce.
Yeah, there's no. I mean, I can't come up with a reason, and you're certainly not presenting one of a catalyst for why it would bounce back. Now, if you're thinking about holding this stock, sure, there are analogs. I could point to Cisco Systems about 4 years ago, which had a rough spot, different reasons. Okay, it was supply chain issues back then. But at that time, I mean, it took many quarters to come out of the penalty box. And you're at least going to have to take a quarter or two of good results for IBM to come out of this penalty box, because this stock was trading at a premium valuation that it hadn't seen in like 20 years or probably more, or maybe even ever. This was a stock, and I remember this because in the 2010s, I was in this stock about 3 times. I may have made some money. If I did, it wasn't a lot. Stock perpetually traded 11 to 13 times. Recently, it got up into the 20s. I'm sorry. I mean, I really regret for those who held it, and now it's down around 17 times, but it's not going higher from here anytime soon.
But then, Malcolm, if this is a microcosm of the overbuild of the token costs, is IBM essentially a canary in the coal mine? Are there other stocks like that just have yet to really disclose results or preliminary results that you expect could kind of be a similar situation?
I think there likely are, but I don't want to get too far ahead of the earnings to say which ones are going to. I think that it's, like I mentioned, I'm focused on ServiceNow. I'm focused on Microsoft. Those are two companies that I think could be similarly impacted because they're similarly situated in some of the offerings. But also they're diverse enough that maybe they don't get hammered the same way. So we'll see. But I think that this is one of those moments where, to the point that Jim's making, you're not jumping by the dip because you think that there's going to be this V-shaped.
Look at Accenture. Put up ACN. Give you a 1-year chart. This is the IBM story, but it happens slow motion.
All right, S&P continues to fade
It's like we're going to be the company that
because we're looking for a bounce again. Late day bounce.
I don't know if we're going to pay.
So Accenture's down 50% for the year or over the last year.
Every week.
I think that at least, like if you're looking at Accenture now, you could say they've already taken their medicine. They've had the pain over the last year. IBM, to your point, was flying high. They've had a couple of releases that have sent the stock up because people are excited about things like their cybersecurity grouping that they just put together. You know, their AI book that I mentioned. And so they were at an all-time high and on their way down from it. Accenture's been sort of waiting in the wings for a while, and maybe there's an opportunity to rotate.
Ironically, if IBM had back all of those hardware businesses they spent 20 years spinning off and selling, the stock would probably look more like Dell. So,
Shannon. No, I was just going to say, I think the other thing that the viewers need to think about is that, you know, we're talking about the potential for a V-shaped recovery. We're talking about where are the catalysts for some of these stocks. This is a really tough quarter to have a tough quarter. Like the expectations are
S&P still fading.
So I think if you want to take something like the IBM or we'll have other disappointments in this earnings season, just be very cognizant of the fact that with earnings expectations so broadly positive and with so many upward revisions, it is potentially going to create a longer time in the penalty box. This is a major penalty, not a minor penalty for these companies.
So now that we have beaten the absolute you-know-what out of IBM, let's talk about what do you do after you've sold? And I want to be helpful to the viewers here and say that there are many sectors. We've just spent 24 minutes talking about technologies. There are many industries that are rallying right now. Look at healthcare again. Look at United Healthcare. Look at the pharmaceuticals. Look at financials. I mean, and we have been talking about financials consistently. But don't feel like you have to stay in technology. You've got to sell IBM and buy Dell or whatever. Like there are entire sectors that are worth looking at.
Well, it sounds like Malcolm actually did stay in tech. After selling IBM, he bought Cerebras.
Yeah, I disagree. Stay in technology. So Cerebras, this one's a little bit of a flyer for me. Okay, so it's a company that is basically proposing to do the exact opposite of what the traditional semiconductor manufacturing process is, where normally you're trying to get as many transistors as you can onto one chip, shrink the whole thing, and get it into smaller and smaller devices. It's the reason that the NVIDIA's latest GPU, the Vera Rubin cluster, not just the GPUs, got like 72 GPUs on it, right? Cerebras is saying, instead of that, give me the biggest chip you got, and I'm going to put as many transistors on it as I can, and there's less latency and less lag between the information being shared between them. Kind of oversimplifying, but basically that's the goal. The reason I say it's a flyer, though, is because their core customer right now is OpenAI. And that's a little bit tenuous position to be in, because I'm also on record saying I think OpenAI is going to be walking back some of those spending commitments we've heard them make at some point this year as they try and get out to an IPO early next year. And so it could be a thing where if Cerebras can't find their next core customer before the end of 2027, where I think that contract with OpenAI is scheduled to fall apart, to mature, then this whole thing goes nowhere. But it's fallen all the way back to its IPO price now. I looked at it as it IPO'd. I was very interested in the concept and the ideas and technology. It's not fully baked yet, and And so that's why I say it's a flyers. I set my high water mark at 160.
All right, Apple, no follow through at the moment.
It has 10% moves to the downside thereafter, and so it's a way to average into it. But I at least wanted to start building the position.
Not a whole lot to do here. Everything's fading. Even Nike looked really good this morning.
Still ahead to set up on Netflix. Earnings coming after the bell today. We have ownership on the desk. We'll debate it. And as we head out, check out data center operator C-Square just making its public debut right here at the NYSE. It priced at $21 a share, currently down about 4%. So kind of part of what we were talking about with regard to CapEx overspending, data center build out, all the questions surrounding AI. Halftime is back in 2 minutes.
Okay, Apple, what are you going to do?
Revisits those areas that's still below that 260.
Okay, S&P, we're going to get a turn here or what? Watch the turn on S&P. Hedge flows at the low. We got support just below. If we got down to 75.25 in the next hour or so, that would be excellent for a trade.
And yes, Kevin, I'm not surprised with you taking the bullish side of the equation here. All right, that's our classic bull v bear debate there. We've got cash tags coming up. The team from Lightfolio joins us to take a look at consumer demand trends for Netflix ahead of its quarterly report, which is due after the close today. Stay right here on Schwab Network. Fast Market will be right back.
Okay, watching for a bounce.
From the New York Stock Exchange. When the market moves, we're on it.
Looking for a bounce.
Strategy and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform.
75.25.
My parents didn't really talk about money at all. In college, everybody around me had money. I didn't want anybody to find out that I wasn't middle class. I was.
Oh, please. Stupid commercials.
Welcome back. Netflix reporting after the bell today. Shares are down 32%, 3 months. Josh, you own Netflix.
Yes.
What are you looking for?
When it broke below 100, I started to buy it back after having been out of it. So this is my personal bias. Anytime I've bought Netflix in one of these moments in time where people have said it's over.
All right, Netflix getting a pop on Josh Brown.
Boss is going to beat them up or Nickelodeon or whatever. I always make money eventually in the stock. I don't think I've timed this one well because rather than starting to buy in the 90s, I could have been buying right here. I just think we've had this daisy chain of unfortunate events, starting with them making a bid for Warner, which they ended up pulling out of. The narrative went from, thank God they're not buying it, to, wait a minute, why did they think they needed to buy it? And now there's like maybe some like potential pressure on the stock because people are afraid they're going to bid too much.
Okay, Microsoft going. There goes Microsoft.
I actually think they should do that deal. It's way better than the Warner deal ever could have been. It's an amazing film library and a lot of other things. Gets them into parks, blah, blah, blah. The bottom line here on tonight's earnings, they have to make the case that the content side away from sports is still solid. all of the talk in the trades, like Variety and like the Hollywood people, there's this huge concern about second seasons for some of their hit shows not connecting with viewers. Their viewership numbers do not look as good relative to what they looked like a year or two ago. Everyone's worried about YouTube. Everyone's worried about lack of engagement with Netflix.
Yeah.
I think it's going to be fine. I don't think churn is moved at all. I think the ad-supported platform will do $3 billion annualized, which is a pretty good run rate for something that didn't exist 2 years ago. And I think their smash hit shows, it's hard to replace Stranger Things. If you all understand.
Who's winning the bet with you and Jenny?
Jenny is winning. So the bet was Netflix and Disney were both at 100, and I said I think Netflix gets to 120 before Disney. She is winning.
I think I glommed onto that. I'll pick up the tip.
Okay, now
if you allow me to come.
The interesting thing about that bet, I don't know if yours care or not. It's not just that she has to buy me the cheeseburger of my choice anywhere in New York. It's that she has to eat one with me. I don't even know if she's aware that she agreed to that at the heat of the moment.
I think there was ice cream involved.
Here's
too,
the thing about Netflix. They've added, in 2 years, they've twice, right? But in that time, they've added 40 to 50 million paid subscribers. This thing's a utility. Nobody's cutting their Netflix subscription anytime soon. So basically buying here at $73 or $74 a share, you're getting in probably...
All right, S&P is trying to turn a corner.
Here's an opportunity to start accumulating.
Little early, but if this does start to turn more substantially, this could be a nice trade. S&P.
So I think that this is an opportunity to start accumulating.
I think of it like a utility too. And just so people have the numbers.
Microsoft turning up.
$6 billion in revenue, 79 cents in earnings is what the street wants to see. That would be 14% top line growth and about 10% earnings growth over the same quarter a year ago. It's at 19 forward PE. It's 42% below its highs. Could it be a bad report? Could the guidance be weak? Totally. I'm not telling you. I think it's a slam dunk. I do think a lot of the risk has been de-risked just given the price action over the last year.
Yeah, but to your point, engagement will be in focus. And interestingly, UBS says it screens as one of the most defensive names in the large cap internet space. So kind of speaking to that utility element of it. Now on to Frank Holland with a CNBC News update. Hi, Frank.
Good afternoon, Leslie. The Trump administration is moving to limit most foreign student visas to a maximum of 4 years, replacing the current policy that generally allows students to remain in the U.S. for the duration of their academic program. Students needing more time would have to apply for extensions. Administration officials say the change is aimed at tightening immigration oversight, while universities warn it could discourage international students from studying in the U.S.
All right, Netflix on the move.
Trump fired Roger Rogan less than an hour after 17 federal judges unanimously appointed him U.S. Attorney for Western Washington. The Department of Justice says the judges failed to consult the administration. Rogoff, a former judge and a veteran prosecutor, says he is considering legal action. The Coast Guard is suspending a search for 3 people still missing after a deadly boat accident in the San Francisco Bay. Officials say about 20 adults, most of them family members, were taking part in a memorial service when a wave struck their vessel. 1 man died, 3 others were hospitalized, and then later released. Leslie, back over to you.
Oh, so sad. Frank, thank you very much. Up next, Mike Santoli joins us with his midday work.
Added some Netflix shares there. Shares. I'm only going to buy shares. Do I have NXFL still? No, I got rid of that. Okay. Nokia. Still down, Nokia. Nike looking better. Microsoft on the move. Microsoft looking good. Okay, Microsoft working. Nice pop. Microsoft. Okay, so don't get tricked on the S&P just yet. We could move a bit lower. You see we're rolling over here. Check out the support is right there. All right, got another 20 handles. Do we turn back up? Just looking at the hedge flows.
We are back on halftime. Senior markets commentator and overtime co-anchor Mike Santoli joins us with his midday word. Mike, what are you looking at?
Well, I mean, Leslie, it's hard not to come in almost every day and look at this market and kind of marvel at the immaculate rotation. It just keeps in gear, keeps working. We have memory stocks. The large cap one's down 30% as a group in 3 weeks. The S&P 500 is within 1% of its high. So we all know how that's happened. Non-tech sectors have worked. And then, of course, Mag 7 was oversold enough to actually get this relief bounce. Apple is going vertical just because it's neither of those other two categories. It's not chips. It's also not overspending on CapEx. Now, I think the question is, where are we going to see the gears grind a little bit, and where this process might falter? Maybe we won't, but it seems as if every single day the dispersion trade just takes over, and that's all we have. And watching things like Microsoft, Amazon, Alphabet, which have been leading a lot of the upside this week, kind of coming up to levels where it's a little bit more of a test. They're coming up to the 50-day moving averages, which are falling. So we'll see if this was more than just kind of rebalancing and resetting after the extremes of the first half of the year.
Yeah. Mike, what would you say is kind of the best course of action for the second half of the year? Do you expect kind of the rotation theme to be something that continues?
I would expect, I think that if you're bullish on the market, what you want is for this to just be an interval, I think, and just have the broadening trade just sort of take up the slack while a lot of the overheated parts of the market cool off. And then if we get more confidence about 2027 CapEx budgets and people are willing to tolerate the spend on the hyperscaler side, then you have AI kind of resume a leadership role, and that probably carries the market higher. It's hard to fight with the earnings growth. I think the concern is, the market is already giving a lot of credit for that earnings growth. The asymmetry seems to be numbers that maybe aren't good enough, even when they're very good, as you see with things like GE today. So, I'm always in the camp that says stay involved, but keep expectations low.
Yeah, even though to your point, the bar is high this earnings season. Mike Santoli, thank you so much. Coming up, Josh Brown's best stocks in the market. He's revisiting a retail winner on the list. That name next.
Okay, S&P is trying to turn. The interesting thing is that the equal weight index compared to the S&P equal weight index is up on the day. So we see rotation into defensive groups like consumer discretionary, healthcare, some of the money coming out of tech. Microsoft's still pushing here. It looks good. What else? Centos looking good. Centos bullish for the economy when Centos is taken off to the upside. Okay, this is a bullish indication. The reason why is because Centos has over 1 million customers worldwide, and it's economically sensitive. When they hire more people, they produce corporate identity programs, uniforms, and materials. So we know when employers are hiring just by virtue of what this stock is telling us. Okay, you might have seen their trucks every once in a while. You see Centos trucks driving around. Okay, I'm sure you've seen these out and about. Okay. So that's what we're looking at right here. Centos, early indications. I just turned in the corner. I guess they had earnings today. Let's go see what they said. Let's see. Centos. Okay, so they beat expectations. They had earnings last night. Let's see. Earnings 129. Okay, they reported 2.91 billion. Estimate was 2.88 billion. Estimate was 24 cents. They came in 5 cents beat. Earnings growth 18%, revenue growth 8.9%. So this is telling you a lot. Provider of corporate identity uniforms, operates in 4 segments: rental uniforms, ancillary products, uniform direct sales, first aid, safety and fire protection services, and document management services. I didn't know they did document management. That's something I was not aware of. They're based out of Cincinnati. Okay, watching S&P for a bounce. Okay, Palantir looking pretty strong. Palantir trying to hold this level just below the opening range high. We could get a run end of day. What I would do is if we get a run end of day, say 2 to 330, 2 to 330, something like that, maybe some day trades in that and take some profits off into strength, getting ready for OPEX tomorrow. That's the way I'm playing it anyway.
We are back with Josh Brown's best stocks in the market. Josh, what are you looking at today?
All right. So we wanted to update people on Target. It's up about 16% from when we wrote it up originally in March. And exactly what the chart was indicating played out. Pull this back a little bit so I can show people what I mean. We were talking about 120 being resistance. The stock is broken.
That's the pre-market high right here. We came right back up to the pre-market high. Okay, we're trying to break through the 50-day.
Comparable sales quarter in 5 quarters. Guided revenue higher, guided earnings per share growth higher for the rest of the year. And they're talking about now investing in new stores, upgrading existing stores. It's been a while since we've seen a Target go on offense. One of the most interesting things that's happened with the stock, Walmart had been just flushing it on every time frame. Month-to-date returns, year-to-date returns, 1 year, 3 year. If you look at the 2 charts now, you can see Target meaningfully catching up. That's, I think, shareholders saying to themselves, okay, Walmart's not the only game in town. We have another massive retailer making AI investments to improve the e-commerce experience, run the business better. And look, here's Walmart pulling back. Now give me Target again. So this remains on the best stocks in the market list. The momentum is not.
Microsoft breaking higher, trying to get through the 50-day.
I think this thing has room. I think 150 is more likely than 120. So I like the risk reward here. And so long as you're moving your stops up, you can stay in the trade.
So is Target actually taking back share from Walmart then with all of these changes? Are we seeing the fruits of that?
It appears that this is more a story about improvement at Target than it is about Target beating up Walmart. I wouldn't say that couldn't happen the longer this goes on for, but Target had a lot to fix. It had a lot of years in the wilderness, it had a management change, and now the investments that they've been making starting to bear fruit in the fundamentals. And what a surprise, the technicals look good right alongside the fundamentals, which is the whole premise of why we write best stocks in the market column for CNBC Pro.
Right. Better check it out. Shannon, you
Okay, Microsoft pushing higher here. Microsoft.
on waning pricing power, which is something we've been talking a lot about, particularly as it pertains to Walmart.
Volume coming in. Microsoft volume.
Kind of combat some of the affordability questions. Yeah, listen, I think there's important differentiation here. If you look at the consumer, we talk a lot about consumer confidence and the disconnect with consumer spending. So this isn't a call on the consumer. This is really a call on a combination of the valuations and the multiple in this sector, along with that waning pricing power. Yes, the lower income consumer is, you know, perhaps
All right, Microsoft breaking out. Look at the volume.
to a greater degree than higher income consumers, and that actually might help Josh's target trade.
Microsoft going here. Microsoft at the 50-day, pushing above the 50-day. Okay. Got earnings next week. Earnings July 29th.
Spending habits look good. Debit, credit card, I mean, it was all very, very solid this quarter. Up next, options action. Oliver Rennick is tracking the big moves in big tech. We're back after this.
Microsoft breaking higher right here. There goes Microsoft. Okay, looks good. There goes Microsoft. Looking good. Microsoft. Okay. Pushing through the 50-day like it's not even there. Volume. What are they saying about Microsoft? Any news here? NVIDIA backed startup fireworks valued at $17.5 billion. Blah, blah, blah. Okay. Microsoft tells sales teams to push its own AI models as cheaper, faster, and easier than OpenAI, Google, and Anthropic, stressing end-to-end integration across Azure, Microsoft 365, Copilot, and Office. Okay, Apple's starting to bounce now. Watch Apple. Okay, it looks good. Microsoft, thank you. Microsoft. Microsoft, go, go, go. Apple. Microsoft, nice little trajectory here. S&P trying to turn the corner. Okay, Microsoft. Nike looking better. McDonald's. Let's see. Nike. McDonald's. Okay, McDonald's reversing off the lows, double bottom on McDonald's. Microsoft continuation.
Hey, Leslie, I've got some really interesting options analysis on the biggest tech companies ahead of earnings season. Using data from nations indexes, we looked at companies whose options fell into a Venn diagram of both expensive, far out of the money calls relative to puts, which tells you how much people are willing to pay for exposure to big rallies, and then compare those ratios to
All right, Apple turning back up. Apple.
2 weeks. That gives us companies where traders think there's not just big upside ahead, but also uniquely big upside compared to how they typically see that.
Okay, nice little bounce in Apple.
Microsoft, Meta, Amazon, Tesla, AMD. Only one chip name and 3, Microsoft, Meta, Tesla, haven't seen a new high all year. So if these options bulls are right, these are great leaders for the market. But judging on recent performance, it would require some very real rotation, Leslie.
All right, Oliver, thank you so much. Oliver Rennick at SIBO. Coming up, more committee moves. Malcolm's ready with a new buy, another new buy. That trade is next.
Okay. S&P is still down 25 handles. Looking for a turn here. S&P looking for a turn. Looks like it's trying to turn. Microsoft moving higher. S&P 500 turning the corner. S&P. Can we get a rally back up? Be a nice rally. That would be a nice rally. Looks like it would turn in the corner. Microsoft S&P 500.
Explore legislating in this space, and we're largely supportive of legislative efforts to target those contracts where they may have insider information, and we do that work on the exchange to prohibit and attack that activity.
Don't miss Bloomberg Crypto Live Tuesday.
Welcome to the world of decentralized finance. Bloomberg is covering all things crypto, the people, the transactions, and the technology. Bloomberg Crypto, Tuesdays only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel of Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Unless I see evidence of a significantly weakening labor market, my focus from here on out will be on inflation. And no matter how you cut it or what measure you want to use, inflation is up this year. Even accounting for the likely temporary direct effects of the oil price shock, it is running at levels inconsistent with the
Looking for the S&P to turn the corner. It's starting to get motor up. Watching hedge flows. Hedge flows turning. Hedge flows are turning.
Welcome back to halftime. We have another committee move to hit. Malcolm, you got some shut.
Yeah, so the commercial insurance space is the sector I think probably will be positively impacted from here on out by AI. And I think that ahead of travelers giving us their earnings and the sell that might happen there and the rotation into Chubb, rather than wait for Chubb to report earnings next week, I thought it was a good idea to go ahead and get in position now for that rotation. But the commercial insurance business is one that I think, like I said, is going to be positively impacted by AI. It's already sort of taken its medicine, so to speak, with some of the bigger payouts they've had from the bigger natural disasters that have happened and everything else. Chubb is one of the premium players in that space. And so I think if you do want to look for a place to rotate to that's not tech, to Jim's point, this is a good place to be looking in the financial sphere that's not just owning another one of the big things.
And Chubb up about 1.4% today. Final trades coming up on halftime.
Are you following the Halftime Report podcast? What are you waiting for? Look for us in your favorite podcasting app. Follow the Halftime Podcast now.
All right, so a nice turn there, S&P. See if we can't see a follow through. Apple turning back up. Apple turning back up. Futures back above the 105. 105 moving average on the 1 minute chart. Microsoft topping out right here. Microsoft.
Exactly to your point, I'm really focused on CapEx and CapEx plans. I'm increasingly focused on identifying the extent to which CapEx is going to be dependent on imported goods from abroad, because that's going to materially change how we end up netting out the effect of that CapEx build out on GDP.
we're subtracting out imports. So we might not see as much of a growth impulse for the headline GDP number as the CapEx plans would imply. We need to get GDP accounting right on that front. And then beyond that, when we see these CapEx plans, a real focus on efficiency gains. The thing that I'm going to be laser focused on in every quarterly earnings call is real gross revenues per employee. There's a lot of attention being paid to whether the implementation of AI is starting to lead to less demand for labor. But it looks to me like a lot of the high-profile layoff announcements that we've seen are at companies that have had declining real gross revenues per employee, and so it almost looks like AI washing.
All right, let's see what hedge flows are going to do here. We're right at VWAP. We're right at VWAP. Hedge flows. Hedge flows trying to turn up a little wicky looking. Let's go to the 5 minute. Okay, it looks a little bit better on the 5 minute. Okay. So first resistance is 75.65. Microsoft pulling back in now.
Customers, employees, and communities. While we've grown in size and presence, we have never forgotten our roots. Giving back to our local communities and funding business development, we help fuel economic growth. Our success is your success. Because to us, this is home. United Bank, member FDIC.
How would you recommend diversification?
S&P cash looking for more upside.
We are back with final trades. Jim, we'll start with you.
Talked about it earlier. Micron, I mean, it's been down today 6%. Tomorrow's probably up 6%. That's the way it's trading.
Malcolm?
Yeah, Rocket Mortgage. Morgan Stanley had nice things to say about them today. I think whenever interest
Apple turning back up.
This will be the biggest beneficiary.
Shannon? Healthcare could be a hedge against any sort of tech sell-off and supported by AI productivity tailwinds. And Josh?
All eyes on Apple. This is the biggest stock in the world, on its way, in my opinion, 400, which I've been talking about for 30 points now.
Okay, Josh pumping Apple right here.
By not having even played, that thesis seems to be what's behind the action of the stock lately.
Not too worried about margin pressures there.
No, I never do though. It's not the kind of thing that I worry too much about.
Not a worry mark right there. Take a look at the markets as we close out the hour. That does it for halftime. The exchange starts right now.
S&P turning back down now. Rejected at VWAP.
As we get more Q2 earnings surprises, I'm Kelly Evans, and welcome to the exchange. Taiwan Semi, the latest chip maker to deliver good results that failed to impress. We saw the same with ASML and Samsung. Memory bearing the brunt of the pain with SanDisk, Micron, Seagate, all sharply lower. All of them close to 30% or more from their 52-week highs. What is working? Flip side is healthcare. A big earnings surprise from UNH, United Health. That's really the only reason the Dow is outperforming today. And as strikes and threats continue in the Middle East, United Airlines says it expects $6 billion in added fuel costs this year. But let's begin with the AI trade. Amid the wild swings in the chip and memory space, our first guest says some of the names have finally been de-risked enough to look attractive. Joining us in our opening exchange is Tom Hancock, portfolio manager of the GMO US Quality ETF. Really glad to check in with you, Tom, at a time like this. Where do you see the opportunities?
Yeah, hi, Kelly. Well, I guess you'd say for us, the big opportunity is the one that's lying in plain sight, which is NVIDIA. We haven't held that stock for a while. We've held other names instead, semi-cap equipment and things like that. But NVIDIA is a stock that basically hasn't outperformed the market year to date. It's up only modestly in absolute terms. It's trading less than 20 times forward earnings. And the way we think about that is, sure, there's some scope for margin erosion. Sure, there's some scope to lose share to custom silicon, but they are still the de facto standard in the industry. And to get a company that can benefit from secular tailwinds at that kind of a multiple, we think it's pretty attractive.
So just to reiterate, as we're showing NVIDIA down about 2.5% there, you're saying, and a lot of people, anecdotally, I hear, are those who weren't early on the AI trade, those who are not tech specialists.
Home Depot turning back up. Home Depot.
Big on NVIDIA in the first place are now going
Just off the best levels of sessions. Home Depot.
Really listen to what you're saying here. You say you've not invested in NVIDIA historically, but you bought it recently because it's de-risked.
Yeah, and it's not that we haven't liked NVIDIA historically. It's just we felt there are better places in the AI ecosystem to invest. The Taiwan Semi that you were mentioning, and the semi-cap equipment companies. You're actually a little bit earlier to get into Broadcom, as we saw the custom silicon that they manufacture taking share. But again, NVIDIA is kind of the elephant out there, the elephant in the room, you might say, and it's kind of odd, frankly, how much it's been neglected. It's really you can see it in stock price volatility too. I think as the sort of retail hot money has kind of moved on more to the memory trade, it's almost too big a stock to be swung by levered ETFs and things like that. So it's just kind of sitting there right for the picking.
And I want to mention also, I have this sense, and maybe you do too, or maybe it's just self-evident that you say you're.
All right, I'm going to take a couple-minute break. I'll be right back.
Like Schneider or the HVAC company Trane that have an AI data center benefit. Wind from build-outs of power infrastructure. Those are both new holdings you say in the ETF. So you can, again, I think it's going to become more and more, easy to find ways that are not just in the memory names to play the AI trade. So I wanted to mention that while also asking you why you're not invested in the memory stocks.
Yeah, and to be clear, some of those power stocks, we actually started a new power infrastructure ETF that focuses on those. So Schneider is an international quality ETF. In terms of the memory stocks, the issue for us with the memory stocks is so much of their profitability is coming really through price. There's such a scarcity in the DRAM chips, the HBM memory chips, that they're able to get kind of whatever price they ask for. And that's obviously great today for them, but that's not a sustainable long-term.
Even if those prices are locked in, which is what the bulls say. They say, yes, it's coming from prices, but those contracts are locked in for years at this point.
Years, but not decades. And we're talking about a couple of years. And there's a pretty, I'd say, unfortunate history about those long-term agreements in the semiconductor industry. They sound great, and then you're often not able to enforce them. So we're actually, I guess we're patient investors, and what we see will happen in a couple of years is there'll be more capacity built out driven by those high prices, just like you would see in a commodity sector. And so we want to invest in some of the companies like the semi-cap equipment companies that would be the beneficiaries of that.
I want to ask you about as they're known, the hyperscalers, the mega cap tech companies are all about to report earnings. You say you still like most of them, and I want to know why. Let me quote what Jeff Curry told us on the show a couple of days ago. His thesis is that these companies are turning themselves into something that looks more like a commodity producer. He said, you start putting steel in the ground, you're getting cyclical. That merits, from his point of view, a 10x PE, and certainly not something in the 30s or higher. So especially as they are all competing with each, I always find the more that they're each bragging about their model being the best, they're reinforcing the case that they're competing in a commoditized industry. And with the balance sheets and capital plans doing what they are, why do you like them so much here?
Let's say the ratio of the models is a little more of an Anthropic OpenAI thing than it is a hyperscaler thing. I guess we have a different view about the hyperscalers is that they aren't selling commoditized infrastructure. Microsoft's products are very diverse, very specialized. They get a lot of even from Amazon to from Microsoft to AWS, that's not an easy switch to do. So the crux to liking these companies is really not that they have physical assets that are differentiated. Microsoft's GPUs aren't better than anyone else's GPUs, but rather what they have around them, the services they offer on top of that. And the hyperscalers are all very unique, different companies. It's easy to bolt them together, but I think it is the differentiation between them that makes them attractive.
Yeah. And it's a little early to be asking, but Anthropic is reportedly going to be public in a couple months' time. What do you think of that? It just depend on the price it ultimately comes to market with?
Yeah, well, price certainly matters, but that would be an IPO we'd be a little bit hesitant about just because we feel like there is a potential for a shakeout in the LLM provider space. And it may prove hard for any of those companies to differentiate from the others and hence command a higher a price for their products. If there's one of them that we would give an advantage to, it'd actually be the one we can invest in now, which is Alphabet. With Gemini, they control more of the vertical stack, so they have a cost of goods margin advantage. They have Alphabet data to trade on, which could be a differentiation. So I don't feel like we need to buy another one right now.
It's a fantastic product. I say as a heavy user of it. Final question then, Tom. Do you want the hyperscalers, let's call them, the ones you like, do you want them to pull back on CapEx, or no? Do you want them to continue or even raise at this point?
I'd say we want them to invest for the long term, and we think they have pretty good visibility into long-term profitability. So we are generally in favor of them continuing to invest. They have better visibility than we do, so I'm not going to listen to what they say if they're pulling back. But I think in general, yes. And maybe my only hesitation to that is if they're really having to pay a lot more dollars for the same thing, e.g. for memory, maybe they should pause until prices come down a little bit. But generally, we're constructive.
All right, Tom, really appreciate it. Thanks. Good to check in with you.
Thank
Tom Hancock from Jeep. By the way, KWH is the new power infrastructure ETF, so got a great ticker there. I just wanted to mention that for folks. Tom Hancock. Meanwhile, Wedbush initiating coverage on nearly 24 tech companies and naming their top picks across the sector, including one under-the-radar name that's up 177% in a year. Let's bring in Yigal Arunian. He's a managing director over there. Yigal, it's great to see you. Wow, so your top mega cap pick is Alphabet, maybe for all of the reasons we were just discussing. Uber, you like. We just did a deal. That's for large cap. Reddit, you like in the mid cap space. Xometry in the small cap space. Just talk us through this here.
Yeah, sure. And thanks for having me. And I think your previous guest really said it well. The thing that differentiates Alphabet among the hyperscalers and generating ROI on their CapEx spend is their end-to-end platform. And I think you can even zero in on one factor, and that's search, where a year ago even. People were expecting the demise of Google search, and the experience has only gotten better. And so their platform, their ability to monetize on that spend is ahead of everyone else. And so we like them for that in that position.
Yeah, and got the Buffett and perimeter. What did you think when you saw that the other day?
Yeah, I thought it made a ton of sense.
Yeah, it does. Yeah. I sometimes I wonder, okay, once everybody sees the same thing, are we missing it, or is this just one of those no-brainers where you say that's the trade for the next decade and you don't really have to worry about it?
Yeah, well, I think that's what makes a market. But a lot of these things have been misunderstood, and you sort of understand where some of the nervousness comes from investors. And there is a lot of capital being spent here. There's debt being raised and equity being raised, and free cash flow being depressed. Almost literally all the profitability of these hyperscalers is being put back in to invest around AI. So it certainly adds some risk.
Yeah.
But we think Google's really well positioned.
I want to skip down. Could be very, very important for the IPOs of Anthropic and OpenAI and those business models. Do you think Reddit ultimately gets more licensing fee income from putting its content on these other AI platforms?
Yeah, absolutely. I think that's the strategy. I think Reddit knows that they've got something critical and a data asset that's really differentiated and powerful. Right? We're moving to a world where more and more we're getting our feedback from AI and chatbots, and people still value real person opinions, and those values and those views are really important as a data asset. So we think Reddit's good as that data, maybe in a different format than it did in the past, but I think they're in a pretty good position there, and that should be a really important opportunity.
Is Xometry an AI play? Your small cap pick?
Everything's an AI play. That was part of our theme around the initiation.
Apple back up to the highs, fading a little bit.
And that's been a big opportunity for them. But for Xometry, they've got a great moat, a really unique business model that's seeing a lot of growth. They entered into a partnership with Siemens that brings them a lot of new customers. Siemens took a minority stake. And so we think just that partnership alone can drive a lot of upside to estimate revisions over the next couple of years. In a business that's pretty hard to replicate in our view.
And finally, Uber's a little controversial. You've got those who see huge potential and others who worry about total disintermediation. You obviously are in the former camp with a $91 price target. And they did this deal with who? Deliveroo? Delivery Hero, thank you.
Delivery Hero, yeah.
Yeah. So what do you think about that?
We really like the deal, and we'll come back to the autonomous vehicle stuff after. So it's a little bit separate than that, at least. This is about scale, right? And Uber's advantage is scale, the ability to cross-sell across their customer base from mobility into restaurant and goods delivery. And this opens up a really big opportunity for them internationally. Those cross-sell customers are 3 to 4 times more valuable for Uber, and they're in a really unique position to be able to do that. So we like the Delivery Hero deal a lot. I think it's going to help their international growth story pretty powerfully. On the AV side, and being displaced by whether it's Tesla or Waymo, we think that in that market there are some players that can do more on their own, but there are other AV partners that need a network, and Uber's not standing still. That launched their autonomous.
All right, the markets are just sitting here,
really built around
marking time.
Helping build a network for some of the mid and long tail of the market. They're going to play a central role, and it's taken a long time for AV to roll out. It's going to take a long time for it to be fully embedded into our roads. And I think Uber plays a critical role over the next number of years in making that happen.
Eagle, thanks for joining us. So your top 4 tech reasons in AI play. So here are some more specific ways to do that. Really appreciate the time. Thanks, Eagle Arunian with Wedbush. Coming up, venture capitalist and political strategist Bradley Tusk. He will weigh in on New York's first in the nation data center moratorium. Is it a good idea? Will more states follow suit? But first, a look at what the interns are saying on Wall Street. Is TikTok still king, or is Instagram making a comeback? The biggest surprise may be a new app taking Gen Z by storm. That reveal coming up on The Exchange.
This is The Exchange on CNBC.
All right, just watching price action chopping around. Hedge flows trying to turn up, just turn back down again. Most stocks are sideways to slightly lower. A few of them are a bit higher, like Apple. Microsoft just faded from the highs.
The numbers are good. Let's just be frank about that. The numbers were strong, better than expected. They raised their guidance, etc. But it is a negative reaction in the market today. I asked them, do you think the negative reaction in TSMC is the cause and the culprit for the weakness in chips today, or is it coincidental and actually the reason that the chip weakness is actually the reason TSMC is lower? He actually thought in his mind TSMC is the culprit. And so the fact that these numbers weren't good enough, the stock is lower, is rattling this whole sector a bit. I think I'm on the other side where this has just been a game of ping pong in this space, and TSMC just happened to have earnings today.
I know. I actually, it's like the chicken or the egg. I think that it's the semiconductor weakness that's bleeding into TSMC. I mean, like I would say the same exact principle I was applying yesterday at ASML, where there's nothing in these numbers that would indicate any concern unless we're going to punish higher capex this quarter. And then if that theme persists, then I will say, okay, sure, then I understand maybe the weakness, because I know that is the spend.
To be fair, though, there's a difference between like a meta capex, which is on these different products, and a TSMC capex, which is like expanding capacity, building out manufacturing facilities, things like that to deliver on the demand. So. And I know a huge part of their CapEx is their expansion in Arizona. So when I hear TSMC's CapEx, I don't see it as worrisome because there probably will be ROI on its thing. It's just how fast is it going to show it? Where there is question marks on the ROI from the Metas, the Alphabets, the Microsofts.
That's true. So you're right. Different stages of the AI, I mean, like broader ecosystem right now, because really you're dependent on TSMC to manufacture all of the most advanced chips. And so you need this company to be not only bringing in big cash, but shelling out big cash because, again, they have that foundry business that is just so unique in its own right. But, I mean, I know it moves lower, but obviously was a strong report today, which we both cannot echo. Now, we will leave it there, though, for the top of our show today. Coming up next, we will chart and trade both Netflix and Intuitive Surgical. Stick around. Chartmaster will be right back.
Microsoft, the bounce. Amazon starting to bounce. Apple bouncing a bit. Not really getting that excited. I would like to take some more profits off the table.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Enter. This place is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place. Come again? Yeah, at Schwab they can do everything. Invest, trade, get full service wealth management, and anything in between. I think I'm gonna be sick. We have to buy that now. Schwab.
Invest your way with Schwab.
Whether you're a bull or bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Welcome back to Next Gen Investing. It's now time for the Chart Master. And today we are discussing two names with earnings out after the close, Netflix as well as Intuitive Surgical. And so joining us is Rick Ducat, our Chart Master, here to break down, of course, all of the key technicals to keep on our radar. Rick, walk us through the latest and greatest from Netflix, which is actually higher today by about 0.4%.
Yeah, a bit of a rocky road for this company that we've seen recently. This whole wrangling with the acquisition of
Microsoft turning back up.
Worthy of a Netflix drama series in its own right here. Anyway, we can see that since we had earnings, we had a significant drop off here. We have connected these subsequent highs several times here. We also have a corresponding, much shorter, upward sloping trend line going across these low points that we hit after our 52-week lows near 70.86. So we can also see here some horizontal levels.
Question for perhaps another day.
Okay.
What data looks stolen?
So what financial market data points? How about that? Thank you, Steve Leisman. Anthropic, meantime, is reportedly moving closer to an IPO, with Bloomberg reporting it could now be as early as October. And while some are skeptical the market can handle yet another mega IPO, some surprising new findings from Wolf Research help illustrate why they might want to strike now. Their annual intern survey shows the third most used app among Gen Z interns, following Instagram and Snapchat, is Claude. Let's bring in Spencer Hannes. He's a senior analyst at Wolf. Spencer, what are they doing with Claude? Welcome.
Yeah, thanks for being here, Kelly. I mean, it's very interesting. We just surveyed our interns at Wolf and then at some of our partner firms across the street. And what we saw was a significant skew towards our interns and people in financial services in general being interested in Claude. And it even showed up as one of the most used apps of all the people that we surveyed.
Okay, Apple about to break higher here.
We thought ChatGPT would have scored a lot better than they did.
Apple's breaking higher. Apple breaking out.
Amazing programming tool, and I use Gemini and maybe some ChatGPT just for the basic stuff? Are they using it for
Apple going.
kind of agentic and programming kinds of tasks?
I mean, in our business, we're using it for model building. You're using it for some written research, using it to crunch data. I think there's also the coding applications as well. So, it's really across the gamut, and it's evolving and getting better month over month as we use the tools, and our interns are using the tools this summer. You can just see the growth in the adoption and in how students are using it today. So it's evolving quickly.
Is TikTok's star fading?
We were surprised by the survey on where TikTok fell. We thought that was going to be, higher than it landed. When we do checks across consumer, TikTok is still one of the fastest growing marketplaces. I cover Walmart and a lot of other retailers, and they're still expected to gain a ton of share. TikTok Shop is one of the areas where a lot of marketplace sellers, for example, are investing in. But yeah, we were surprised by how low TikTok landed here.
Is there any sign, Spencer, that Gen Z is less online? In terms of their consumption? For instance, like you said, it's an excellent point about Walmart and all these companies partnering with influencers. For instance, Instagram's still 63% share, I think. But is there any sign that that's shifting a little bit, as I wonder about kind of TikTok fatigue, Instagram too?
Yeah, look, I think these things come and go, and there's, Facebook was the leader, and now you've seen Instagram take more share. You've seen TikTok becomes, more relevant, and I think these things just continue to be a cycle. And so, yeah, we're definitely seeing things shift. In many schools across the country, there's no phone movements. There's other things that are going on that are impacting, usage of phones. But I don't know if we've seen necessarily, people being less online. I think people are still just as connected as ever. But yeah, there's some pockets of things like, no phones in schools and things like that are emerging.
Well, there's so much more in the survey, but this one in particular jumped out. So I encourage people to try to get their hands on the whole thing. Thanks for doing it, Spencer, and coming on to talk to us about it.
Great. Thanks so much, Kelly. Appreciate it.
Spencer Hannes of Wolf Research. Coming up, June was a great month for home construction, for the ITB ETF, we should say. Its best month in nearly a year. But 85% of its components are in the red for July. And today's housing data doesn't inspire much confidence. We'll look at the latest numbers next.
Say it. There hasn't been a lot of boring earnings reports in Netflix history.
No, I think it was like right after Next Gen launched, they had like their biggest move ever, and it's so permanently in my mind. I mean, the shares created like 40+%.
Yeah, the nice thing is, this defined worst case scenario on this trade, even if that happens again, $200.
Yeah, you could always tell in the names that it feels like you could recall such a substantial earnings, and it wasn't just one quarter either. It was several quarters of huge moves. So we will be watching that one very closely. But now shifting gears into Intuitive Surgical, which does also have earnings out. Now up 2.3% today, and this name has also been in a pretty considerable downtrend as of late.
Apple's going some more.
What we've seen here is going back to our earnings 2 quarters ago. That's where things really started to have this very pronounced downtrend. We had our highs here. You can connect subsequent highs here, duplicate the trend line, put it across the lows. It gives you a pretty good boundaries here for what we've seen in terms of our price activity. Horizontal levels in this case stretch all the way back to this very small gap that we saw before earnings 3 quarters ago here. That matches up with a pronounced low period here, a floor that was established during some more sideways price activity. Then it became a subsequent high. So 450 is that level. We had another notable high water mark near 444. Didn't quite make it to that 450 level. We also have another gap here near 407 and another floor here near about 397. So these are some levels to watch out for in terms of our repeated, floor and ceiling support and resistance activity here. Lows 378.50 is where we hit our low point here for the past 52 weeks. We've had a bit of a bounce since then, but not quite filling the gap either near 407, I noticed, right in this area. So when we also then advance our chart and think about our moving averages, we find ourselves very close to our 5-day EMA in dark blue at this point, right on line with our price activity near about 397. The upside today, the high
Microsoft also trying to turn back up. Microsoft.
That represents a month of trading activity. That comes in near 407.30. Now we can also see that despite this
Above the 50-day, looking for a follow-through. Microsoft.
Here, not really a lot of strong upside bullish momentum here. However, we did break through our red downward sloping trend line. As I said, though, earnings is a pretty bad time to be making decisions based on this particular indicator, so take it with a grain of salt in this case. When we do also finally think about
Apple.
our volume profile study, there is a small pocket of activity around here where we hit our highs of the day between roughly 403 to 409. Most of the trading activity on the chart, though, comes in between here, 433 to 485 or so. Point of control comes in at around 438, 439. So that in itself as well is a notable potential resistance area.
Okay, and again, making a pretty big move even just today without obviously this major earnings catalyst. Another day that is fairly volatile, not even necessarily earnings related, but it's just seeing some massive volatility swings. And so I appreciate it to Rick Ducat for bringing all of the technical setup today as we do approach earnings for these names. Now, as we do look to trade Intuitive Surgical, a very different story than Netflix, Alex.
Yeah, I looked at a bearish example here, but this could just as easily be a bullish example. This is really looking for the stock to move to a point, and that point could be higher, lower, it could be unchanged. That'd be for the person at home who is looking at this, on their own to decide. But for our example, we're looking for a move lower. We're looking for a pretty steep move lower. Looking for a move to 350, and what we looked at here was buying a put calendar below the marketplace here, centered at that 350 strike. Now,
Apple's still moving. Apple's still moving. Microsoft on the move.
Allowing a little bit more time here, allowing these earnings moves to potentially settle in. I elected for this example to sell next Fridays and then buy the July 31st sort of end of the month cycle to define this risk and ultimately create this spread. Now, say you did this for a $2 debit, your max loss.
S&P turning back up.
But most importantly,
S&P turning back up.
Definitely clarify this is a bearish strategy. And
Watch S&P.
Stock is somewhere in this range. If it moves lower, it peaks out at the short strike. But if it moves too much lower, you start to bring in risk to the downside into play as well. So bearish, but bearish to a point, not bearish just in, you get a Netflix down 40% move, this trade probably not going to work either.
You needed to be a bit more range-bound to bearish, it seems, of course, to see that success. And, I think obviously important to outline the parameters of the risk that, when we don't see max losses defined, or of course, the same goes for gains, but obviously preparing for all of the volatility that's earnings in both of those names. But we will leave it there for Chartmaster. Now, coming up next, we will discuss another earnings move, but this time to the upside following a really strong report from J.B. Hunt, as we did see some overall improvement for the transportation company, and analysts now singing JBHT's praises today, up 7%.
For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at @NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Have you ever watched an interview and thought, I wish they had 5 more minutes, or I want to know how they discovered that hidden gem? That's exactly where Market Matters comes in. I'm Marley Hayden, and our podcast is slowing things down. We're going beyond the earnings to get to the heart of the people and companies driving the global economy. If you want the full story, not just the headlines, Market Matters is for you. Subscribe wherever you get your podcasts. Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Apple still pushing.
Hey, Bob. Hey, Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable. Wait, had a stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time. Jim, my financial consultant. I probably met 20 years ago. Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Looking for a bid in the S&P. Look for that to turn up.
Today we are looking at the outsized move to the upside in JB Hunt. After already seeing outperformance this year, this report was enough to clear a relatively high bar and show signs that we were seeing some further cost controls and also some improvements in their just overall trends. So joining us now to discuss a bit further on the earnings event is Sam Badas, host for the Schwab Network. And so Sam, walk us through the report here as JB Hunt has been a real winner consistently and right out of the gate this morning.
Yes, and a very good candidate, you could say, for FOMO today, because you certainly want to be on board this train, don't you, Jenny, with this all-time high that we're seeing today, pardon the pun. But Alex and I were breaking down these numbers yesterday as they came out. It was a very strong report. So you had Q2 profit, 181 million, equivalent to $1.91 per share operating income, 259.5 million up income, 259.5 million, up 32%. It raked in $3.5 billion in revenue here, up 19%, better than estimates. Revenue rose across most segments here. The story with this one is its intermodal dominance. Very much at a time when the competitors out there are struggling with respect to the rising trucking costs. Its intermodal business is its biggest segment. That's really the
Apple's still going. Apple breaking higher.
Those are the numbers that a lot of the analysts are highlighting in their commentary today. I'll get to some of that in a second. But just breaking down this revenue by segment, integrated capacity solutions, so that's kind of business which matches the consumer shipments with third-party carriers. That revenue soared nearly 50%, I should say. Shipments with respect to contract services up 9%, truckload revenue up 35%. It was just the final mile services segment that fell 6%. So as I said, you had pretty much up arrows across the board here as far as revenue breakdown. But coming into this print, just looking at the share price today, up 7.2% right now, as I said, achieving an all-time high right now, 296 and change. Shares were up more than 80% over the last 12 months. So investors were very optimistic going into this report, and I think you really hit the nail on the head there, Jenny. The bar was high. And what this goes to show, I think, guys, is that this earnings season is not just about clearing the bar. It's almost like clearing the bar, doing a somersault, and then landing perfectly. That's what.
Oh, that's stupid. That's dumb. All right. Hope everyone's having a good day. Apple's on the move. I'm your host, Cousin Benny, coming to you from theclosingprint.com. It is Thursday, July 16th. July seasonality working out pretty well for the bulls. The S&P Equal Weight Index, RSP, trading up on the day. RSP trading up on the day. A little bit off the highs of the day, but RSP looking good compared to the S&P, where the big cap tech names hold it back a bit.
Welcome back to the exchange. Data center backlash continues to grow. More than a dozen U.S. states have proposed moratoria to pause their development, with New York becoming the first to pass legislation earlier this week. The president calling that move a terrible decision in a Truth Social post yesterday. Our next guest says the data centers will have to learn to pay their own way. For more, let's bring in Bradley Tusk, the founder of Tusk Ventures. Curious, Bradley, for your take on this. A lot of people think we're going to get to a red state, blue state outcome where the red states will allow or welcome the development. The blue states don't. The red states have cheaper taxes as a result. The blue states don't. Wade into this argument here.
Yeah, I don't think we will for a few reasons. The first is that there are businesses that can choose to situate themselves in one particular state for tax reasons, regulatory reasons, whatever it is, and it works. But data centers, by definition, can't all just be in red states. It doesn't work. They need to be close enough to population centers to be able to power AI in those states. So it can't physically happen that way. And then in terms of the politics, I think that the president is just misreading it, which is that
Apple.
you're seeing AI legislation, regulation pass all over the country. There are states across the country that are passing data center regulation, or at least working on it, and those are red states and blue states. There are a lot of
Stacey's here to pass legislation around regulating AI in terms of chatbot use, mental health, education, insurance. AI is so widely unpopular that politicians across the spectrum are responding.
But in other words, you think that New York is going to have to ultimately move forward with?
Oh, sure, and I think Governor Hochul knows that. Look, for a Democrat, she is very pro-business. So, but with that said, she's also up for re-election this year. And I think what you see in her executive order is a reflection of a few things. One, AI is really unpopular. People think that AI is going to take their jobs, that it's going to raise their electricity prices through data centers, and that it's going to influence their kids in even worse ways than social media has so far. So they're worried about it. It's unpopular. That's true in every kind of segment of the demographics of American society.
But those two things, Bradley, the one on the resource utilization, we were just talking to Vertiv the other day. They say data centers now are closed loop systems. They use less water than a golf course. Yeah. And then on the power question, do we have any data conclusively on whether this is whether and where power bills have gone up?
Yes. Yeah, we have. So you've seen in Northern Virginia, for example, in Ohio, in Pennsylvania, where, especially for the PJM grid, where the data centers did plug in, prices for consumers did go up a lot. In Georgia, that happened, and 40% of the Georgia Public Utility Commission lost their elections because of it. So it's unquestionably an issue. However, I don't think it's really that much of an issue with this. Data centers know that they're going to have to meet their own power. Behind the meter sources of power like nuclear or turbines and things like that, it could mean using more efficient forms of compute that would increase the energy efficiency of it. So there are a lot of ways to solve the problem. And if you read Governor Hochul's executive order, she basically kind of laid out what the
Apple's still pushing.
data centers need to pay their own way when it comes to energy. They need to be able to provide
Starbucks, Nike.
Systems are not particularly complicated, so I think of all the issues, it's not a real one. And then finally, it's just the relationship between data centers and community.
Let's see, Home Depot.
Community, and you need zoning, and you need permitting, and you're going to take up a lot of space. You have to be a good partner to the rest of the community, and you see the related data center builders, for example, starting to do things like, okay, do we help with the property tax abatement? Do we help by modernizing the energy grid? You know, there's a lot to be done here. This is a very solvable problem. I just think right now the anxiety over AI is so great politically that it's just driving a lot of governmental action as a result.
Yeah, no, I take your point that, you know, there's part of this is an effort on their part to go in and explain or use examples. Hey, here's how we could help it, because like you say, they're not an ongoing real job creator. I mean, there's construction jobs to build them, but it's not as if you're putting in something that's going to put, 5,000 people to work necessarily. To the other point, which I think is so fascinating about this backlash over concern about what it's going to do for kids and for learning. I mean, one thing the schools could do is just say, we're going to get technology out of the classroom. And that would go really far, a long ways towards allaying some
S&P back down to the low.
Parents have, but there's no willingness or desire to do so.
Just chopping around below VWAP.
It's interesting, right? Because there's two totally different ways to take what you just said and argue it. So one would be as a way to deal with the concerns that parents have. You can do exactly what you said. On the flip side, and this is just my theory, so it could be wrong. When you think about your favorite teachers when you were growing up, I think you or I would say, well, it's because they were really good teachers and they taught a subject, history, English, whatever it is that I was interested in. And that might, whatever, but that's probably true. But I think there's a third thing that we don't really realize, which is that everyone has...
Okay, hedge flows. Okay, we could come all the way back down to the 75-25 zone. Looks like that's where we're headed. That's a 99 percentile. Markets are fading. All right, we're taking down the low of the day.
It's like if we're half a brain to use more AI in the classroom to help learning, then why would we be against AI data centers? So being against them reveals to me that I think people deep down are saying, I don't really trust that this is going to give us better outcomes. So I just find in different domains we're operating off of implicit assumptions that don't all reflect.
Blah, 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 blah.
Carl. Yeah. Your number one brokers here to
index.
Actually, we invest with Schwab now.
All right, we're looking for a bid. Hasn't come. The markets just continue to fade. Some stocks are still hanging out at the highs, like Apple, just a little profit taking now. Microsoft trying to get back up to the highs. Snowflake.
Invest your way with Schwab. Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern. Morning Movers only on Schwab Network.
Welcome back to Next Gen Investing. It's now time to discuss the latest from SpaceX, which is pulling back today and has now pulled back pretty considerably from its, of course, a recent peak in mid-June, as well as its $135 IPO price. But for more details today, we'd like to welcome in Taha Ahmed, Managing Director of M&A Capital Markets at Post Oak Group. Taha, thanks so much for joining the show today. Now, we have seen, the streets, their initial ratings for
Market's
M&A
fading.
overwhelmingly bullish. But what do you think analysts
Hopefully you get another shot at the highs. Maybe you can reduce a little bit more. That was my plan all day, all week. Reduce exposure into OPEX. Try to collect some cash.
The street is overwhelmingly bullish, and the targets go anywhere from $63 to $800. But with that said, many of the banks that are rating the stock on the higher side of where the market is trading today are generally were sort of part of the offering, and so sort of and generally speaking, the analyst coverage around that remains bullish. They've gone to as high as $800, but the average analyst rating is around $230, $240. And what I would say is that
Microsoft pushing through.
analysts that are really
The 50-day would be nice to see a follow through tomorrow into next week, into earnings.
upcoming and that are supposed to be impacted by this trade, namely the space trade, which is several $100 billion, the connectivity, which SpaceX already has 10-ish million subscribers, and we look to see what the next subscriber base will look like, and that's several $100 billion, trillion-dollar market, and not to mention the whole AI trade, right, which is several $1 trillion or several $100 billion, depending on how you measure it. And so all the analysts and generally the community is basically just trying to factor in SpaceX being even a small or a meaningful player in any one of these markets, which they certainly have the capability, the team, and the expertise to do so. And between the general ratings in the market, if I'm not mistaken, maybe there's just only one or two analysts on the street that have rated the stock below where it's sort of IPO price at the moment.
Yeah, and so Taha, you take all that into account, and it's still, we're just over a month in. This thing's underwater now. Does that kind of throw, not to use this, kind of a pun here, but is that going to throw cold water on sort of the capital markets world a little bit in terms of, mega IPOs? I know we got a couple in the chamber, M&A deals, everything. This was like sort of a big moment for public markets where we had these, essentially mega cap companies on the docket. This was the first one. This was the biggest one. Huge onset, and then kind of the drop. And like I said, now it's underwater.
Yeah, look, here's a couple of things to sort of think about. Like, generally speaking, post-IPO, there's a little bit of pop that happens, and after that, the market, and then the stock cools down a little bit. And so some of the decline there is naturally expected. But at the same time, think about what has happened with just the broader market since the stock IPO, right? Like the whole AI trade, even though it's sort of the trade of 2026, the stocks are cooling down. Market is down generally, and Nvidia's led, Microsoft's led, and all of these big names are sliding. And so a stock whose portion is of their income, and their bigger valuation is driven from AI. And when the AI trace sort of slips, the stock will get impacted. And so, part of it was expected, but part of it is understanding what has happened with the market since then. But at the same time, look, I think the market is also factoring into the mechanical risks that are upcoming, and which is namely to do with the lockout that is expiring on August 6th, and people starting to get ahead of that.
Okay, and so how much really of this optimism is actually like fundamentally driven, or how much of it is really tied to this broader AI investment cycle and demand for technology that frankly a lot of it does not fully exist in its entirety yet?
Yeah, look, I mean, there is a lot of believers in Elon Musk, and that is a very, very big factor into this as well. But at the same time, I definitely want to say that AI is a very big part of this story because other than sort of the defense side of the use case for what's happening in the space, part of these rocket ships are used to transport the compute into the space, and the whole point there is to take the compute make it interorbital and reduce the cost of compute there. And if that happens, then that would be a big tailwind for the business. And so, the market is really driven by the stock. I think is really driven by optimism around the team's ability to execute on these, top 5, I guess, of the most important things in the world right now: connectivity, space, interplanet, transportation, big compute. And so there's still a lot that has to play out, but at the same time, we're betting on the team's ability to execute and make all of these things they have.
So Taha, if I'm hearing what you're saying, essentially, at least for now, the decision from an investment standpoint, or at least a stock price performance, might be more on the belief in whether or not they can execute on these plans, less so like the immediate impact of those plans. Because some of this stuff seems like it might be at least several years away. Is that safe to say?
Yes. I mean, look, I certainly think it might be several years far away from today, but think about, almost all the AI plays that are happening, right? Like any, stock that is under consideration, people are thinking about what the outlook of what the impact of AI would be over the next 5-10 years. And so the expectation for SpaceX is very similar. Now let's put this in perspective, right? Like SpaceX is, call it like $18-20 billion in revenue, and let's see what the latest earnings would be, is trading for around $1.7-ish trillion, maybe just a little lower than that, right? Like that is relative to NVIDIA, that is a $5 trillion company at $216 billion revenue versus, let's say Meta, that is $1.7 trillion in cap with $200 billion in revenue, right? If the stock value generally did not move because, they just have 5% float on the market over, let's say, the next couple of years, and all people did was to let the revenue catch up to that, right? And I understand that there's a lot of people that question that revenue, but let's say that can catch up over time. You can start seeing that the valuation of the company starts rationalizing. What's different about a company like this, and particularly companies that are owned by Elon Musk, right, and his track record of execution, the question really is, what multiple will the market, associate with the earnings coming out of the business as revenue and earnings continue to catch up? Sort of the challenge there is we can always keep rationalizing it versus
details of course, this news coming up next.
All right, we continue to make lower lows and lower highs for now. Apple off the highs, Microsoft just below the highs of the day. Snowflake trying to rise, but futures continue to move a bit lower.
Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com
And on all your favorite streaming services. Schwab Network. Available anytime, anywhere, on any device for free.
Welcome back to Next Gen Investing. It's now time for Under 30, and we are looking at Buckley soaring after Eli Lilly agreed to buy the psychedelic drug maker in a $2.8 billion deal. The move also comes as Washington pushes to speed up FDA review of psychedelic therapies, raising the question of whether Big Pharma is starting to take the space a bit more seriously. So for more details today, let's bring in Jeff Pierce, manager at Charles Schwab. And so Jeff,
S&P, a little short covering here. Maybe we pop back up. We'll see. If you're bullish, you need to get back above VWAP at a minimum. We continue to ride VWAP lower. Since about 12 o'clock, we dropped below. Maybe we'll get one more pop before the end of the day. Hedge flows, they haven't continued selling. So they shut off the sell button, basically, the sell programs. Trying to rise back up.
The upfront price represents about a 40% premium on their 30-day average trading price, but shareholders may receive up to an additional $2.50 a share if certain clinical and regulatory milestones are reached. That would bring the maximum potential to about $9.25. As you pointed out, they mainly focus on these rapid-acting treatments for serious mental health conditions, primarily using psychedelics or the psychedelic-inspired compounds. The company so far is not a traditional revenue-generating pharmaceutical business. Their core value comes from that experimental drug pipeline and the possibility that those treatments will eventually receive approval.
Jeff, it seems like Lilly just has this cash on hand as well, so it seems to be positively received from the street. You think the expansion into kind of a new area makes sense for Lilly as well?
I think so, especially with the cash on hand, as you mentioned. I mean, they already have a major business in diabetes, obesity, oncology, immunology, but this acquisition would expand their neuroscience pipeline, and they also have the ability to buy more ready style companies. Lilly's buying a phase 3 ready program here rather than having to build their entire, platform internally. The treatment-resistant depression is also a major unmet medical need, which gives them certainly an opportunity there. And these treatments could potentially work faster than some of the traditional antidepressants. It could certainly be something that Lilly ends up, certainly benefiting from. They bring the capital. They have the development expertise.
Broadcom, we're going to get back into Broadcom if we could manage to get above the 50-day, but Broadcom keeps getting rejected. It is moving a lot lower. Broadcom got rejected at the 50-day. We said that if we got back above the 50-day, we would consider it. We sold into this push towards the 50-day. For the last 5 days, we've just pulled back now below the 21-day. So nothing to trade there. Apple pulling back now.
stocks under pressure again, 9% plus to the downside for the group. That might be the story once again.
It is. And also, I mean, now seeing NVIDIA pulling back almost 3%, which is contributing to some of that weakness. But we will leave it there for Next Gen Investing for this Thursday. The watch list is coming up next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by JD.
Hims and Hers.
In a row with Investor Checking, you get the award.
Hims and Hers having a bad day, pulling back.
For investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your Investor Checking account is linked to your Schwab One brokerage account, you can manage.
Let's see. SPY. SPY put flies. These expire tomorrow. Could buy some more for 2 weeks out or so. VIX is still pretty low, right? VIX is back up to 16 and change. Still near the lows. Might be worth a shot.
Expert strategy. From the opening bell to the closing bell, we've got you covered. Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute. With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
It's not inside.
NASDAQ.
Data, veteran traders,
Little bounce.
financial journalists, streaming live and on
Imagine a lot of traders are leaning bearish at the moment.
any screen, anywhere.
Let's see if there's any quick bounces. People will take profits.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Good afternoon and welcome to the watch list. I'm Diane King Hall. Coming up on 2 p.m. Eastern here at the New York Stock Exchange. Let's start out with what's coming up on today's show. In our tech spotlight, we'll preview this afternoon's Netflix earnings. Those come after the close and where the company stands in the streaming space. Plus, our panel will break down today's earnings from GE Aerospace and the outlook moving forward. That one coming down to earth today. And in big moves, we'll highlight real options trades from today's session on Intel, Broadcom, and ASE Technology. All right, let's wind down to a check on where markets stand with a couple hours left in the trading day. We're all in the red now. We've been mixed markets doing a bit of a tug of war earlier. Now, when you look under the hood within the S&P 500, not everything's obviously in the red here, but the S&P 500 now lower by just shy of 0.5%. NASDAQ 100 continues to be the weakest link. We're off by 1.5%. We've been watching this pressure across the chip space. The Philly stocks has been under pressure. Semiconductors under pressure. And we've been watching a lot of red there. And NVIDIA, AMD under pressure, memory names under pressure, software space taking a hit as well. Down lower by just 0.25% there, helping over there. We've got United Healthcare doing well off the back of its results. Russell 2000 touch softer. We're off by about 0.2% here. Let's take a look at the heat map right now. You can see where that red is in the tech sector. That's the laggard here, information technology. We've also got some red in industrials right now as well. You do still have more sectors in the green, but in terms of the weighting, it's not enough to offset the pressure that we're seeing within information technology, for instance, because that's obviously got a heavier weighting. So on the plus side, you've got consumer staples, healthcare. No surprise to see that strength in healthcare. United Healthcare, again, one of those stocks that's moving higher today. We've been also watching this move in Abbott. Let's take a look at some of the other price action across asset classes today. Crude oil is actually lower. We're lower by more than 1%, even though we've got that ongoing, now kinetic action, military action between the U.S. and Iran with the escalating tensions over there. Gold lower by 1.5%. We continue to push below 4,000 an ounce. We're sitting at 3,991. Yield on the 10-year ticking up 3 basis points, and maybe that's part of also what we're seeing in terms of this causing some of this risk off move that we're seeing as we get closer to the end of the trading session today. Dollar a little stronger here. Bitcoin lower now by 1.3%. We're below 65,000 here. We are about 2 hours away from the closing bell on Wall Street. Let's take a closer look at today's market moves. Joining me now for more is Tom White, co-host of Fast Market. Tom, before we get into a couple of these individual movers, let's talk about this push and pull we've been watching throughout today's session. We had some earnings strength. Right now, it's not helping as much as we saw earlier. It really does feel like that kind of tug of war, but the sell side is, the selling pressure winning out right now. What are you watching on this front?
Yeah, just the price action right now, Diane. It's not good at this point. We had the Dow and the Russell were positive earlier. Now we're falling into red, and it's getting dragged down by information technology. You mentioned the 11 S&P 500 sectors. We're still positive on about 6 of those. So doing well there. The S&P 500 equal weight's actually positive today. But when you've got the major components within information technology and within the indices down 2% on the day, that's going to weigh on the overall market. It's almost like, hey, everybody was enjoying the S&P 500 rallying to all-time highs led by information technology. Now we're seeing that reverse and go lower due to the fact that information technology, especially chip names and semi-equipment makers, memory chips, have all done pretty poorly over the last couple of weeks here. You look at the SMH down, 4% today, right? It's off nearly 8% this week.
SPY.
Semiconductor index taking it on the chin. And I mentioned this to you earlier. If you look at some of these memory chip stocks, they pulled back anywhere from 30 to 40%.
What are we at?
2 weeks, 3
750.
weeks from their recent all-time highs. But then you take a look at a name like Micron, Diane. That stock's still up 195% this year, up 624% over the last year. So I'm not crying for investors that were getting in this a year ago because they're still doing really well at this point. This is maybe that reset we needed on some of these names that kind of drove us to record highs. Now, the S&P 500 as a whole is still only 1% off its all-time highs. So that's probably a positive thing for investors at this point. You've got the dollar firming up, you've got yields firming up. That's putting pressure on the equity market at this point. But yeah, Diane, I think
SPY continues to move lower.
Earnings,
on 11%, Seagate down 10%, Sandus down more than 12%. Good Lord. And what's interesting, too, really quickly on Western Ditch, JP Morgan Chase sticking their neck out there, raising their price target to 715 and maintaining an overweight rating, even in the wake of what you point out, not just today's weakness, but overall weakness. Let's cross over to Taiwan Semi. This is part of where we saw the pressure coming from when we started today. Still under pressure right now. What's your take, especially when you consider, they had strong results.
Yeah. They did have strong results, 77.4% jump in second quarter profit on a year-over-year basis. That's way past estimates at this point. They raised guidance moving forward. Third quarter revenue is going to be between $44.6 billion and $45.8 billion. Operating profit margins of 56 to 58%. That's really positive. Now, I think a lot of the maybe the pain that we were seeing here today early on, stock wasn't down that much, but compression in current quarter gross margins might have negatively impacted. But this is another one of those names, Diane, that's up, over 110% over the last 2 years. It's had a good run. This is a good report. And if you want to see the health of what all these hyperscalers and big tech companies are spending on CapEx, it all drains down.
All right,
to this one
definitely fading a lot more now.
ASML. But at this, this is a company that produces all the chips for NVIDIA, for Intel, for AMD, for Apple trying to make their own chips. So you have to take that into consideration.
I'm trying to buy some put flies 745, 740, 735 for 21 August. So in the thick of earnings, out a few weeks. Trying to buy 745 is the closest wing. 745, 740 is the center part. All right, so 7045 is right there. 745, 7045 put. What happened there?
Still holding on to a gain, but off the highs of the session. What's your take now that you've had time to kind of process the results more?
Yeah, the turnaround
740, 745, okay.
working pretty well at this point. The stock had dragged down from $630 per share a year and a half ago. Had ran into some trouble in
745, 740, 735. 740 is the center.
2026 adjusted earnings, they expect to be about $19.50 to $20.
There's a hedge.
That's up from the expected $18.25 that they guided for last quarter. But
740.
they're using AI, right? They're allocating $1.5 billion to AI to help streamline their operations at this point. And that's a positive. And that's what investors like to see at this point because it's already coming up. They're trying to shrink membership. They're trying to exit.
735 is the other wing.
While pouring that $1.5 billion.
Fees are going for 20 cents at the moment.
This is a positive, not only on the headline beats on EPS and revenue, but then also you look at guidance moving forward. Maybe this has this turnaround story is righted the ship because they expected a conservative view on that $1.5 billion investment into AI to be a 2-to-1 risk reward to risk, right? But that's conservative at this point. If they can make this work and
735,
some of these contracts that aren't as profitable, this might end up being a home run for UNH.
okay, so this is what I'm trying to buy. Trying to buy this 745, 740, 735 put fly. August 21st. In case we have, that's only about 2% from here, right? If we get down to 740, that's only 2%. Okay, getting a little bounce now. I'm probably going to get a fill. All right, see if we can't get the shorts to cover. Give you an opportunity to reduce your risk if we get a nice bounce out of the markets. We got less than 2 hours to go. An hour and 48 minutes to go. I'm your host, Cousin Benny, coming to you from theclosingprint.com. It's been kind of a boring day. Just exercising some common sense and reducing my exposure. We've had a decent run up over the last few weeks. The last week and a half or so, we've been pretty much range bound at the highs. There is a lot of rotation. You can see it because RSP is actually closing in on a new high, trying to get back to new highs. So there goes the equal weight index. Equal weight index right now is starting to rip back up. Okay, so the S&P is probably going to follow. Oftentimes you'll see this happen. RSP. Shorts covering. Equal weight. All right, equal weight turning back up.
We're back on the watch list. JB Hunt shares traveling higher today after posting an earnings beat, which came after the close Wednesday. Reported revenue growth across most segments of its business. The company stock received price target hikes across the board from many on the sell side. This morning, shares hit a new all-time high. That stock right now continuing to rally. It is up nearly 6%. We're looking at it up better by 5.8%. You can see that steady climb here that we've been watching in this space, adding to the momentum that's seen so far this year. Today's move brings it up to about 50% gain this year on a year-over-year basis, up more than 90%. Meantime, we want to go deep on Netflix. It's got earnings coming up after the bell today in our tech spotlight. Joining us for more is Ken Leon, Director of Research, Global Fundamental Research. Ken, it's good to see you today. Let's talk about the setup going into Netflix. This one's been a difficult stock so far this year to date, on a year-over-year basis. This is one that we looked at once upon a time as the king of streaming. Year to date, the stock is down more than 20%, about 40% on a year-over-year basis. What's it going to take to get it out the mud?
Well, maybe we should have paid attention last year when Reed Hastings, CEO, chairman, decided just to step up as executive chairman. And of course,
Apple dropping off. Apple.
In the last 12 months. And there isn't as much mystery to streaming as there is for AI. So it's a lot more of what's new as far as known knowns. This business is driven by subscriber growth. It's driven by advertising and also efficiencies of scale to generate strong cash flow and earnings. For Netflix, they got to draw the line and generate at least mid-teen organic revenue growth. They have to look more in terms of their programming content costs, which have a run rate about $17 billion every year, and that's shifting much more to live sports rights. So when you look at content, there's plenty of content. The question is, how can you make more money out of this business? This whole area has not been a great area for investors.
Okay, great point. When you look at expectations, consensus, we're looking for earnings per share of 79 cents. Revenue is expected to come in more than $12.5 billion. Does that line up with your expectations?
Well, let's start. I mean, there's over 50 analysts that cover the stock, including me. 37 have a buy. We have right now 115 target price. And essentially what we're looking here is, again, it's not so much the print of the EPS, but really the confidence they have to really drive top line growth, as I mentioned, and also to generate strong cash flow and return on capital. Those are the levers I think Netflix has to use when they tonight or in the press release. It's just not going to be just quarterly earnings estimates.
So let me ask you this: the $115 price target that you mentioned that you're aiming for, they haven't seen that in about a year, basically. Is what
gets it there for you? I know you're talking about what you're looking to see tonight. What gets it there?
Yeah, so I think they certainly have to show confidence of getting at least mid-teen or higher revenue growth. They have to have even higher EBITDA growth and widening margins. We also probably can see them use the $2.8 billion termination fee, fortunately for not buying Warner Brothers Discovery. That could be a special dividend. Likewise, we can see this company probably look for any way to drive shareholder value versus long-term strategic initiatives. That's what's important when you have a stock that has underperformed so much. I think for investors, whether it's institutions or retail, Netflix isn't the growth stock that it was before when it had outsized multiples of valuation. So it's going to be step by step with some of the measures I recommended.
I remember when it was a part of that conversation where we called it FANG stocks, and that was, Netflix was in there, and that was, before the Mag 7. And it still was a strong player, but recently it just has been a different landscape. Do you think that, I imagine now having processed it, that it was wise to walk away from that deal with Warner Brothers Discovery, especially because, I think about, like, the media landscape is going through a period of upheaval and consolidation, so there's going to be more consolidation. But did that make sense to you to walk away from that deal, and could you see them going after a different target?
Well, I think the stock more reacted to why did you step forward in the first place? If you have a great business franchise, you have a dominant position in terms of global streaming and growing pretty well. So why would you shift management focus and capital for anything like?
Okay, Microsoft is turning back up, so Microsoft helping a little bit. Microsoft's trying to break out.
One of the conversations I was having with a guest earlier today was
Microsoft's trying to go again.
And this is, they look at consumer sentiment, obviously that matters in a space like this, that Netflix is becoming just another player in streaming, and where they were seeing an uptick in demand. Now it's more difficult comps for Netflix on a year over year, they pointed out, but HBO Max has more demand right now, whereas you still saw shrinking demand for Netflix.
Go Microsoft, go.
I know you talked about content costs, but some of it is they have to deliver on the content front to pull viewers in. Do they need to do more live sports? What is it that you'd be looking for on the content front?
Yeah, it's a great question. So I think for Netflix specific, just the global count of subscribers doesn't do it, because you have outsized average revenue per subscription monthly out of the US and Europe. So I think looking at those markets, what Netflix has to do is find those incremental areas to delight subscribers in the way that they can. It could be podcasts. It could be some innovation. Not so much trying to just continue to compete with video streaming. Obviously, that's the core business, but it's a crowded field, and one of the growing dominant players is YouTube TV, much larger than some of Netflix's other competitors. So I think overall, what this company has to do is
S&P is probably going to turn back up.
And find ways that they can delight customers.
Nvidia is starting to turn.
You make a great point about YouTube TV. Young folks really love that. All right, Ken, we'll leave our conversation there for today. I know you have to gear up for Netflix later on. That's Ken Leon, Director of Research, CFRA. Coming up, we'll look at the latest news in the crypto space, take a look at Bitcoin and Ethereum and more in our crypto report. Watch this. We'll be right back.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Sometimes, you The same goes for where you invest. Level up and invest smarter with Schwab.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Have you ever watched an interview and thought, I wish they had 5 more minutes, or I want to know how they discovered that hidden gem? That's exactly where Market Matters comes in. I'm Marley Hayden, and our podcast is slowing things down. We're going beyond the earnings to get to the heart of the people and companies driving the global economy. If you want the full story, not just the headlines, Market Matters is for you. Subscribe wherever you get your podcasts.
Okay, S&P bouncing.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution. From options to earnings to volatility plays, we bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market weekdays at noon.
Netflix turning back up. Microsoft looking good. Looks like it wants to go, Microsoft. It's above the 50-day moving average. Nice move above the 50-day. 430 call wall overhead. Apple reversing. Netflix is starting to pop. Netflix is going for a new high. Intel turning back up, so some chips are getting bought off the lows. Intel below 100. Intel below 100.
It's just been nice to see that bounce off of those June lows. I think late June we were down near 58K. So it has been nice to see. I think the difference between the performance of Ethereum and Bitcoin has really been driven by some of the fund flow data that we've seen. Over the past week, we've had about $150 million pour into Ethereum products, while over $125 million was removed from Bitcoin. So I think it's just interesting to see. Nice to see them higher. I would like to see them to continue to go higher, but we'll have to keep an eye on that. You mentioned the risk-off scenario. I think that is where we're at. Geopolitical fracturing, geopolitical issues are what's going to be driving Bitcoin's price, I think, over the near term.
So let's talk about that. Is that a rotation into Ethereum out of Bitcoin? Is that what you are noticing?
It could be. Yeah, it was interesting how the values lined up. We have seen fund flows into. So I was taking a look at hyperliquid hype funds. We have a few other ones. Solana had a nice month so far. So I think it might be a little bit of a rotation out of Bitcoin into some of the other coins.
Okay, into some of the other coins. But let's talk about this move in Ethereum. I mean, that's a big move, double digits so far this month. Does that signal that there's a tailwind happening here that we could see, or a trend we could see continuing?
I do think so. What I'm seeing out of Ethereum is that it's essentially becoming a useful rail for the industry. It's basically the key settlement layer for stable coins, tokenization, and anything related to these AI financial apps. So I think it is.
Market's very slow. Could see a pretty violent short covering rally, or a dump for that matter. I'm hoping for a short covering rally just so I can get out of a few more positions. I did buy some SPY put flies for August 21st. Started with 10 this time. I got in at $2, 23 cents. 23 cents. That's purely a hedge, just in case the markets do, in fact, pull back after OPEX. and earnings aren't that great.
Stabilization, tokenization, etc. What does that mean? Like, is this the next? Like, could you see Ethereum taking over leadership, or do you think Bitcoin will remain the leader within crypto?
That's a tough question. Overall, I would still say that Bitcoin will continue to be the leader in terms of assets under management and those types of things. It just does have that store of value type of a story, the digital gold type narrative. Whether or not those things are true, I think is debatable, but it does still have that sort of story behind it, which Ethereum lacks.
Okay, and then talk to us about the regulatory environment right now with regard to the Clarity Act. What's the latest on where things stand?
Yeah, this one has been interesting to watch over the past few months. The poly market odds for Clarity passing here in 2026 are down at about 36% after being up over 80% in February. Earlier in the week,
Netflix turning back up. Netflix, Josh Brown talking about Netflix during the halftime report on CNBC. I like the idea. I like Netflix for a bounce off of this area. I don't know how long it's going to take, but company makes money. They're going to be reporting earnings, so could be a nice pop.
Essentially would legitimize the president's crypto business rather than regulate it. We're at the crunch time, though. We've got basically between now and the Senate recess in August to see whether or not Republicans can essentially produce a compromise bill that satisfies at least 7, 8, 9 Democrats by that recess.
Time is of the essence here to try to get things done before the recess. Thank you, Adam. That is Adam Lynch, Director, Equity Research, Charles Schwab, with the latest on the price action in crypto, especially for this month. Coming up, our panel will break down today's earnings from GE Aerospace and what lies ahead for the company. We've got that and more when Watch List returns.
Marley Hayden, live from Chicago. We're tracking market movers, earnings reactions, and what traders are watching next. Stream Schwab Network live at schwabnetwork.com.
Enter. This place is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place. Come again? Yeah, at Schwab, they can do everything. Invest, trade, get full service wealth management, and anything in between. I think I'm going to be sick. We have to buy that now.
Invest your way with Schwab. Live from Chicago, this is Trading 360. I'm Marley Hayden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Vardis and connect with me on LinkedIn or Instagram for more.
Enter. This place is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need, All in one place. Yeah, at Schwab, they can do everything. Invest, trade, get full service wealth management, and anything in between.
I think I'm going to be sick.
We have to buy that now.
Invest your way with Schwab.
Welcome back to the Watches of Don King Hall. Let's take a closer look at where markets are trading about 90 minutes before the closing bell on Wall Street. We've got pressure across the board now. We were watching mixed markets earlier, but investors are starting to pull plug more, especially in the tech sector. The S&P 500 lower by 0.5%. You still have more sectors on the plus side than not, but the weighting, the tech sector is a major culprit here. The pressure is on in information technology. To that end, NASDAQ 100 lower by 1.5% right now. The memory names are getting smashed today. Western Digital down about 10%. SanDisk down 10%. Seagate lower by about 9%. The Dow right now off by just about 1/3%. Small cap still near the flat line, but lower by just shy of 0.1%. Want to dive into the latest results for GE Aerospace. That stock coming down to earth despite a better than expected quarter. Joining us now, we want to first bring in Matt Maley, Chief Market Strategist of Miller Tabak and founder of the Maley Report. Matt, thank you so much for joining us today. What the heck is going on here? Gee, it was better than expected. And, I know it's not just about the quarter gone. Just to recap, adjusted EPS 202 topped estimates. Revenue increasing 21%, more than $13 billion. They raised their outlook. The stock is down 6%. How do I make sense of this?
It's hard to. I mean, a lot of people are talking about it's a classic buy the rumor, sell the news reaction. I mean, the stock has actually been a little bit weak the last few days, but it has had a great run this year. But it does follow with what we've seen in a lot of these technology stocks over the last several weeks. They reported fabulous numbers and in many cases good guidance as well, and yet the stocks have fallen off. I mean, there are some issues. We're talking about some of these supply chain issues that are still giving the company some problems, especially now with the renewed tensions in the Middle East. But it's just very hard for me to fault this earnings report in any kind of major way. And so it just shows that people are getting nervous after this huge run that we've seen, and that with interest rates really still near the high end. I mean, basically at the highest level they've been in over a year, except for just a few days. People are looking for a little bit more, so it's a little bit nerve-wracking. But it does tend to happen in the third quarter of a midterm election year, so maybe it's a seasonality thing as well.
Okay, Matt, I want to bring Mark Gibbons into the conversation. Joining us now, we've got Mark Gibbons, CIO of Gibbons Capital Management. Mark, I want to give you a chance to answer the question I just asked Matt. This is about, the reaction to GE's results. He says it's a classic case of buy the rumor, sell the news potentially here. Because, look, it's better than expected. They raised expectations. And to me, things look good, but what's your take?
Yeah, I would have to agree with both of you. So, beat on top line, beat on bottom line, raise guidance. And, as the previous commentator said, we are in this environment where very, very good earnings just don't seem to be enough to drive the price higher. I mean, the overall business looked great. You looked at the commercial side, you looked at the defense side, revenue growth around 20%. Performance on the quarter was, pretty superb. And I think with the shares, when you look at them as far as on a valuation basis, they are trading in like the mid-40s based on forward earnings. So they are a little bit up there, but the quarter itself was great. I think it's just, expectations coming in. So that's kind of where we are as far as the stock price.
Matt, I want to go back to you. You talked about the supply chain. Now, look, there's been some improvement on that. And, for a while, the supply chain constraints just held the industry back. What would you be looking for to, kind of suss out for sure if this is a tailwind?
Yeah, I mean, it's funny because the people are kind of citing supply chain concerns a little bit. And I think it's really because they're looking for something. Because like, geez, the stock's down. I got to come up with some sort of reason. But there are these, these situations where tensions are getting a little bit bigger in several areas of the world, not just in the Middle East. And so people are concerned about that. But it's a situation where I think that the overall market has built in a lot of fraud. The expectations had gotten to a level for earnings that were so high they're almost impossible to meet. I mean, you're talking about the bar being so high. I think that's
All right, SPY another new low.
we continue to see this as we move through earnings season. Now that it seems to be spreading not just from the tech stocks, but from some other areas, with the exception of maybe the bank stocks.
Microsoft still pushing.
Market as we move through the rest of the month.
Okay, Microsoft still pushing up a bit. Microsoft. Let's see, Microsoft. Okay, trying to break the new highs. Microsoft having a pretty good day. Above the 50-day. Bollinger Band's opening up. It's a good shot that Microsoft could continue into earnings. The way things are going so far. Looks pretty good. Tesla turning. Microsoft. Apple turning back up. Apple also turning back up. Okay, nice little dip. That was a nice little pop to the highs. Got sold. Microsoft.
Good to see both of you, Matt. I love talking to you. Haven't talked to you in a while. Coming up, look at what's going on in the S&P 500 sector action in today's trading session. We've got Kevin Hinks joining us. Plus, an ETF that's trying to help investors fight inflation. Watch this. Will return after this short break.
Pretty good homecoming for the Oslo residents with Norway team coming back. Man, there's a lot of people showed up to celebrate. Norway. That's pretty cool. Love seeing that. Apple's still trying to push a little bit higher. Netflix up near the highs of the session. S&P, no go. It just continues to drop off here. So, which is kind of unusual. Okay. All right, that was a nice little pop into these highs here, RSP. But that was just some short covering, it looks like. S&P continues its trend lower.
Welcome back to the Watch with Dan King Hall coming to you live from the New York Stock Exchange. Time now to take a look at sectors that are moving markets into the close. Joining me now is Kevin Hinks, co-host of Fast Market. He's over there at the CBOE.
All right, VIX gaining some ground there. VIX, I got the VIX August 22s. VIX August 22s. Okay, we're starting to get some bid today and yesterday in VIX.
into consumer discretionary, and so the pie of sectors that are down getting a little bigger, Diane, into the late into the trading day here.
And then when we look at some of that red on the heat map there, that pressure, the tech sector really stands out. As you mentioned, the equal weight still holding up, but the pressure is really on in the tech sector. You know, I feel like we can't ignore what we're seeing in memory. What's your thought on that?
Yeah, I like to buy some Intel down here. I go out maybe leaps, maybe about a year from now. So that theta doesn't kick in isn't an issue. Seems pretty cheap down here, Intel. Probably going to take a little while to bounce because all tech stocks, all the semis in particular are down. Broadcom was similar fate. Micron at the lows. Oracle, dead weight Oracle. Netflix with earnings. Earnings play. They're only looking at 5%. They're only looking at a 5% move into Netflix. So after the close today, estimate was 78 cents. I'd love them to come in at $1.78. 12 billion, they'll probably come in at a higher number.
A decline of about 6% in gasoline, or in energy rather, about 10% on gas on the month. So we do still see a lot of volatility in that energy space and energy inflation. Trailing inflation still 3.5% headline, 2.6% core, still above the Fed's target. So no matter how you cut it, we still are seeing inflation here. So that's the backdrop that we have for where we're seeing a lot of investors looking for equity-based income, looking for income and growth that can potentially outpace inflation over time.
75.25. Okay, you can see what's there. 75.25. 99%. 99% below that. 75.20 and 75.15. 75.25. 75.20. And 75.15, all 99 percentiles.
Equity-based income. It's a derivative income type strategy. Right now, paying about 14% income on a monthly basis. Most of that income is characterized as return of capital, really tax-efficient income. But the key is it's tied to the equity markets rather than things like credit or duration. So it allows you to potentially outpace inflation over time. If you're a retiree and you're at a 3.5% inflationary clip, your income may be fixed, your net worth.
Apple still climbing.
And so you're doubling your need every 20 years.
All right, so we could bounce soon, turn into a nice rally. Mean reversion, how far can we go with mean reversion back to VWAP? Let's take a look. Okay, let's take a look. S&P 500 for mean reversion, that would bring us back to 75.50. 75.50. If we can get back to VWAP, S&P.
Tied to a custom index, a custom S&P 500 index. So what that means is every month you're going to get paid as long as the equity markets don't fall by a significant amount. So in sum, you're trading deep equity market tail risk for a really high and stable coupon. If you look at the index that we are trading on swap, we trade that with JP Morgan. If you look historically, you would have received about 97% of those coupons, and only only breached a few of those barriers as a result of the global financial crisis. So it was built by design to withstand, most market environments. But the severe sustained decline is the risk that you're taking on in exchange for that high stable income in the rest of those market environments. We have CAIE, the S&P 500 base version. CAIQ is paying about 18%. That's tied to the NASDAQ 100 version. And then for those who may be looking for amplified growth over time, think of maybe a younger person who has time on their side. You can seek to do even better than the S&P 500. Think about how fast housing prices have gone up for those younger investors looking to get into the housing market. You've got to well more than outpace inflation. So being able to outpace the market's important too. Cage is a strategy that's designed for that.
All right, and that one's not for everyone. Again, that one's a growth one, CAGE. All right, Matt, we'll have to leave it there for time. This is Matt Kaufman. He's the global head of ETFs of Calamos Investments. Thank you, Matt. Coming up, we'll take a closer look at some large options trades to watch in the market. Rick Ducat will join us with a closer look at big moves for Intel, Broadcom, and ASE Technology. The watch list.
All right, starting to see a little bit of a potential reversal here. Watch the moving averages. Let's go to the 3-minute time frame for the evening session. 3 minute. You see that turn sustained, not like the last two times we tried to turn up and got rejected. Rolled right over. Since about 1:30 or so, we rolled over a couple of times at the moving averages. Need to see this start to trend if you're bullish. We'll probably see some short covering. That's about it. Okay, Tesla turning. Tesla's turning nicely. Might have a trade on Tesla. Back above VWAP, Tesla. Okay, we're right here on the spinning top. I don't really feel like putting a lot of risk out there right now. I've been bringing some things back in, taking some profits off the table, leaving a few runners on, like Apple and Microsoft. Netflix got shares, added some shares. I know we have earnings tonight. I can't see us much lower than this. So it'll be a nice opportunity if Netflix starts to rally off of these levels back to 80, 90, 100 would be nice.
I'm Sam Barnes live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Welcome back to the watch list. Time now for big moves where we highlight outsized options trades taking place in the market.
All right, got a nice little rally on Apple right now. Apple rally. Apple evening rally.
Watching pressure on the sector all day. Today has gotten worse as we get closer to the close of trading. Intel down more than 30% since hitting its all-time high back on June 30th. Today is down 6%. What stood out today in the options market?
Yeah, kind of an interesting, interesting day here. We saw that Taiwan Semi had earnings here. Not really maybe the results the bulls were looking for specifically in terms of the movement after the fact here. But not a lot of specific news for these names in particular here, so I'll just jump right into the trades. The first one, Intel, was two separate trades here together done at the same time, plus 5,066, July 24th, 104 strikes.
All right, Apple back up. Apple going. Okay, Apple rips this higher. It would be nice. Two.
Debit here. So that comes out to a $4.6 million debit paid here for this Texas hedge style of trade here. Texas hedge is a kind of a tongue-in-cheek name for when you have a double directional position in this case. This one here as well, we can see that, as is the case with all long calls, max profit potentially unlimited here. The break even for both of these trades together.
Good area for a bounce. If it doesn't, market's in trouble.
Expected move days out, about 15.5% here. So this one would be near the upper edge of what the market is expecting for the potential move here. In terms of the volume, this trade, the total volume was more than 528,000 at the time I checked here. So only about 2% or so of the total volume. The sizzle for Intel today, 1.4, so 1.4 times the 5-day moving average of options volume. As I usually try to do too, all these trades today are indeed opening trades, the volume greater than the open interest in all cases.
Okay, let's stick with the tech sector. Broadcom on your list today. Now, it's still up 35% year over year, but it's down nearly 25% since June 3rd. Talk us through what caught your eye in this big move today.
Well, this one was the largest in terms of the quantity of options, as well as the amount of money involved here. So,
okay, there goes Apple.
Trade here in Broadcom, plus 26,000 October 16th, 440 strike calls, and a 2212 debit here. So bullish outlook here. This is our longest.
Okay, Apple, nice little pop there.
A whopping $57.51 million debit paid here for what is once again an opening trade. So again, unlimited max profit potentially here. This one also was noteworthy to me because the expected move versus the break even 462.12. The expected move, is right around the same point. The break even 22.6% away. The expected move only 23%. So very little room for error in this particular trade, kind of right on the edge of that boundary. Looking for perhaps a bigger than expected possible move during the next few months here. In terms of the trade volume versus the day's total volume here, 26,000 contracts. The total volume 223,000 at the time I checked here. That equates to about 11.5% or so. So a very sizable amount of the day's trading activity in Broadcom was this single trade here. The sizzle today came in at 1.6, so 1.6 times the 5-day moving average of options volume here in the standard.
Let's talk about ASE Technologies. The ADR is up more than 100% so far this year. It is under some pressure as well today. What trade stood out?
Right, so another semiconductor company, perhaps a lesser-known member of the group. They work on semiconductor manufacturing, packaging, and testing here. They also had earnings on July 30th. They hit their all-time high a couple weeks ago. They're up 282% this year, so maybe a name worth paying attention to if you never heard of it here. But the trading question, minus 10,858, August 21st, 42.5, 47.5 call vertical at 130 credit. So a short call vertical here, neutral to bearish outlook here, unlike our previous two examples here. This one's kind of in the middle in terms of duration, 36 days out. $1.41 million credit received would be that max profit here versus a potential max loss of about $4 billion or so. So this one, the break even 43.8, 9.5% to the upside. The expected move is a range of about 24%. So well within that range is this potential break.
No bounce yet. All right, Microsoft is going here. Microsoft on the move. Okay, Apple's at the highs. Microsoft keeps going. Microsoft breaking out new high of the day.
Well, I appreciate the theme today, especially given that the rout in the chip makers is causing pressure across the board, and that's where we're seeing the most pain. Thank you, Rick. That's Rick Ducat, our lead of market technician, or who I like to call the Duke of Data. We've got markets under pressure as we get closer to the finish line on Wall Street. Thank you so much for joining us today on the watch list. I'm Diane King Hall. Download the Schwab Network app. It's available in the App Store. Tune in 24/7 on SchwabNetwork.com. Stay with us. You've got Market on Close with Sam Connors up next.
Okay, Snowflake rolling over. Apple still pushing. Microsoft pushing a bit more. Microsoft. Where are you, Microsoft?
With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location.
Microsoft continuation. Looks good. Wow. Doing really well here. Microsoft. Look at that run today. That's a nice run off the lows. Opening range high. Okay.
Welcome to Schwab Network, where real-time market coverage is expert strategy. From the opening bell to the closing bell, we've got you covered.
Apple's about to go here. Apple.
My point is that they're getting a higher rate of change in sales based on their guidance without the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7,
Apple.
any screen, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years. Through purchasing up houses, opening up our business, having children.
All right, looks good. Microsoft, Netflix. Netflix earnings. Okay, Netflix earnings. Okay, let's see. Netflix, NFL, Netflix.
It's 3 p.m. here on Wall Street. This is Market on Close. I'm Sam Barnes, coming to you live from the floor of the New York Stock Exchange. Let's take a look at what is coming up on today's show. We'll be joined by the team from the NASDAQ to discuss trends in market volatility in the options market. Then after the close, we'll break down earnings from Netflix, and we'll close out the show with a breakdown of TSMC's earnings and what's reported.
Microsoft looks good.
Roller coaster ride continues here. We are seeing money coming out of chips, but heading home in the rest of the market. Earlier this morning, 10 out of 11 sectors were higher, but technology was the only laggard despite a good report from TSMC. Market pundits are pointing to a number of factors: profit taking in a crowded trade, and a few marginally bearish signals around memory pricing and peak margins. You had a tough session for the South Korean equity.
Netflix trying to break out. Going into earnings tonight. Okay. Netflix. Apple. Apple looks good. Microsoft looks good. To be clear, I'm trying to clear the deck a little bit. Short-term options. Trying to clear the deck, trying to reduce my exposure into OPEX. I've been doing that for the last couple of days. What's today? Tuesday, Thursday? Since Tuesday, actually. Last week, we took off some Broadcom, got rejected at the 50-day. So last week, we took it off as it approached the 50-day. So we got rid of that position. Looking for a re-entry in Broadcom at some point. Intel, I'm looking for Intel. I'm looking for something on Intel, but what I'd like to buy may not be interesting to some people. I'm thinking about buying like the 100 strike call and buy something like, say, in January of 2028, more than a year from now, right? So I don't have to worry about it. Yeah, it'll probably move a bit lower, but that's okay. It's something I'm going to put in my longer term account. Okay, Tesla's turning back up. Tesla, kind of an ugly chart, Tesla. Not really that interesting. Netflix got earnings. Okay, so you could sell, this is supposed to move like 5%. So you could sell some premium, say maybe 80, sell the 80, 85, and maybe put wise sell the 65, 60, something like that. Iron Condor. Probably get about $1 for that. Let's see, Netflix. Let me just check out Netflix, see how much that's going for. It'd be nice to blow this out. Netflix. Okay, so Netflix. Obviously, I wouldn't do tomorrow. I would do. Let me see here. Next Friday. The 24th, July 20, maybe the 31st. What about the 31st? Selling some premium. Let's see. Selling an Iron Condor. Yeah, some decent earnings. Decent. Okay, so 5%. I believe it's still 5%. 5% would be about what, 350 or so. Sell an Iron Condor. Calls. 80.
Isn't awful here for a name that still is hanging on to a 34% run in 2026. And so, overarchingly so,
80, 85.
Takeaway that drove a lot of today's pressure was tied to their rising costs. But let's start with what went well. So they did see record profit, as well as earnings that significantly beat, and they raised their full year growth guidance. The AI spending boom continues from customers like NVIDIA that's driving right now unprecedented demand.
Just looking at an Iron Condor. Oh, that's pretty interesting. They're $1.36 credit.
So revenue came in at $40.2 billion. That rose 36% from last year. The income surged another 77.4%, making it their fifth consecutive quarter of record profits. Management also again raised their 2026 revenue growth outlook to slightly above 40%. Obviously, signaling an acceleration.
Okay, I sold an Iron Condor on Netflix. 80, 85 on the upside, 65, 60 on the downside for $1.30 and change. Filled orders. Okay, so $1.35. It's got a 5% move figured in, so 350. Even a 10% move would be $7. $7 would put me at an 81. Down below, that would put me at 64. I don't see a 10% move. Let me just go check one more time. So I can always adjust this trade if I screwed up. Got plenty of time. Let's see. Calendar. Netflix. Okay, they got a 7.5% move now. Okay, so it's creeped up to 7.5%. Netflix. Okay, I'd love to see it up at 80 though. let's see. Okay, so Netflix, 7.5% for earnings. S&P continues to make new lows, so no bounce yet. Okay, Netflix just dropped off there. Okay.
Seems like no matter how good of numbers the airlines put up, we always want to have the skepticism. I think because of the influx and the uncertainty tied to, of course, oil prices. And right now, I mean, crude oil has surged above, at least earlier today, these futures were above 80 a barrel. So that is continued to be, I think, a major overhang. But I mean, they still beat expectations. Adjusted earnings easily surpassing forecasts. Revenue of $17.67 billion, also beating forecasts, and they raised their full year adjusted earnings guidance to $9 to $11 a share, lifting their lower end of the previously given $7 to $11 share range. Revenue that was strong across the business. Premium revenues climbed 16%. Very similar themes to what we talked about with Delta. Business revenue also rose another 27%, and cargo revenue was up 23%. Loyalty revenue also climbed another 11% year over year. So all of those figures, double-digit gains, with overall operating leverage rising 16% and yields increased another 12%, which actually shows really strong pricing power despite, again, higher fares as a result of mounting fuel costs. Management expects to recover about 80 to 90% of those higher fuel costs in the third quarter and 100% by the year end, suggesting that demand remains relatively resilient. So fuel, again, is really the major issue. They do estimate roughly $6 billion in additional fuel costs in 2026 versus the expectations at the start of the year. Fuel expenses surged 84% year over year, so obviously weighing into profitability. But despite this beat, net income fell more than 17% year over year. And it doesn't seem like right now the debate is really fuel. Investors are overarchingly encouraged by the fact they've been able to offset a lot of those cost increases through higher fares and yield growth, but the outlook has remained heavily dependent on, frankly, oil prices and how the Middle East tensions evolve. And so that does seem like it's not going to be resolved, obviously, anytime in the next several weeks. It's more of a months-long story, but obviously supply chain effects will last even longer. The real positive takeaway, though, is that premium appetite for spending, especially in tourism, from two now major airlines is intact. And so I like to see themes across the airlines. We'll see if, obviously, American Airlines, though, is able to see something similar because in the past, Delta and United have really...
All right, Microsoft just pulled back. A little profit taking. Apple, continuation on Apple, just keeps going. Apple 335s are going to be in the money here shortly. 335s. S&P, no bounce. Interesting.
And so we've seen this encouragement really by the acceleration of these LEAP engine deliveries, as well as a growing backlog and improving defense demand. So they delivered again a clean beat. We we saw orders rise 17%, highlighting this continued demand across both commercial aviation and defense markets. Now, commercial engines and services is a bit of a mixed picture because that segment does remain to be their growth engine. It did see revenue climb 27% from last year, driven by some
Apple's still pushing. I wouldn't chase Apple. You know, a better opportunity probably next week, depending on how we open tomorrow. All the New York FANGs except for Apple, Netflix just pulled back a little bit. Tesla's turning back up a little bit. Nvidia trying to bounce, and Microsoft just off the highs. So let's look at the New York FANG. So if you're frustrated right now, if you're frustrated right now, we're right back in the middle of Monday, Tuesday price action. We're right in the same area where we left off last week. So I haven't made much progress. We pushed higher yesterday, got up there this morning, pulled back in. Looked like we were going to follow through earlier. S&P 500 as well hasn't gone anywhere. We're in the lower half of this little tight range. Okay, so we're basically in a lower part of this range. We got this high right here. Okay, and we've just been kind of sitting right inside of this little range. Last couple of days, it's been right there. 1, 2, 3, 4, 5, 6 days just banging around in here. So do we break to the upside tomorrow or to the downside? Hard to say. Looks like we're headed down towards the 50-day. So I bought some put flies. I bought some put flies, 745, 740, 735. That'll protect my downside. I got 10 of those this time instead of 5. I have some that also that expire tomorrow. They're probably, I don't know, depends on how we open. Those will probably evaporate. These are only hedges. I got VIX calls just in case we get a spike over the next week or so. If we have a drawdown, my fingers are crossed that we don't have a drawdown, but I want to have protection just in case. It's cheap protection. I bought more put flies that expire in August the 21st. Those were $23 a piece. Got 10 of those, so $230 expense or debit. Maximum profit is more than 10 to 1. I don't want that to happen. I would rather all my remaining longs that I haven't had a chance to take off completely to rally. July is seasonally a strong month, so we're still looking for some follow through. Maybe we're pleasantly surprised and Netflix can be up at 80 tomorrow, and we get a reaction from the markets. Maybe the chips get bought. I'd like to buy some Intel. Leaps out in 2028. Why so far out, Penny? Because I don't want theta to be a problem. I can't see this moving much lower, maybe 90. The 200 days down at 64. That would be crazy if it got down there. Still looking for short covering. Reaction so strong that has since faded a bit as the space does still remain, again, fairly challenged. There's a bit of that government overhang where we could see policy change and then things very quickly for a company that is as exposed to... What is crude oil doing? USO? That's still higher? All right. USO crude oil rolling over a bit. The markets are like saying, how much more can Iran take? Doesn't look like we're going to get the recent highs back. We're not going to get back above $100 a barrel. And yes, we did. We didn't think we'd get back above $100 a barrel. I thought we were going to drop below last week, but it didn't happen. Continue to roll back up. Brent crude. Brent. Okay, Brent. As of yesterday's close. Crude. CL. Crude oil futures. $79 a barrel. All right, so USO's up there, but all right, watching Apple at the high. Two big days for Apple. If you got profits up here, I would reduce my exposure. If we follow through tomorrow, great. You know, you missed a little bit, but OPEX tomorrow. S&P just keeps moving lower. This is crazy. No bounce. So that's not a good thing. That's not a good thing. We're not getting a bounce like I thought we would. 75.20. A lot of selling pressure. A lot of selling pressure, S&P. So yesterday it was the Qs. What are the Qs doing right now? The Qs also at the lows. Okay. All right, so like what I was saying before is if you're frustrated, it's because price action is in this tight group. It hasn't gone anywhere for over a couple of weeks, really. If you look at last week's lows, we touched the 50-day. Touched the 50-day. On Wednesday, bounce, Thursday, Friday. So can we come down to the 50-day? Sure. All right, let's throw some targets here. Some are looking for a 5 to 10% pullback. So 5% would be right around 7,200. Okay, 2.5% would be the 50-day. This recent low, I should say, when we touch the 50 days, about 2.25%, 2.5%. So, yeah. So this is frustrating because we haven't made much progress. Although a lot of calls, a lot of individual stocks have done very well. So that's why I want to take these positions off. Cash in. Because we haven't moved much on the index, if we do have a pullback with Core 1M down where it is, I will have collected that premium, just put it away. However, if we bounce and we break out, I lose out on a bit. I don't care if I lose out on a little bit. I just don't want a big drawdown. A 5 to 10% drawdown would be pretty significant. So if we got down to 7,200, a lot of people would be howling out there because they've had, you've had the April through May run up. And then since May, we haven't done much of anything. We made a higher low, lower highs inside of the upper half of the Bollinger Band. So that's a good thing. Technically speaking, we're in the upper half of the Bollinger Band. So the odds are for long as 50 RSI stays above 50, odds are that we're going to stay up here. A lot of you are positioning for downside. I have a hedge, put flies. That's about it for now. I have VIX calls just in case we do get a spike. Something happens over in Iran or whatever, unexpected. I don't know how much firepower they have left. There's a bounty on President Trump's head, from what I understand. Oh, boy. They got balls, I got to tell you. They sure developed some big cojones since 47 years ago. I remember hanging out with my friends, people, next door neighbors, when I was going to college. That's hard to believe it's been that long. Crazy, right? They were Iranians that lived next door. Really nice people, very nice people. I forget what they called the barbecue that they made, but it was really tasty with tzatziki sauce and I don't want to call it naan, but it's something like naan. Vegetables, Turkish beer. That was fun to check out. Switch beers. Let them have the the Bud Light. Because I was a cheap student. Anyway, we got a few minutes left to go. It is 3:24, and no life in the indices for now. People just selling. Okay, so if you played the downside, congrats. We got a brief bounce in the equal weight, and that's just hanging out at the high. So you know exactly what's happening here. If the equal weight is up here, and the S&P is down where it is, then you know it's the New York Fangs that are hurting, and a lot of the tech stocks, a lot of the big names that weigh down the S&P 500. Completely different look. S&P 500 and S&P equal weight. So the good thing about this is that if you're bullish, it's a bit of a positive. Let's look at the New York Stock Exchange, NYSE. NYSE. Okay, we're still up here at the highs above the 21-day. I don't know. I don't have that much concern. I just have hedges and that's it. And reduce my exposure. I know I beat that to death. So if things go the way I think it's going to go, we'll probably have a little bit of weakness into August. And then at some point in August, maybe after the 15th, after the middle of the month, we start to see institutions coming in and start buying because they got to beat the S&P for their bonuses. My buddies that work for UBS, one year they told me what their bonus was, and I almost fell out of my chair. Six digits has a big bonus. Big bonuses. All right, Apple is starting to turn down from the highs now. Okay, so the bears have it today. The bears have it. SPX, bears have it. Okay, so 2 bearish days. MACD's crossing. S&P 500. MACD is about to cross. Wow, look at this move. 75.12. We're going to go down to 7,500. That was earlier. That was support earlier in the week.
A big source of revenue growth for the future. Yeah, I was struck by that number too, and that half of it
side of the business because that got a lot less attention, but it's important for the regional.
We got just a little bit more than 30 minutes to go. Short should cover at some point. Dealers are going to have to close positions. Hedge flows. Okay, this is one of those rare examples where we aren't bouncing or getting some profit taking here. Monetize, put monetization. Apple rolling over from the high. What does Citigroup do? Citigroup, I got crushed on Citigroup. I had bought some calls on Tuesday. That blew up. So yeah, that's not working. Citigroup, Goldman Sachs. Even Goldman Sachs got whacked, turned back down. JP Morgan, it's holding up the best. Morgan Stanley, Wells Fargo. Actually, Wells Fargo is holding up the best. It's up there near the highs and a spinning top. Doesn't look too bad. Wells Fargo. Okay, Wells Fargo looks good. Morgan Stanley, JP Morgan looks better than the other two. Goldman Sachs. Okay, so those don't look so hot. Citigroup. Thought we might bounce. Didn't work. Citigroup. Okay, let's take a look at some other things. Longer term, the markets move higher over time. Okay, so I haven't added to TRBCX. Haven't added to it. But I just want to take a look at it. TRBCX, where are you? Okay, TRBCX. We're still above the 10 EMA weekly. Okay. This has run up over almost 190% from when we bought it. We started getting into it at the end of the bear market. This is a long-term investment. This is in my long-term account, not the trading account. And I'd like to add something to that. I'd like to add SPYG, but I'm not going to do that right now. SPYG, it's pulling back to the 10 EMA. Maybe it bounces. I'd like to do this probably around August 15th, the window between August 15th and like September 15th, somewhere around there. I'll probably start a position. I do not have a position right now. Long term, and this is going to be more something I'm going to maybe gift shares to the kids. Or maybe just put some shares in their account. I don't know. I have to decide. But it's not. I want to see it pull back first, and then I can start a position. SPYG. You can see it's weak today. Like the S&P 500, if it gets down to this lower level, that's where I'll be watching to get an entry for a move back up. So, what do you think? It's a good thing we started taking some profits off in the first half of the day, right? Because the markets had that nice run up in the morning, gave you an opportunity to sell into strength. And here you go, markets rolling over. So taking profits off into strength this morning made a whole lot of sense. A lot of stocks did manage to move a bit higher. What's going on there? Taking profits off this morning in the morning session. Apple managed an evening session rally. Microsoft, same thing. Taking profits off on both of these into strength was a wise decision. Okay. Snowflake took some of that off. Netflix, I bought some Netflix shares earlier during the noon hour. We're right back to that level right now. I sold some iron condors for earnings. Looking forward to stay within 10%. I went out next week, next Friday. Best thing to do right now is, because we don't know if the market's going to move higher or lower out of this range that we're in. Okay, we don't know. Right now there's weakness. Seasonality wise, we got July on our side, but we're already started to see some of the rotation out of semiconductors. Those got whacked, like Micron. Tech is not doing that well. Oracle, wow, I can't believe Oracle's back to 124. Micron at the lows. Okay, even some of the industrials that were looking good. Caterpillar got some exposure to AI. That's gapping down, continues to move lower. Some of the retail trying to hold on. Casey's, Target, Walmart, Ross Stores. Did I say TJ Maxx? TJ Maxx, Dollar Tree, BJ's Wholesale. Oh, wow, that's looking pretty good. So retail doing all right. Some of the retail. Restaurants and bars, those were higher last week. Cheesecake is trying to stay up here. Okay, we mentioned that one on Monday. We're right back to where we were on Monday. Bloomin' Brands, BLMN, and DHI. No, DRI. I always get these backwards. Darden Restaurants. What's that? Olive Garden, a few other name brands. Eat, Brinker Corp. All of these look good. So there are pockets that are working. Tech is not one of them right now. Tech is down. Semiconductors are down. So if you have profits in any of these, of course we could bounce at this point because we're down a bit from the high. Let's see, semiconductors on the week. Okay, so on the week, that's 7% right there. So we got to be about, 15% from the highs? So we could find some support here. I don't see it yet, but we could find some support. I don't have much semiconductor exposure except for maybe NVIDIA. Okay, we're down 16%. 20% would be below 540. That would be bear market territory. Semiconductors. Okay, so software was getting a bounce. That's above the 10 EMA. So maybe this can see a little bit more rotation. We'll see this turn back up. XRT retail, we just talked about. That's up. Materials was down yesterday. It's down again today. Communications, that's Meta, Google, Netflix. Netflix, maybe that helps tonight. Netflix bouncing. Energy back up above the 10 EMA. So that looks pretty good. So if you're looking at stocks like Chevron, companies like Chevron, ConocoPhillips, ExxonMobil, these look okay to park some money. Well, or you could just stay in cash. That's a good idea too. Let's see what Ryan has to say.
So you're not seeing much to get in the way of this bull market, which I believe, according to your notes, is the 8th longest ever.
Well, that's right. Thanks, Leslie, for having me, and good afternoon, everybody. Just this week, we released our mid-year outlook. We called it Still Riding the Wave. Carson Group, we've been pretty bullish for a while now. There's a lot of ways we can tackle this, but maybe I'll answer what you just said. This is the 8th longest bull market since World War II. When you look at the other 7, okay, that so got to this point, the other 7, only one of them didn't make it to their 4th birthday. This bull market's about 3.5 years old. The average length.
To be clear, he's talking cyclical bull markets. Cyclical bull market happens inside of a secular bull market. We've been in a secular bull market since 2009. So I'm surprised he's not being more explaining this a little bit more. I like Ryan. He's good.
We like growth probably a tad more than value here, but it doesn't mean you want to go all in on either one.
Okay, so you got secular bull markets, which is what we're in right now. Secular, the long term. Cyclical bull markets happen inside of a secular bull market. So the secular bull market has us up over 1,000% since the March 2009 low. Okay, 16 years. But we've had secular bulls and cyclical bulls and cyclical bears inside of this secular bull market. 16 years. So this was 13 years over here. 1987 when I started trading. 86, technically 14 years. So 14 years up to the peak in 2000. We know what happened after that. We had a pretty big correction. Bear market. One after the other within 10 years. AI is doing something else, though. So either way, we're in a bull market.
As everyone knows, the consumer is 70% of the economy. You look at the last 5 quarters, AI is nearly half of all real GDP. That's fine, but we don't want it to be that much. We need the consumer to come back, low consumer confidence, the stronger labor market the second half of this year. That's just one more positive, another wave and reason to be bullish in our opinion.
Is that what is
Netflix just turned back down? Netflix.
Gap, or do you think it's been just around affordability and the recent inflation and more on the pricing side of things that has impacted sentiment?
Well, that's the ultimate question. I mean, there are different sentiment polls, yes, but most of them are near some of the lowest levels we've ever seen. You look at retail sales like today, and it wasn't spectacular, but the control group was still solid.
Yeah, retail sales wasn't as good as last time. Last time was 7%, 0.7%. This time was 0.3%. Something like that.
People say one thing, but they do another. Carson Group, we've said for 3 years now, we're following the hard data. We're not ignoring the soft data, but following the hard data continues to say the consumer is strong. And like you said before I joined, great conversation about banks. I mean, what all the bank CEOs say, hey, consumers are strong across the board.
All right, fear and greed index is neutral to extreme on the crypto side.
And then what they're showing too in terms of their metrics and credit quality is good and the like. What are your expectations for the rest of earnings season now that we're about a week through this quarter?
Well, it's been a good start, I think is one way to put it, right? With what the financials have said, I think at the start we were expecting maybe 23% year-over-year earnings growth. As ever. Anxious to see what a lot of the hyperscalers and large technology names say about the continued AI spending. But the reality is, like we talk a broad-based rally. What's a broad-based earnings rally? Yes, tech and energy are going to be a big part, but listen, 10 sectors we expect to have higher year-over-year earnings growth. So there's a lot of positive. Now, one more thing I do want to point out broadening market. Just yesterday, okay, the New York Stock Exchange advanced decline line hit an all-time high. The way I learned it a long time ago, market breadth leads price. We've seen this throughout history. There's a lot of stocks going up. Yes, technology hasn't done as well. We get it. Chip stocks coming back to earth. But under the surface, it's still a solid bull market in our opinion.
All right, Ryan, thank you so much. Appreciate your time and your perspective today.
Up next, we are tracking the biggest movers as we head into the close. Christina Partsinevelos is standing by with those. Christina.
Well, we have the IPO market maybe hitting a small speed bump. One new listing opens below its target range, while another recent debut really slides below its IPO price. I'll reveal the names after this break.
All right. We've got about 16 minutes to go. 16 minutes to go. Shorts haven't even covered today. That's pretty amazing. Shorts aren't even covering. We're at the low of the day. Broadcom just dropped off. Broadcom. Okay. Hopefully you're taking some profits off the table. That's what I was doing. I'm seeing a lot of stocks pulling back that I had much. If I had not sold higher, I would have been disappointed because I'd be taking less now. I'd be taking just flat position at this point. Some of these. Taking it off flat. I don't want to sit into it for a couple of weeks and then take it off flat. Snowflake pullback. So you can sense the turbidity in the market. People are getting very apprehensive. Netflix with earnings tonight. Okay. I sold the call side up here at the 80 near the 50 day. I don't think we make it past that. If we do, it'll probably fade in the next couple of days, trading days. 65. I don't see us getting down to 65. 65. Anyway, so I hope everyone's having a good day. I know that's probably not the case. Many of you probably did not heed the warning. Sell into strength. Maybe you didn't have a profit. You wanted to wait a little bit longer, see if you can get a profit out of it. Long as you have August or September, you're probably going to be okay. I don't see the markets pulling back, more than 5%. Brent sees 10%, potentially, to work off this core 1M that we have, core 1M. We still have 350 stocks advancing, which is crazy. Okay. So it's definitely out of tech into everything else. We saw what energy looked like. Okay, core 1M is back to 5 now, so that's a big improvement. The other interesting thing to see, check out MACD. Look at MACD on this monthly time frame. This is a monthly. Okay. MACD is making new highs. Stochastics hasn't rolled over.
Exchange debut just this morning. Shares opened at $20.90 below its targeted range of about 23 to 27.
S&P equal weight. Let's see what the XII is doing. XII, I haven't looked at that this week. Okay, so we got a red elder stick, first red elder stick in 3 trading days. It's very possible we could bounce back up. More than likely, we're going to pull back again. Lower high, lower low. $180,000 shares are short. Okay, RSP, equal weight index.
think it's going to report strong financial results over the next year.
Notice the number of stocks trading above the 20-day is rising.
Good point, Christina. Thank you. Up next, we're just moments away from Netflix's earnings. The setup in the market zone is next.
Da, 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 da. Okay, right there. Rising. Second red bar. 1, 2, 3, 4, 5.
We are now in the closing bell market zone. Mike Santoli and Ed Klizzle from Ned Davis Research are here to break down those crucial moments of the trading day. Plus, Oliver Rennick is standing by live from the CBO Global Markets in Chicago. Annika Kim Constantino is tracking the big move in UNH today, and Mackenzie Zagalos has one last look at Netflix ahead of earnings. Mike, we'll start with you. I see the Nasdaq losing a bit of steam, down about 1.7% now.
Yeah, and it does trigger the familiar impulse, Leslie, of the rest of the market trying to make up that difference and essentially try to offset that. You do have the majority of New York Stock Exchange listings are higher on the day. The equal weight S&P is positive. Value stocks are up. So I think a lot of folks, you might be tempted to say, oh, this is the classic just rotation that's occurring.
Yes, and Santoli is saying the same thing, so that makes me feel good. This guy's good. He's really good. All right, Tesla popping back up now. All right, S&P starting to climb with 7 minutes left to go. 7 minutes left to go.
does show you that there's some wear and tear on this pattern. We're 2 months in to a sideways market where the majority of stocks work, but a little bit too much slippage in the big caps today, I think, for comfort.
Yeah, rotation does appear to be the name of the game in this current market environment. Mike, thank you. Let's get to Oliver Rennick at SIBO in Chicago with your options action. Hey, Oliver.
Hey, Leslie, regional banks are the highlight winner of that rotation today as the KRE ETF notches a fresh all-time high ahead of earnings from companies like Truist and Fifth Third Bank tomorrow and more next week. Not so long ago, these were the dogs of their category. Regional banks, though, are now up almost 20% on the year compared to a 3% gain in the broader S&P 500 financials. Options traders are catching on. Volume in KRE today is 5 times the 30-day average, but small catch for bulls. More puts are trading than calls, and 2/3 of the total options premium is tied to puts. But at least as many puts are being sold as bought. And actually, among
Shorts covering. A little late. With 5 minutes left to go. A little late, huh?
Aren't ready to bet on more gains from the regionals, but it certainly looks like they don't want to bet against them either.
And either way, they're getting their day in the sun. Oliver, thank you. UNH is well off its session highs following earnings. Let's get to Annika Constantino with more on the quarter. Annika.
Hey, Leslie. The company's turnaround plan is starting to gain momentum here. UNH beat on the top and bottom line. It's the biggest earnings beat since the second quarter of 2020. And UNH also raised its profit guidance for the second time this year. So what we really saw today is proof that UNH is getting a better handle on high medical costs. That's an issue that has been plaguing the broader insurance industry. And so we saw a key measure of medical spending relative to premiums improve more than analysts expected, which helped drive some stronger profits for the quarter. And that's because the company has raised prices and adjusted plan benefits to better match rising medical costs.
All right, Apple moving back up.
Cutting efforts such as using AI to streamline operations. So the CFO told me that this is a multi-year turnaround plan, but the results today suggest that it's really starting to pay off here.
Yeah, early indications, Annika, thank you. We are just moments away from the Netflix earnings hitting the tape. Mackenzie, what are you watching for?
So, Leslie, Netflix shares are down more than 30% over the past 3 months and have fallen after each of the past 4
Not as bad as Oracle.
The core concern is engagement.
It's not as bad as Oracle, though.
Breakout hit this quarter. Its share of total TV viewing recently fell to the lowest level in more than a year. And analysts estimate that viewing per subscriber is slipping. And investors will also be watching churn after recent price increases and whether Netflix needs to spend more aggressively on content to keep viewers coming back. Now, we could see upside from its push on advertising, live TV, and sports, and potentially get some color on how the company is thinking about M&A going forward after the failed WBD bid. Netflix reportedly among those interested in potentially buying World Cup rights that could cost up to $2 billion per tournament. It's also testing live programming in France through its TF1 partnership.
Yeah, all about that content slate. Thanks, Mackenzie. Looking forward to that coverage next hour.
3 minutes to go. A little bit less than 3 minutes to go.
The biggest laggards in the NASDAQ today, which has been just declining throughout some of the session, is chip makers. Once again, Mike talked about rotation. How are you looking at today's market setup?
We can start this off looking at sentiment and where we've come over the last few months. Yeah, we have a couple of sentiment composites at Ned Davis Research. One that is very short-term oriented. That got to the optimistic zone early July. Our intermediate-term one looks at a few months. That's been optimistic for a little while. So, and then you throw in where we are on the earnings front, where last quarter was such a good quarter. How are we going to top that? And then furthermore, the semis had gotten to be 19% of the S&P 500. That's the most any industry group has been in the S&P going back to at least 1972. So you have this set up for the market likely to have a pause this summer, and the mega cap tech stocks having a big run. They'd probably be the ones to lead that. And that seems to be where we are at the moment. We'll see as earnings season continues to roll in.
Not much of a bounce. Got a little short covering there. That's about it.
What do you make of what you've seen with earnings?
Back to 75.20. 29, almost 75.30. Okay, so hedge flows, all of this is gone. All of this is done now. Let's see where Charm is positioned. Charm probably pins right in that little nook right there between purple and red. Probably pulls back a little bit. Either that or it runs back up here. That'd be funny. All right, Netflix with a nice bounce here, back to 74. 75, going for 74.25, 74.30. NVIDIA bouncing back up. Okay, 20 seconds to go, 20 seconds to go. Nice rally off the low.
I think that the fact that the market hasn't fallen apart tells me that this is likely not a major bull market peak. If you close something a consolidation correction period that can go on for several more weeks, I'd be more concerned if the Russell 2000 had severely underperformed over the past few weeks as an example.
And that's a wrap. All right, folks. I'm going to be here. I'm going to watch in the trading room, but I'm not going to be sitting there waiting for Netflix earnings. I got to cut it short. Have a great evening. Let's see where we go with this. Love to see Netflix up a bit higher. Have a great evening, folks. Take care. We'll see you tomorrow. Ciao. Good luck, Netflix.